commence public hearing of the House of Representatives Standing Committee on Economics for the inquiry into schemes, digital wallets and innovation in the payment sector being held here in Canberra. I begin by acknowledging the traditional custodians of the lands on which we meet today. I pay my respects to elders past and present, and also extend that respect to any Aboriginal and Torres Strait Islander peoples joining us today. I want to welcome all the witnesses appearing before the committee, as well as members of the public and the media in the room and those watching online. In accordance with the committee's resolution of 31 July 2025, the hearing will be broadcast on the Parliament's website, and the proof and official transcripts of the proceedings will be published on the website. I'd like to remind all present that, as Chair, I will ensure that proceedings are conducted in an orderly and respectful and courteous way. Those present are advised that filming and recording by the media is permitted during the hearing. However, we do ask that members of the media present or listening report the committee's proceedings fairly and accurately. Media present are also asked to conduct themselves in a way that doesn't interfere with proceedings and must not encroach on the committee's work area or film or photograph documents or devices of committee members, witnesses or others. So, with that, I'd like to welcome representatives of AusPayNet and FinTech Australia to give evidence. For the Hansard record, please state your full names and the capacity in which you appear before the committee, starting with AusPayNet.
Good morning. My name's Andy White. I'm the Chief Executive Officer of Australian Payments Network, also known as AusPayNet.
Good morning. I am Rehan De Almeida, the CEO of FinTech Australia.
Good morning. My name is Jack Morgan. I'm the Head of Policy at FinTech Australia.
Great. Thank you. Before we proceed, I should advise you that although the committee does not require you to give evidence under oath, this hearing is a legal proceeding of the Parliament and therefore has the same standing as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as a contempt of Parliament. The evidence given today will be recorded by Hansard and does attract parliamentary privilege. I now invite each of the witnesses to make an opening statement if they wish before we proceed to questions. Who wants to go for AusPayNet?
Happy to. Thank you, Chair, and good morning to you, Deputy Chair and members of the committee. So AusPayNet is the industry association and self-regulatory body for payments in Australia. Our role is to develop and manage standards and guidelines and large-scale collaborative transformation programs with the purpose of confidence in payments for all Australians. We currently have more than 160 members, including financial institutions, payment system operators, retailers, fintechs and payment service providers or PSPs. In the context of the breadth of our membership, AusPayNet's role is not to advocate for particular commercial outcomes, but to support informed decision-making by explaining how the payment system operates in practice. We welcome the committee's inquiry and the government's ongoing focus on the payments landscape. As you said yesterday, Chair, payments are essential economic infrastructure. They underpin everyday activity for households, businesses and government, and they're increasingly digital, interconnected and complex. Australia leads the way in many aspects of payments, for example in government's strategic plan for payments, in the development of its cross-sectoral scams prevention framework and in the innovation many of its participants bring to the Australian market. As we consider future-proofing Australian payments, there are three system-level issues that we believe are important for policymakers to weigh. First, coherence and consistency in the regulatory framework. As new payment products, service providers and technologies emerge, it becomes increasingly important to ensure that regulation is applied in a way that is consistent and engenders trust. Two examples which are in flight are the establishment of a licensing framework for payment service providers, which will protect consumers and support innovation, and the cross-sectoral scams prevention framework I mentioned earlier, which will include digital platforms and telcos. That's critical to stopping scams at source, given the UK data which shows that 83% of scam losses are enabled by those industries. Secondly, flexibility in regulation is critical. Payments innovation moves quickly and legislation and regulation may not. Achieving the right balance between legislation, regulation and industry-led technical standards is an important part of maintaining flexibility while still protecting consumers and supporting innovation and trust. Third, policy settings on payments economics need to be holistic across all payment types and taking account of benefits as well as costs. An example is the amendments to the Payment Systems Regulation Act, which passed in September last year and meant that the current RBA review focused on card payments in isolation and could not consider areas such as digital wallets and buy now, pay later. We appreciate the committee's interest in these issues, and I'd be pleased to assist you in answering your questions. Thank you again.
Thank you. FinTech Australia.
Thank you, Chair and members of the committee. Thank you for the opportunity to appear today. My name is Rehan de Almeida. As I mentioned, I'm appearing alongside Jack, our Head of Policy. FinTech Australia is the peak industry body representing Australia's financial technology sector. Our members include card issuers, acquirers, account-to-account providers, non-bank lenders, and emerging innovators operating across the payments ecosystem. Payments in Australia is undergoing a structural transition. Over the past decade, technology has fundamentally changed how Australians pay, how businesses accept payments, and where competition occurs, increasingly at the interface layer through digital wallets, embedded finance, and account-to-account solutions. This inquiry comes at an important moment because the sector is already entering a significant period of reform. Over the next few years, an extensive list of changes is being designed and implemented, including payments service provider licensing, digital asset regulation, Reserve Bank card and other payments reforms, scams prevention framework measures, AML and CTF updates, and continued development of real-time payments infrastructure. Taken together, this represents one of the most substantial periods of policy change the payment system has experienced. Our central message is therefore about sequencing. Careful coordination of these reforms is critical to minimize disruption and provide the certainty industry needs to invest and innovate. Poorly sequenced reforms risk duplication, regulatory complexity, and unintended barriers to competition, particularly for newer entrants. From an efficiency perspective, the system is functioning at relatively low cost by international standards, but we can do better, and this is something our members are committed to delivering. However, we want to add a note of caution that adding major new policy reforms at this juncture, where so much is already underway, risks complicating delivery and undermining the confidence which payments firms need before they can invest in continuing to revolutionize payments. FinTech Australia's submission makes 3 key points. First, competition should be supported through open and proportionate access to payments infrastructure, including the new payments platform. Second, regulatory neutrality is essential. Similar activities presenting similar risks should be regulated consistently regardless of business model. And third, payments policy should support long-term innovation and productivity by providing clear, stable, and coordinated settings. Australia has a strong foundation. With proportionate and well-sequenced reform, we have an opportunity to remain a global leader in payments innovation while maintaining the safety and resilience Australians expect. We welcome the committee's work and look forward to your questions. Thank you.
Good on you. Thank you for that. Okay, I'll hand over to the Deputy Chair and then to Mr Laxal.
Hi there, can you hear me okay?
Perfect.
Okay, great. Thank you very much, guys. Look, just some questions, I'll put them to both of you. On competition and market structure, do you consider Australia's payment system competitive? How do you see that landscape with incumbents and challenger players?
I might start there. Thank you, Deputy Chair. So I think I would agree with Rehan's opening remarks that the Australian payments market is pretty competitive. I think you've seen significant innovation over many years now, and a lot of that has been from new players. So a couple of examples there would be in the acquiring market, so merchants, service providers. I think you've seen significant competition there, and that comes from both the incumbents but also new and often international players, as well as more targeted fintech or paytechs that are targeting that space. And the second one is competition between payment rails, and I think you saw some of this yesterday with the development of the new payments platform, with the fact that we have a domestic debit card scheme here. The environment is quite different to other markets. So I'd point to, for example, the UK and Europe, that neither of which has both of those things, and therefore naturally that does engender some competition.
Okay, thank you. have scheme fees and wallet charges increased or decreased total merchant acceptance costs over the past 5 years, and can you talk about why?
So I might start again, welcome Rehan to pitch in on this. I think there was a fair bit of coverage of this yesterday. If I take a longer term view over the last couple of decades, I think what you see is merchant service fees have reduced over time, and they're definitely comparable or better internationally. So although they're higher in some cases than some European countries, for example, they're around half of that in the US, which obviously is a significantly larger market. That said,
Sorry,
and it's,
are you saying, sorry, I just need to clarify, I may not have heard correctly. Are you saying our merchant service fees are half of those of what's in the US?
yeah, around half of those in the US. So, which is obviously a significantly larger market. So they're pretty comparable internationally, I would say.
I just wanted to.
Sorry, Deputy Chair. I just wanted to clarify that on.
Yeah, no, absolutely.
I just wanted to add to that, based on research by Mandala that we conducted early last year, one of the reasons for the drop in the costs for merchants has been because of new entrants entering into the market. Specifically, a larger number of payments players entering into the market has put pressure on the overall costs, and this competition and choice has enabled and reduced the prices further in Australia.
Just a question on rebate schemes. Are there rebate arrangements between the schemes and the major issuers? And how's that affecting smaller players?
Yep, good question.
So it is a really good question. Our role as the industry body for payments is not to get into commercial arrangements between our members, obviously. That said, I think, and again, there was some good conversation on this yesterday, it's quite clear that there is different pricing out there for large-scale merchants compared to smaller merchants. In and of itself, I would say that's not unusual. You see that in multiple industries in terms of volume-based pricing. But that said, I think it is an area that industry is cognizant of, and that's where they're looking to compete, in part through the role of new players, really targeting those small businesses and the value proposition for them. Sorry.
Yeah, go ahead.
So my only other point there would be, and I think this again got a little bit of coverage yesterday, is I think it's important, and this was in my opening remarks, to think about these things holistically, completely understand the focus in on cost, particularly for small business and consumers, and particularly in the current economic environment. But it is clear that some merchants are choosing higher cost propositions because they see higher value in those propositions. And that's because sometimes the providers are not just providing payment services, they might be, for example, managing inventory or other back office areas for those merchants, and sometimes extending to provision of credit, for example.
What do you mean by higher value? Like, can you give us an example?
Yeah,
Sorry.
so
Simon,
if I'm a small...
No worries.
If I'm a small merchant chair and effectively my point of sale terminal does more than just process payments, it actually analyses my inventory, and when I need to up that inventory, it arranges credit for me, it looks at my cash flow and thinks about how I can better manage that. It's those kind of value add services.
Thanks, Deputy Chair.
No worries at all. Maybe just quickly on that one, I'll ask two questions. Do you think there's a role for government in this space on, these rebate schemes and regulation? And then maybe if you can go on and talk about market power shift and dynamics from banks and schemes towards global technology platforms, Apple and Google and others. And apologies, I haven't caught up on yesterday yet. So I apologise if I'm getting some stuff repeated from yesterday. I missed yesterday because I had prior commitment.
All good. Are you happy if I start off?
I think we can.
Yeah, so we definitely think there's a role for government here, Deputy Chair, and I think government is playing that role, and in a way actually that you're not seeing in some other jurisdictions. So I mentioned in my opening remarks the strategic plan for payments. We think that's really important in stating government's policy objectives for the payment space. And we think that kickstarts the work of what I'll call the tiered model. So there's a role for government and legislation, there's a role for regulation, And then we think with some natural bias, given what we do, that there's a role for technical standards in this space. And we think the three can really help in setting out regulation for providers. The reason that we think that, and to sort of get to some of your questions, is that the regulatory settings that we have today, to some extent, still date back to the late 90s. Some of that has been addressed with the update to the Payment System Regulation Act, which enables the RBA to look at areas like digital wallets and buy now, pay later, payment gateways, those sorts of things. That's really helpful. We think, as both Rayhan and myself mentioned in our opening remarks, we think the PSP licensing, payment service provider licensing work that is also underway is really important, because that creates a level playing field where if I'm a consumer and I'm using a payment product, I know the provider of that payment product is regulated and licensed in some way. That doesn't exist today. And we also think it supports innovation, because some of those payment providers may not be getting the best from the wider ecosystem because they're unlicensed, and therefore others can't deal with them. And then the final example I would give is the scams prevention framework. We think that's really important because it brings the digital platform, so really big tech, into play, and that unfortunately is where most Australians are socially engineered to then be scammed. So it's really important that we bring those digital platforms into the ecosystem and impose regulatory obligations on them as well.
Just a question on fees.
Sorry, Deputy Chair, you may not have, I think FinTech Australia wanted to add something to this.
Okay, apologies. Thanks,
Chair.
okay.
Oh, we were just also going to comment, Chair and Deputy Chair, that of course payments are already very complicated, and government does have a role in various areas of the system, but it is an uneven role. As the committee heard yesterday, for instance, there are very competitive caps already on interchange fees, but there aren't similar caps for other components of merchant services fees, which can have implications when, for instance, the RBA, as is presently underway, launches a consultation on potential reductions to interchange fees, but not necessarily commensurate decreases to other types of fees, and that can have system-wide implications.
Back to you, Deputy Chair.
Great. Do I still have time, Chair?
Yeah, I think, because you weren't able to make it yesterday, I thought if you wanted to sort of go for another 3 minutes or so, and then I'll hand over to Mr Laxale.
Great. Should scheme fees be subject to mandatory disclosure requirements equivalent to interchange caps?
So we are very big supporters of transparency, and I think you heard that. And sorry, Deputy Chair, I'm conscious you may not have done, but you heard that pretty consistently yesterday in terms of support for and willingness for transparency. And we're very happy to help play a role in that as the industry body. I think the only counsel I would give is to be careful in terms of the actual outcomes that transparency might bring. This is back to this point about economics being understood holistically. I think when we talk about transparency of fees, to the point just made, it needs to be fees across the board, including other payment products and types, rather than just focusing in on cards. And I think, as I said earlier, it's pretty clear that some merchants, for example, are making decisions, or consumers are making decisions on factors other than cost. So we need to think about how we give transparency to the service level or value that individual actors are getting from for that cost, for that fee.
And we would add to that. Oh, sorry, Deputy Chair. We would also just quickly add that FinTech Australia members are also highly supportive of greater transparency in relation to scheme fees. But given the complexity of the area, we also consider that mere transparency in itself isn't necessarily enough, given the significant volume of scheme fees which are levied by some schemes. And so many of our members are also supportive of some sort of simplification of the current full spectrum of scheme fees.
Do you want to fire in one last question, Deputy Chair, and then I'll hand it over to Mr Laxale?
Sounds good. Look, I've heard that there's a sense small businesses are subsidising premium rewards programs through current pricing structures. Feel free to comment on that. But my broad question is, what reform would most reduce merchant costs and improve competition that we could do?
So I would go back to the PSP licensing regime. I think that provides a real opportunity to support innovation. It's really interesting. A lot of people would have the view of licensing and regulation as adding red tape. That's certainly not what we hear from our payment service provider community. I'd even extend that to, for example, digital asset exchanges. I think there is actually a demand to be licensed because people see it as a way of benefiting from the wider ecosystem if they are licensed. And I think interestingly as well, within that licensing regime, you get to things like common access requirements. So one of the points about, how can any institution, whether they're a bank or a PSP, have access to payment systems, we'll get to that through PSP licensing. So that would be the one that I would really emphasise.
One point I would like to also add is just enabling and supporting innovation and competition in the sector comes through new and early stage fintechs in the market, and they would find it extremely difficult to compete in a market where interchange caps really do not enable them and support them to grow and scale because their funding structure will be purely based on interchange, perhaps. So on that note, in some form, exploring a small issuer exemption to interchange cap for these smaller issuers and for smaller early stage fintechs can continue to support innovation in that space and continue to support and enable new products, new innovations that happen in the space. And Jack could probably also list some of the innovations that has come in.
Do you want to take it on notice and provide that? Sorry, I just want to move it on.
Will do, thank you.
We had a terrible run yesterday of running over time. So. Thanks, Deputy Chair. Mr Laxale.
Thanks, Chair. Mr White, do you think it's appropriate that consumers pay a higher surcharge to fund merchant software preferences?
Thanks, Mr Laxale. So on surcharging, we have a range of views across our membership, but it's fair to say that the majority of those members land with the RBA's current proposal, which is to get rid of surcharging not just on debit but on credit as well. Okay. So we're supportive of that.
Because you mentioned that some merchants would choose higher cost services, so your members don't think it's appropriate that consumers fund those choices through a surcharge?
Correct. The majority of our members would agree with the ban on surcharging across all card types.
Thank you.
Because on that point, sorry, I just meant to say, like if they're going for a software, that's something that they can deal with in terms of their tax arrangements, right? It's capex, so.
That's correct. I mean, ultimately, there might be an impact on consumers because the merchant might view it as a business input cost. But I think we would see that as akin to any other business input cost. It could be capex, it might not be, but it goes into the price of the product. If not.
Some PSPs offer frequent flyer points in exchange for a higher surcharge. So, it's good that your members don't see that as appropriate. I just got some questions about the NPP, primarily because I think it's probably one of the technologies that can disrupt consumer payments that's sort of mature. And a few questions about BECS, that's okay. I see that there's an increased requirement for sanction screening with anti-money laundering and counter-terrorism funding rules, with the next lot coming in on the 1st of July 2026. Will BECS support and meet these new requirements?
So BECS currently has an arrangement where it doesn't need to abide by those rules. That's agreed with Austrac, so it has a waiver from those rules.
Temporary waiver, or
it's not a temporary waiver, right. But our view would be that over time. So what we're talking about here, just to be clear, is cross-border payments that have come in, and it's the last leg of those cross-border payments that then need to be AML, CTF, sanction screened. NPP has a product called the International Payment Service. We would expect those last legs of those payments to move to the NPP, which then can provide that kind of AML CCF sanction screening, because NPP has a richer data capability than BECS. Now, one of the things that we're considering, and you may come on to this with your questions on BECS, is the future of BECS. How long is it maintained for? And so one of the questions there, if we don't see that migration of those last legs, is would it need to be upgraded?
So, I mean, if you don't see it, so there's no sort of 12 months deadline for that last leg. You've just got an exemption on counter-terrorism funding. Correct.
There's no mandate for those last legs to be moved. We just think there's a natural incentive for them to be moved. We see it as for the market to determine when they want to migrate those transactions, and naturally there's an incentive to meet those requirements.
So, sorry, just what would the incentive to move that last leg over if they've got an exemption from the regulations? What's the incentive?
So the institutions that would be using BECS and MPP to process those cross-border transactions would naturally want to do the right thing in that space, because ultimately, they face the risk of regulatory action if they don't, and therefore there's capability within that International Payment Services MPP to process those transactions.
But if then exempt, what's the regulatory action? Like if BECS is exempt, what incentive do they have to get off BECS?
So I guess at some point the question there becomes when does that waiver end? It doesn't have an end date on it yet, but at some point, logically, because there's capability in another payment stream, that waiver might cease to be.
And so why wasn't there an end date on the waiver that you've achieved? Did you push back? Was there an end date that you asked to be removed?
No, and the waiver pre-existed MPP being built. So it's sort of a historic recognition of BECS' limited capability to do that kind of
So BECS
processing.
Isn't fit for purpose for sort of this counter-terrorism funding, anti-money laundering requirements?
That's correct. Over time, it ceases to be a relevant payment system for processing those.
And AUSTRAC deal with that waiver, do they?
Correct.
So it's on them to put a deadline on it.
Correct.
Okay. I've got another question here for does AusPayNet, from my top question there, does AusPayNet see the NPP as having potential to disrupt consumer payments in Australia?
So I think overall, yes. Headline answer would be yes. We certainly. So we're working very closely with AP Plus, who you heard from yesterday, RBA and Treasury under a ACCC authorisation to think about the future of account-to-account payments. And over time, we see those account-to-account payments, including what we just discussed, migrating to NPP. And we're working with a whole range of stakeholders to look at that in terms of the vision and roadmap for that. Why did you
remove the target date then?
Because what we heard from end users and our members was that target date wasn't achievable, and so what we need here is a real vision and roadmap to determine what is achievable and by when, and that's
why wasn't it achievable?
So we heard from multiple end users, including, for example, government departments, corporates, that for the processing of key payments like payroll, for example, welfare payments, that actually BECS was suitable for those use cases, and that there might be significant transition cost in moving those to NPP as things currently stand. So I think we need that clearer vision and roadmap.
So Services Australia used the NPP for COVID payments. That seemed to work well, didn't it?
Yeah, we deal with a range of government departments, and I think it works well for some payments, but the piece that is currently lacking in MPP functionality is the ability to process large-scale bulk payments, and that's what BECS does really well. BECS currently processes around 3.5 billion payments a year, $17 trillion worth of payments.
You're not saying services. I mean, they're the biggie here, right? Like, you're not saying that they're still holding up the transition, because if they've been able to do it through COVID, why wouldn't they do it now?
So I wouldn't understand their capability in detail, but my understanding would be that they could process some payments through COVID, but not all of their payment capability. And the context there is those numbers that I've just cited are 90% of account-to-account payments. So we're talking about moving the majority of account-to-account payments, significant majority. So there's a need to sort of have a closer look at what our members can do, the financial institutions can do, and PSPs, and then what end users can do and when. So we'll come back to that question around what an appropriate end date might look like in due course.
Why are small banks not taking up the MPP?
This probably is a question for AP Plus, who I know you saw yesterday. It might be a good follow-up question for them. But my understanding would be that actually the majority of smaller institutions are taking up MPP. So they may not be direct participants in MPP, but they'd often go through some of the payment aggregators to access MPP. So for example, the account reach of MPP is around about 90% of accounts, so it suggests that the majority of financial institutions are. Can I just circle back to your starting point, which was, is it competitive with other payment rails in Australia? I think it's a really good question. Again, you heard some of this yesterday. It is providing competition in the online space, and I think Adrian Loveney described it well yesterday in terms of that's where consumers have more time to make choice as to their payment method. I think this is not unique to NPP. You see this globally with faster payment systems. It is quite hard for them to compete at point of sale, and particularly in Australia where we're so used to tap and go. The question is, how do they get into that space?
Yeah, it'd be great to understand the roadblocks to that. So just back to uptake of the MPP, because I think once it's kind of ubiquitous, it makes it a much more cost-effective option, right? And for people like FinTech Australia and your members to tap into that technology and disrupt this duopoly that we believe exists, but they don't believe that they're a part of. So 90% of banks are taking it up, and you're saying the biggest holdout on sort of are government agencies migrating to the MPP?
Well, I might just sort of correct those points. So the 90% number is around account reach. So that's 90% of Australian accounts are reachable currently by NPP,
okay,
and actually AP Plus has a plan for how to access the other 10%.
Sure.
So that is pretty decent reach. In terms of the point about government agencies, I'm not sure that that's actually inextricably linked to competition with, for example, card schemes, because you're talking about quite different types of payments.
Understood,
there.
but like if you've got government sending signal that we're using this technology, then at that scale, which we heard yesterday from like the likes of Visa and MasterCard, scale makes a difference.
Absolutely.
If most transactions are through those rails, then it kind of builds the infrastructure around it, security, the familiarity of them a little bit better, doesn't it?
Could completely agree, and I think that's back to an earlier question. That's where government can again show real leadership. To your point, and we're in a different payment environment. We're seeing that today. We're seeing that with cheques, for example. Government leading the way in terms of moving off cheques, and there was money in the last budget to enable departments to do that. So I think that is comparable in terms of then demonstrating leadership within the account-to-account space.
So,
as well.
Last question. BEC's less secure in terms of anti-money laundering, counter-terrorism, not being able to meet those requirements. There's costs to transition to MPP. You've just removed the deadline or the target range. What's going to incentivise the transition?
So just one quick point there on the security. That is a very limited use case around those last legs of international payments. I don't want it to be seen as a security failing of BECS more generally.
Counter-terrorism and anti-money laundering are pretty important.
I don't disagree.
Yeah, sure.
I don't disagree. It's just that's obviously not the vast bulk of the payments that BECS processes. I think in terms of what provides that incentive, so the work that we're doing with RBA, Treasury and AP Plus is around that formation of the vision and roadmap this year, and an in-principle agreement for how that roadmap could be achieved. and that will then provide clarity to both end users, so for example government departments but also corporates, and financial institutions and PSPs, who can then make their own decision about when to transition to MPP.
So you won't have an end date in your roadmap?
An end date might be something that we come back to. As we stand here today, we need to do that work to determine whether an end date is helpful or not.
Okay, Ms Situ, over to you.
Thanks very much, Chair. I really wanted to focus in on the protections that are provided to consumers as well as small businesses. So wanted to get a richer understanding of some of the industry practices that are in place at the moment for that protection, and whether or not that's industry-wide, how much of that is driven by regulation, how much of that is driven by the industry itself.
I could go for Thank you, Ms. Situ. There definitely is a coming together of the whole ecosystem when it comes to supporting consumers and businesses and protecting them through their transaction flows. So, of course, something like chargebacks has been a great way to support both consumers and businesses when a transaction does not go according to, the service that they've required. The way we see it right now, the rails and schemes are really established, but the real competition layer is coming on top of that over digital wallets and over the NFC chip and the software layer. And that's where we see new value that can be unlocked from the industry that fintechs are definitely participating in.
And we would add to that as well, Ms. Sidhu, that additional protections exist in the forms of things like ASIC's e-payments code and the government's recent scams prevention framework. But given, as my colleague Rehan touched on earlier, payments regulation is in such a state of flux with so much changing, the government has flagged there will be changes to the e-payments code, and I believe ASIC acknowledged in its submission to this committee that changes are needed, but it makes sense to delay a little to wait for things like the PSP licensing regime to be in place before some of those protections are finalised. And given we also have this new scams prevention framework, there are, for instance, areas of the e-payments code which should really be revisited to make sure that there aren't contradictions between the e-payments code and the scams prevention framework. And for instance, the banking sector is now in the process of having of participating in a government consultation about the likely contents of that sector's scams prevention code.
I might just add a couple of points on that, if I may. So on the scams prevention framework, as I said earlier, we see that as being really important. And I think to your question, Mr. Tu, I think particularly important to get the dispute resolution mechanisms right in that for consumers, so that they're easy to use for them, given that the thinking behind the scams prevention framework, which is spot on in terms of it being cross-sectoral, including the digital platforms and the telcos as well as the banks. That, though, does add a layer of complexity in terms of how dispute resolution works across those sectors, so we need to absolutely get that right. On the payments code, our understanding is that will be part of phase 2 of the PSP licensing work, so that should, to Jack's point, help coordinate that. And then just a last point, additionally, in terms of an example of what industry has done. So we run a framework which seeks to mitigate card not present fraud. So that's where you use your card in an online environment. That's had some significant success. So it together with the work of the payments participants has reduced card not present fraud to around 75 cents per $1,000 spent, and that's an all-time low. We do, though, recognise that Australians don't get the same protection when they use their card overseas, and so that's a piece of work that we're doing with industry. It's obviously more complex because you're talking about foreign jurisdictions but we believe there are things that we can do to solve for that as well.
I'm just wanted to bring up the scams prevention framework, considering this is something that will cover, and am I right in thinking that it's going to cover the entirety of the payment environment?
So I would phrase it slightly different in terms of it will cover the scam's life cycle. So the way it sort of thinks about it is that if I'm a consumer, I could be socially engineered on a digital platform or through SMS or phone call, so that by the time I'm making the payment, I actually believe that I'm paying the right person. So, dealing with it from a payment perspective is too late. So we need to think about the whole of the life cycle. So it brings in those digital platforms and telcos for that reason. We do, though, think it potentially has gaps which will hopefully be addressed in a later phase. So the idea is that government will be able to designate sectors under the scams prevention framework. It's starting with those 3 sectors. But, for example, non-bank payment service providers would be an obvious area to go. Otherwise, the risk is that scammers simply move to them. And also, and this sort of sounds sort of retrograde, but we need to think about email as well as SMS and call, because otherwise scammers will naturally go to points of weakness. So to get that whole life cycle, there's a bit more work to be done.
Okay, yeah, so I take your point about it being the life cycle, and that was very much squarely the focus of it. But within the payment environment, you're saying that there are gaps there, primarily around non-bank service providers. Is that correct?
That's correct, which could extend into, so historically we've seen up to 50% of scam losses off-boarded through crypto. So, for example, if you don't deal with digital currency exchanges, again, that's a gap.
I've just got 2 more questions. One was around newer entrants coming in. So we had ASIC on yesterday, and they were talking about the sandbox environment that they have available. Is that something that is being embraced by the newer entrants? And are there any suggested changes around that? And in your response, if you might also give consideration to how we don't jeopardise a lot of the security features that are there and entrenched within the industry as newer entrants come in.
Thank you, Mr. Tu. I can take that. We are actively working with Treasury, ASIC, and Maha, who's leading the review for the sandbox overall. It is definitely not being utilized to the level we would like it to be utilized, and there are multiple reasons for that. One of that is with number of fintechs seeing it as a hurdle and a pathway that will slow them down to access a full license instead of the sandbox enabling them to get a full AFS license. So there are definitely ways we see the sandbox can be improved and increase participation overall. In one of the discussions, we've also spoken about the exploration of pilots and bringing in multiple stakeholders together. So, for example, your crypto example or digital, romance scams, for example, bringing in participants and technology players within those sectors and coming together within the sandbox to build solutions and address this proactively from the industry would be encouraged. But the sandbox doesn't enable that at its current state.
And I would also
just... I've just got... Oh, sorry.
I'd also just add to that, Ms. Sidhu, that it's our understanding from ASIC's evidence, I think yesterday, that of the 17 approved sandbox participants in the past, just from a consumer protection lens, no consumer protection issues have arisen to date with infringements of legislative and other protections.
Yeah, no, that's great. I've got one final question, Chair, if I may. We heard from Apple yesterday about their enabling competitors to come on their phones in direct competition to Apple Pay and their digital wallets. I just wanted to get a sense from you, from your membership, whether or not they were taking up that offer and how easy or difficult they were finding it.
I would like to take that on notice. We can definitely explore and check that with some of our members. I don't know if you have specific insights.
I think, Mr. Tu, you heard from some of our members yesterday that they're not seeing that as necessarily a solution to the issue. I think more generally, this is where I think the RBA review in the second half of this year, so as it moves beyond cards, I think it can be really helpful in looking at that digital wallet space, because again, as I think you heard yesterday, there's some real technical aspects to this in terms of which bit of the phone are you able to access, and what does that mean in terms of security and also the benefit that you're able to give to your customers. So I think it being part of that review is really important. And more than that, the extension of the Payment System Regulation Act enables the RBA to consider digital wallets on a similar basis to other participants in the payment system, which is really important.
So I just wanted to thanks Ms. Situ. I just wanted to jump in on a question that Ms. Situ asked you. Fintech. What's become clear is we need more competition, and we really need Fintech Australia and its members to succeed. I've been watching this sandbox for 6 years now. I think 19 have gone through and one's got an AFSL. That's a cracking success rate. And it doesn't matter which. This is a problem with the Libs or this is a problem with Labor. I just think this is not working. It's just sandbox is not working. The only change that's been made is it's now called an enhanced regulatory sandbox. So please tell me, I know you have to be diplomatic, but I constantly fail in diplomacy. I mean, what do we need to do to make it actually work? What are the biggest barriers? And do you need more regulators involved, or do we just have to scrap it and restart it? Because it's just not worked in 6 years.
Thank you, Chair. We agree on those statements. There's definitely scope for the sandbox to be really this innovative approach to enabling innovation and encouraging new industry to come together. The way it's set up right now, I believe the value was built around purely new innovation and new players coming into the space. But there is this larger scope where existing players could also access the sandbox. International fintechs could also access the sandbox as a starting point, but not slow them down to get a full license and to engage with the regulators in the future. So when talking to legal partners as well, their advice to fintechs that are exploring the sandbox, their advice is don't touch it. It'll slow you down.
Yeah, I mean, I get why they would say that. That's a rational point. But if they're issuing that advice, that's really bad. And my understanding is the Singaporeans, could be scratchy on the memory, but the Singaporeans version, they're pumping through that sandbox and it's been really successful. I don't know why we can't mirror it. There may be good reasons, but have you been able to explore, for example, the differences between what the Singaporeans are doing and what we are?
Well, Chair, we would say that the independent reviewer that the government has commissioned of the ERS is Maha El Damaki from Singapore, or at least she's based in Singapore, and she has a significant background in this area, also having worked for the UK's FCA, and based on our engagements to date with Maha, we think the review appears to be going very well and to be surfacing a number of ideas for improvement. Rehan touched on a really important one earlier in relation to licensing. So most of these really successful sandboxes internationally incorporate the sandbox into the licence application process for a credit licence or for their equivalent of an AFSL, whereas in Australia you can enter the sandbox or try to enter the sandbox if you like, but that's over and above the process which you have to navigate to get an AFSL or a credit licence. So it really changes the nature of the value proposition, especially when the criteria for actually getting sign-off to participate in the sandbox are as narrow as they are. And even if you successfully get into the sandbox, you're subject to some very narrow constraints in terms of what you can and cannot do. There are, for instance, I'd have to tell you on notice the
can you do it
precise
on notice?
levels.
Just because I'm conscious I'm chewing into Ms Campbell's time, but I've got some questions on notice and I'll put them in. You can then take the opportunity to furnish us with some more info, if that's okay.
Certainly.
Over to you. Thank you for your patience, Ms Campbell.
Oh, no worries. Thank you, Chair, and thank you very much all for coming to give evidence today. You've said earlier in evidence that merchant fees have declined over the past decade. Can you tell us whether that decline has been proportionately the same for big business as for small business?
So I might take that on notice. There is publicly available from data from the RBA that shows that. So I'm happy to furnish the committee with that information.
That would be good. But you don't have an idea as to whether, you might not have exact figures, but, has that decline been greater for bigger business or?
Afraid not.
Yeah.
From the study that we have conducted early last year, the Mandala report, and we can take it on notice and share that with you, we looked across sole traders, small businesses and medium-scale businesses. So there's definitely been downward pressure and reduced costs for them.
But you don't have an idea as to the proportionality?
I don't have it right now, but we have the information, so we can share that with you.
Thank you very much. I was going to go to something in the FinTech submission, which talks about the fact that there are a lot of new players entering the market, but there are some challenges with access to payment rails and with the limited number of operating systems and mobile phones. Can you take us through that a little bit, please?
Certainly, Ms Campbell. One item of particular interest to many fintechs is access to the NPP. At this point in time, most fintechs who access the NPP need to do so through an intermediary, typically a bank, simply because there are some very high standards which need to be met before a fintech is eligible to participate. We can, on notice, provide you some of the details there. But for instance, there's a requirement to hold a licence as a authorised deposit-taking institution. So you almost have to be a bank to access the rails at present. That's highly problematic for many fintechs, given they don't accept deposits anyway. So it's a very high threshold to have to meet from a regulatory perspective, and you need to achieve a certain level of scale in order to be able to navigate that regulatory process. There's similarly a requirement to hold an exchange settlement account with the RBA, which again is quite an unusual thing to do if you are not a bank. So those are two examples of barriers to NPP access which are impeding fintechs from getting access to the NPP, the key future account-to-account payment rail, which our members overwhelmingly want access to.
Is it right to say that we've talked a lot about the complexity of the system in the last day and this morning as well? Is it right to say that a lack of competition in one area of the payment system has an impact on the other areas of the payment system?
It can have a systemic impact. I'm not speaking here specifically to the NPP. I think that observation has broader applicability.
And for AusPayNet, is competition only as strong as the weakest link in the supply chain of the payment system?
I think it's a really interesting question, that. I think Rehan phrased it quite well in his opening remarks, that when you compare Australia globally, you could argue that it's actually quite a competitive, thriving payments industry. And I gave a couple of examples earlier in terms of the merchant acquiring space and competition between rails, because we have a domestic debit scheme and we have a modern real-time payment rail, which other countries don't, and therefore they face into even more competitive issues. But I agree with him that we can do better, and I think some of the areas that we've discussed around PSP licensing, which will enable, I think the future for whatever the sandbox might look like would be better with the PSP licensing regime in place, because it's clearer to me as an innovator what licence I specifically need, rather than this kind of broad brush AFSL that doesn't really fit. So I think we can do that better. I think the other part of that PSP licensing regime and the scams prevention framework is that you're bringing more of the payments ecosystem in on the same basis, and that has to be a good thing for competition, innovation, but it also has to be a good thing for consumer protection as well.
Which segment of the payment system do you think is the least competitive?
So I wouldn't necessarily use the phrase least competitive, but I think we do have an issue with that.
Let me rephrase. Which segment of the payment system do you think has the least players?
Again, I'm not sure. I would reframe that to say that the issue here is that we have elements of the payment system that are not incorporated within regulation or licensing, and therefore, potentially.
So with the new legislation with digital assets, with the new legislation with expanding the payments, regulatory system, that doesn't become, that sort of comes out of the way.
And the scams prevention framework, that's right, that you're bringing everybody in on the same basis.
So I guess in that context, when now that's, that legislation has gone through the Parliament, which segment of the payment system do you think has the least players? We suspect it's not fintech because, it's sort of hundreds and hundreds of people, but yeah.
Yeah, and again, I wouldn't, I just don't think of it in that way, because I don't think it's banking either, for example. I think, some of the areas that you touched on yesterday are quite interesting, and that's why I go to that digital wallet space. Being included within regulation, I think, is a really positive thing.
Yeah, well, and I asked because I want to go to your submission, which talks about the overemphasis on costs as a measure of efficiency and competition, when, presumably competition is supposed to create lower costs and better quality and more efficiency. So if that's the case, why should costs not be going down in a, vastly competitive space?
So as I said earlier, I completely understand the focus in on cost, and it's obviously a really important element. But I think what we need to do is understand the service level that is provided for that cost or for that fee, and particularly as I stated earlier, given that individual actors are choosing higher cost services. And overall, we're aiming for a better payment system here. It's something that we're grappling with in the account-to-account roadmap, for example, where and Mr. Laxell raised this question about the capabilities of BECS today. Fairly basic, doesn't have richer data, doesn't work 24/7, 365, etc. As we move to a better payment system, actually costs may go up if the payment system is providing better value, and that's okay. So I think we need to understand the economics holistically.
And so when we talk about value in your submission, you basically talk about that it should be safe and that it should work. I mean, I think that those are fairly base level, principles for a product. If it's safe and it works and there's competition in the system, the costs should be lower, shouldn't they?
So I can understand that view entirely. I think if I use an example, questions around resiliency now are much more in the front line than they were, say, 10 years ago. That doesn't mean we didn't aim for a resilient payment system 10 years ago. It just means that we have to cater for geopolitical threats to that payment system on a regular basis now. So the bar is being raised in terms of what resiliency means. But I guess I would add that point about what we're aiming for here is higher capability, so richer data that can be processed with the payment. It's no longer just around about the payment itself. It's about the value that can be added through that flow, and so therefore that's beyond that, as you say, rightfully, that base.
Well, and as well as driving down costs, competition should also drive innovation. Right?
Absolutely.
So that should happen in a competitive system, and I guess that's the challenge that we as a committee are having. My last question was this. Earlier in evidence you said we are very big supporters of transparency. what does transparency look like, genuine transparency for small business, that they can understand? Because it's not a big disclaimer where you tick a box. What does genuine transparency practically look like?
That's really why I headed where I headed on that point about transparency, is that we support transparency, but we think it's got to be transparency of the fee, the cost, and of the service level that's being offered for that fee and cost. And it's got to be done in a way that merchants can easily understand and access, and that's really the challenge. So completely agree with that point, and we stand ready to help on that. And
what do you think that looks like?
So I think it is not easy to solve. So it needs some considerable work, particularly because, as I said earlier, merchants may well choose a higher cost offering if that comes with better value for them. And so how do you summarise that in a way that merchants can easily use and take advantage of?
Thank you.
Thank you. Mr. Gregg.
Thank you very much. Just going to your point before about ESAs and the Reserve Bank, I understand that it's seen as kind of a barrier to entry, but from your perspective, what is the reason that ESAs are currently required?
Okay, well, so I might have a first crack at that. I mean, most payment systems would involve settlement at the central bank between participants. Most countries have also sought to develop those settlement accounts to allow non-ADIs, non-banks, to use those exchange settlement accounts. Australia's done some work in that regard, so for quite a while now, if you're, for example, part of financial market infrastructure, you're a clearinghouse or a settlement depository, you can get an ESA. You are seeing some non-traditional players also get ESAs and direct access, and you're seeing that internationally. For example, in the cross-border payment space, some of those, what would have been called fintechs, probably larger than that now, are accessing central bank settlement. Again, where this is heading with the PSP licensing regime is that the second phase of that will consider those common access requirements, and that will deal not only with that question around on what basis can I have an exchange settlement account, but also on what basis can I access MPP or BEX or whatever it might be. And I think that will put us in a better place, because it will stop thinking about, traditional AFSL licence or traditional ADI, and start thinking about you perform this function in the payment system, and therefore you need to meet these requirements, and you get these benefits in terms of access as well.
But the high level, I guess, purpose is to make sure that payments that are initiated, there's enough liquidity there to ensure that those payments can be finalised without disrupting the whole mechanism. So it's a risk management strategy, not just some evil red tape layer.
Correct, and I mean that's why the requirements, not just in Australia but internationally, have been very high. It's a systemic risk problem otherwise. Yeah.
So at the moment, fintechs seem to be an additional layer to many payment systems, and the fact that they're requesting access to existing payment rails leads one to wonder: are we seeing innovation and added efficiency, or are we simply seeing the addition of layers to an already multi-layered payment system?
Thank you, Mr. Gregg. I wouldn't position it as additional complexity. The payment system is already so complex, and there are multiple layers required to enable safe transactions, to enable value that Andy has spoken about multiple times, and to really benefit the user of whether they're receiving payments or making payments. So while it may seem from an external point of view that it adds a lot of complexity, it definitely ensures the safe transactions of money moving between places.
It would reduce the probability of their involvement in making transactions cheaper, though, wouldn't it? Like in terms of cost, because we've obviously got small businesses as the key example, copying higher rates almost on every level. But I'm left wondering, with an average fintech transaction, how many different companies are getting a take, or are taking money out of a given transaction?
The level of innovation that's happening in that space is extremely fast-paced, and what we see is there are gaps that these fintechs find that they look to solve through adding, whether it's partnering with an organization or whether it's adding an additional layer, there's definitely opportunity there for these companies that they're noticing, and that's why customers are also agreeing to buy that product or accept that product within their ecosystem. So this is more a market dynamic within the payments ecosystem where fintechs are finding issues that need to be addressed, whether that's through an additional layer, whether that's through a partnership. And we do think it's necessary to enable the resilience of the ecosystem.
But if I may as well, I would also just jump in to underline what Mr. White was saying earlier about the importance of looking at the holistic value of services being offered, not simply looking at the price. And one of the real benefits we've seen in the broader payments system over the last 10 years has been a broad spectrum of fintech-led innovations, which have resulted in a broad range of new financial services available through issuing services, through acquiring services, through account-to-account payments, and so forth. We can give you a longer list.
No, I guess I wonder, generally when industries say we shouldn't focus on the costs, it's because they're adding costs. And from what I can garner, the reductions in merchant payment rates are not because of these fintech innovations. Like, they haven't created a system that's fundamentally disrupted the payment system and, got rid of an expensive, archaic system and replaced it with a cheap, efficient, dynamic one. Would that be a fair statement?
Well, if we look, Mr. Gregg, at fintech card issuers, for instance, we have seen interchange fees fall and fall and fall as a result of cap reductions. And yet, within those constraints, we've seen fintechs operate very successful businesses which have been investing in a range of new products and services, and consumers have voted with their feet by adopting those products and services. Things like disposable single-use virtual cards, that's an example of a fintech creation. Another one is multi-currency debit cards, expense management platforms, and so forth. These are issuer-side innovations which have been created by the fintechs. So there's definite value creation there. Certainly when you see investment, you often see that being passed on in the form of costs as well. But I'm talking here, for instance, in the context of card issuers who are subject to quite aggressive and low caps on interchange rates, and yet we've still seen those innovations coming from fintechs.
Speaking of those interchange caps, the calls to kind of exempt some small players from those interchange caps, how would that reduce the cost burden on small businesses and merchants?
This is quite a detailed proposal, so we can provide all of the information on notice. But at its core, I would point you to some data we have, leveraging actually RBA data, showing, for instance, that the latest proposal to cut interchange fees on debit cards would put the eligible costs for them to charge to consumers actually below the expected costs to small issuers. So the policy in its current form being proposed by the RBA would force these fintechs to operate unprofitably. Now, this is more problematic for a ordinary fintech which might have one or two services which it offers very, very well, than the problem which it poses for a large bank, for instance, which is typically willing and able to operate business lines at a loss if necessary. We have, for instance, seen evidence before a committee, we can provide details or notice, that one of the major banks is operating its acquiring business at a loss, and I think we saw recent reporting as well that it's now also operating its issuing products at a loss. That's something which fintechs just don't have the luxury of doing. But there is merit in having fintechs in the market and spearheading new innovations. And if that requires some sort of a carve-out to protect businesses which, unlike these major banks, cannot cross-subsidise between business lines, that's something we contend offers value to the market from a competition perspective.
Well, thank you for that. Given it's my final question, I'll skip. So we've got, there's every player we've spoken to has talked about investing in fraud protection and security. Is there a risk that when we have such a multi-level payment system that there's just duplication of efforts and, you know, against fraud and scams and things like that, and we're making that unnecessarily expensive and complicated with the more complexity we add to the system?
So a couple of thoughts on that. I mean, one is that I think the scams prevention framework, part of the idea there and making it cross-sectoral is that those costs are borne not just by one sector, obviously, and I think that's helpful. I don't see that as duplication. I think that you know, what we've seen so far in Australia, even with the National Anti-Scam Centre being formed, is a 36% reduction in scams, and that's just from people doing the right thing willingly. That's before the regulation actually kicks in. You're not seeing that reduction anywhere else, so that's probably quite a good measure of the fact that it's efficient investment. We do, though, and actually the National Anti-Scam Centre has this as a bit of a principle. We do agree with the idea of, you know, integrate, don't duplicate. And so things like the Australian Financial Crimes Exchange, things like the NASC itself, I think where we can get together, but I do mean we, I think it has to be a cross-sectoral effort where we can get together in the centre and do things once rather than more than once, I think is really powerful.
Thank you.
Terrific, thank you. Any other thing I was going to ask of FinTech Australia in particular, again, because my big focus is on how do we ramp up competition. And as I said, I just want to re-emphasise, I see the role of FinTech Australia and the sector as really critical to that ambition. Does FinTech Australia keep stats on the exit pathways for most of your members? So either IPO, they get bought out effectively by another player. And in terms of the buyout, like I don't mind bigger businesses, I don't have a problem, I should say, in bigger businesses acquiring some of the smaller players because some of the R&D and the innovation that's been done then gets onboarded. But if it's an acquisition to stifle competition, like that's a problem. If they're knocking out a player that presents a threat, that's an issue. Do you keep those stats, and can you provide those to us as an answer to a question on notice, or do you want to speak to it now?
We do not have direct stats on it, but this is something we've been working on, so when that is ready, probably not in the immediate future, but we definitely would like to share that when we have those stats. I completely agree with you. Enabling innovation also means the right types of acquisitions. And one of the ways we're looking at it is to ensure innovation stays in Australia and remains in Australia and lists in Australia so that investors, local investors that invest into the market get their returns from it as well. What we're noticing currently is that fintechs are raising most of their funding from international markets. Fintechs eventually go international because they see more scope there, or international investors are incentivizing them to move into those markets. So that's where the challenges lie, and we can take it on notice and share some more information on the funding challenges that fintechs face here that is preventing local innovation and local support for the ecosystem. Yeah, that would absolutely be good if you could do that. I've got a number of, for all of you, questions on notice, so if you're able to provide assistance with that would be terrific. Thank you. We've kept you longer than what we anticipated. So we do appreciate the additional time. Again, thanks for your appearance. The Secretariat will contact you in relation to any matters that are arising out of today's hearing. We'll also send you a copy of the transcript of your evidence, and you've got a chance to request corrections to any transcription errors. So with that, you're free to go. Thanks for your help.
And then
Thank
we'll
you.
call up the next. Thank you.
Thank you.
So we'll move on in a moment to the Australian Business and Merchant Bodies, COSBOA, AHA and the Small Business Association of Australia. Total Torrent, I got rid of your break. Got rid of well-earned conditions.
That is not
Okay, we might, what are we on? Okay. I now welcome representatives of the Council of Small Business Organisations Australia, COSBOA, the AHA, Australian Hotels Association, and the Small Business Association of Australia to give evidence. For the Hansard record, could you please state your full names and the capacity in which you appear, starting with COSBOA, AHA, then Small Business Association?
Good morning. I'm Adele Sutton. I'm the Head of Policy at the Council of Small Business Australia.
Thank you.
Good morning, Stephen Ferguson, National CEO, Australian Hotels Association.
Thank you. Small Business Association? We've got you on mute, so I think I can see one rep. I think we've got Anne Nalder and Linda Shave are both on. If you can unmute, please, so just so we can get going. Okay, I'm going to keep it moving, and when we get to you, we'll get you to repeat your names and titles for Hansard if you can just sort out the technical issues. Before we proceed, I should advise you that although the committee does not require you to give evidence under oath, this hearing is a legal proceeding of the Parliament and therefore has the same standing as the proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as contempt of Parliament. The evidence given today will be recorded by Hansard and attracts parliamentary privilege. I now invite each witness to make an opening, and if you can make a brief statement before we proceed to questions. I'll start with COSBOA, then move to AHA, then move to Small Business Association. Over to you, COSBOA.
Thank you. COSBOA is a peak body for small business in Australia. There are approximately 2.7 million small and micro businesses, making up 95% of all businesses and employing over 5 million Australians. These businesses are already doing it tough, squeezed by relentless cost of living pressures, rising wages, energy bills, rent hikes and supply chain shocks that hit them harder than big corporates with deeper pockets. Every cent in merchant fees is one less cent for reinvestment, wage rises or just staying afloat. For them, the core issue here is simple. Merchant fees must come down and the playing field must be levelled so a struggling cafe owner isn't subsidising the same card tap that a supermarket handles at a much lower per transaction cost. Small businesses are pure price takers, locked out of negotiations that big players take for granted, yet hammered with higher fees despite tiny volumes. Amid a cost crunch, we are still waiting for the outcome of the RBA's review into surcharging, which may further erode margins to breaking point and might be the difference between mum and dad businesses surviving or shutting the doors. Scheme fees in the broader merchant fee stack are a relentless game of whack-a-mole. When one element is capped or constrained, costs tend to reappear elsewhere in the bundle. In scheme fees, in terminal costs, in new product structures, or in a way transactions are routed. We make several key points tied to the committee's terms of reference. Firstly, scheme fees and merchant fees more broadly are often a buried driver of costs that small businesses can't easily understand or avoid. Large enterprises secure materially lower per transaction fees, while a hairdresser, independent pharmacy or regional news agents pays more for the same payment functionality. This disparity undermines competition in the real economy because it bakes in a structural disadvantage into every card or digital wallet transaction a small business accepts. Any reform should narrow this gap and deliver lower, more equitable merchant fees to small businesses. Secondly, we support the continued evolution of digital payments ecosystem in ways that genuinely drive efficiency and reliability for consumers and small business. But new payment offerings have too often promised operational improvements without delivering overall costs or lower costs or transparency about who earns what share of the fees. Tap and go and digital wallet transactions have introduced additional intermediaries, each taking a slice and increasing the cost of service, from terminals and device integration to the bundled merchant fee. Given the complexity of the payment system, we do not claim to have all the technical solution to how scheme fees, interchange fees, digital wallets and new payment technologies should be designed or regulated in detail. We're here for the outcome small business demands amid their daily fight for viability, lower, fairer and more transparent merchant fees that don't force them to cross-subsidise the payment system for everyone else. The question the committee might keep in mind is, will small businesses see a lower, fairer average cost per transaction on their statements as a result of any forms that flow from this inquiry? Because that's how they'll measure the impact. Thank you very much.
Good on you. Thank you. AHA.
Hear, hear. Thank you, Chair, for the opportunity to attend today. There are two types of consumers in the digital payment system. Those who use their own money by using cash or debit cards, and those who borrow their money by using credit cards. Those who borrow their money receive additional benefits to debit card and cash users, such as the waiving of monthly account fees, interest-free payment periods, frequent flyer points, complimentary airline lounge passes and complimentary international travel insurance. Yet those who use their own money don't receive any of these additional hidden benefits, yet they pay the same surcharge nearly always as a credit card user. The reason most small businesses charge the same surcharge for debit and credit is because they are encouraged by payment service providers to use single or blended rates. One size fits all. However, the real cost of processing a credit transaction can be 3 to 5 times more expensive than processing a debit transaction. But as you heard yesterday, the banks believe it is in the best interests of small business and consumers for these facts to be shielded from them. I also note that the RBA said yesterday, claiming victory, that 80% of transactions are least cost routed. However, as Mr Laxale rightly noted, a consumer paying a blended rate is not receiving the financial benefit of that least cost route. In the case of blended rates, the financial benefit is retained by the payment service provider, not by the business or consumer. For a transaction sent down the FPOS route, the cost to the payment service provider might be less than 0.5%. But the cost charged to the consumer at their newsagent, pub, club, restaurant, cafe, petrol station or convenience store might be as high as 1.6%. That is not fair, nor how least cost routing is portrayed as supposedly working by the RBA. In our perfect world, surcharging would continue to be allowed by the RBA and government. But being pragmatic, the members of the Independent Payments Forum, of which the AHA is a member, recognise that the RBA and the government probably have two basic choices given the angst of consumers around surcharging in its upcoming review. Option 1 is to ban debit card surcharges only, as recommended by the Prime Minister and Treasurer, or, as preferred by the Reserve Bank, to ban both debit and credit card surcharges. The question for this committee is which of those options is in the best interests of consumers and small business. We submit banning debit surcharging but allowing credit surcharging to continue is by far the fairest and will have the lowest impact on price increases. We also submit that the RBA and government should also mandate opt-out dynamic least cost routing to ensure that every single transaction is processed via the cheapest possible route. If the RBA or Parliament implements our recommendation, Miss Campbell's mum might be able to better understand.
She's had a very big impact on this committee.
But she might be able to better understand the price of her coffee, which I've got to say Mr Birmingham, who's a great operator, was not able to properly explain yesterday. And the great thing is it'll be cheaper for Mrs Campbell as well. Thank you for having me along today.
Thanks, Mr Ferguson. Now, I think the Small Business Association is on the line. I think that Mrs Linda Shave... there you go, and Ms Noel. Okay, just one of you, please, if you can... well, sorry, you both need to indicate your name, position and who you're... in the position in which you're appearing. So we'll start... Yep. No, can't hear you. Ms Nolder. Mrs Nolder, we can't hear you.
Hello, can you hear me, Linda Shave?
Yes, I can, but I wouldn't mind the CEO, if we can get the CEO on first. Ms Nolder, can we hear you?
Can...
Okay, well, you're sorting that out. We'll go to Mrs Linda Shave. Sorry, can you just say who you... Sorry, just got to go through the formalities. Who you are, position you appear in.
Hello, can you hear me, yes. Linda Shave?
Yes, we can.
Okay, sorry, there's... I'm living in one of these technology black holes, so I have a lot of problem with internet connections. So if you can hear me, I represent the SBAA, and thank you for the opportunity. My name is Linda Shave, and I'm a policy advisor and technologist for SBAA.
Okay, so
we'd like to thank the House Representative and Standing Committee for... Sorry.
There you go.
Can I... Shall I carry on?
You go ahead, please. We're getting held up. Okay, you go.
Sorry,
you go.
I can't hear you.
Please provide your opening statement.
Shall I continue?
Yes, most definitely.
Okay, well, to provide some background, according to the ABS in the 30th of June 24, there were approximately 2.7 million small businesses actively trading across Australia. And in 2023-24, there were 88.5 either self-employed or employed with 1 to 4 people, known as sole traders or micro business. 8.7 employed between 5 and 19 employees, small business category, and 2.6 employed 20 to 199 employees, medium business category. And the Small Business Charter highlights the vital role of micro and small business, which we call MSMEs, and the role they are playing in the economy, accounting for 99.8% of all businesses, contributing nearly 1/3 to the GDP and providing over 5 million people in jobs in the private sector. Given that Australia is currently facing material challenges in relation to productivity growth and living standards, MSMEs face significant tangible obstacles which are hindering their ability to efficiently adopt and utilise digital payment technologies. MSMEs are already carrying wage increases, rent pressures, insurance rises, energy costs and regulative burden. Another unrecoverable cost simply accelerates closures and price inflation. Drivers for growth in contactless payment, including mobile wallets, has resulted in most debit card transactions being automatically routed to international Visa or MasterCard networks, where previously many of these payments were made over the domestic EFTPOS network. Transaction fees, including interchange fee rates and payment gateway charges, can erode already thin profit margins, which were about 3% margin in 2025. These expenses, combined with potential hidden costs, make adopting digital wallets a financial burden rather than an efficiency booster for MSMEs, who represent 99.8% of the active trading market. This is putting upward pressure on MSMEs, transaction payment costs for merchant and or surcharge fees. If card surcharges are removed for customers and merchant fees still apply to the MSME, the costs do not disappear, they simply get buried. MSMEs will have no choice but to expenses through high product and service pricing. Digital wallet initiatives should also consider customers who buy product and services provided by MNCs. According to the ABS, in March 2025, approximately 51%, approximately 1.4 million people are reaching or receiving age pension. This group, including over 70s, are less likely to be able to afford smart technology, especially given the speed of obsolescence, nor know how to use such technology, thus reinforcing the need for agility and payment systems that are accessible to all Australians. Despite the push towards digital wallets, traditional payment methods should not be overlooked. These include personal preferences and lack of internet connectivity in rural and regional Australia. The cash system also provides resilience to Australian payment systems in times of natural disaster, crisis and network outages. It is important that the current and future innovation of payment systems continue to include choice and be accessible by all Australians. Government need to ensure that trust, governance and accountability is built. For example, hidden fees for digital transactions, merchant fees or surcharge fees. Transaction fees between different banks impacts the processing of purchases. Recharging the device that hosts a digital wallet for wearable or mobile payment. Impacts as a result of digital/technology obsolescence, especially on disadvantaged groups and aged pensioners. Investigations around the ability of a bank to freeze an account or transaction at will, and banks being monitored for not processing transactions in a timely fashion. So once again, SBAA, and would like to thank the House of Representatives Standing Committee for the opportunity, and my apologies for the original technology glitch.
That's okay. Thank you very much, Mrs. Shave. What I might ask you to do is email to the committee secretariat your opening statement, because you were dropping in and out, and I just think for Hansard it would be good to have that statement. So if you could do that, would be terrific. Thank you. Can I just open up to anyone who wants to answer? So regardless of which, this is literally, parliamentarians will quote this mantra: small business is the backbone/engine room of the economy. Small businesses make 96% of all businesses are small businesses, right? So we get a sense of how many businesses there are out there. Then the next thing is this: we have the bigger players in this area always warn us that if any move is made to reduce interchange or cap it, or do anything on merchant service fees or do anything on scheme fees, that if you do that, it threatens the safety of the system, the investment in the operation or the enhanced operation and efficiency of the system, the cyber protections available, etc. They say that on the one hand. Then on the other, we see these very generous rebates occur on scheme fees that go to bigger players who would potentially present, you would assume, because of the high volume and because they're great targets, a risk if they're not paying their way through there. So I guess, how is it that small business, given the number of them that exist, hasn't been able or allowed to collectively bargain to get the same sort of deal so that they can get the same sort of rebates that bigger businesses have gotten? And I have to thank you, Mr. Ferguson, because you're the first person who had identified for me this notion that I didn't realise existed, where bigger businesses based on volume got these rebates, smaller businesses miss out. How is it that you're not allowed to collectively bargain? Have you attempted to do this? This is to any of the people appearing. And how is it that inconsistency has been allowed to be sustained? Whoever wants to answer first. I've only got one question, and Deputy Chair can jump in after you've answered.
Well, I can answer the question, if you don't mind, Adele. I can answer the question about the collective bargaining. We actually have, before the ACCC at the moment, a renewal of our 10-yearly collective bargaining agreement. And for the first time we've included, I have to jog my memory, excuse me if I'm wrong, but I think the 4 big banks and some of the big other payment service providers, so that we can, so Tyro, FPOS, those people, so that we can go and collectively bargain with them. We're not sort of really doing so formally at the moment because we want to wait to see what the RBA and the government decide the new rules are, then we'll have some idea. But if I could sort of put it this way, if you, with great respect to the 4 banks, and the Visa and MasterCard were here yesterday, so the 4 banks, 4 Australian banks, 4 of the most profitable, biggest companies in Australia, Visa and MasterCard, two of the most profitable, biggest countries in the world, and we have their most senior people in APAC, senior people in Australia that make the decisions on payments. So if I went into the room yesterday, or Adele and I, or we got a local news agent or a local publican to go and negotiate with those 6 people, how do you reckon they'd go? Zero. The price would probably go up. What they're left with is small business generally finds that they'll often be attached to their bank. They'll have their mortgage with their bank, their home mortgage, their business mortgage, all their banking with a bank, and they'll generally go down that path. So it's difficult for them to get away with it. And there's also this, I call it the Chicken Little mentality. I mean, you sit here every time with all these inquiries, doesn't matter, it's about, increases to the minimum wage, whatever definition of casual, pick it what it is, and everyone walks in and, sky's going to fall in. Well, I struggle to reconcile that with the people who were in the room yesterday who are making billions and billions of dollars. I just don't see the sky falling in. And what we'd like the committee to consider, and the RBA, is to sort of stop looking at it from their point of view. Stop talking about acquirers, issuers, interchange fees, scheme fees, cost of acceptance, designated systems, drip pricing, dual networks. Let them get them in a room, put them in a room, knock themselves out. They can work all that out. What we're saying is stand in the shoes of the consumer and look at it when they buy a coffee. They're looking at 1.6%. Now, you've got the power to say, OK, we're going to make sure if you're using a debit card, that's actually going to say 0% or 0.5%, not 1.6% or 2.5%. Yeah. You've got the power to do that. Don't need their position to tell you that.
But this is a big thing that but what gets me is it's really been emphasised over the last day and today that small business... I cannot get out of my head this view that small business really is underwriting a lot of the operation of the system. If they're giving, if particularly the big players are giving rebates on the scheme fees to the big players, the high volume users, and they're not paying their way, then it's really over. And I think you might have reflected on, Cosbella may have reflected on this in your opening remarks. It's really the small businesses that are paying for this. And if they can't collectively bargain to get a better deal, that will be perpetuated.
Correct. And I think there's a practical aspect to it. So I was talking to one of our members yesterday. So we have 50 member associations who vary in size. Some have big policy teams and are much larger associations like the Pharmacy Guild. And then we have associations who only have about 3 people working for them. So there's a really practical element to the idea of collective bargaining. It really does seem like the only way you could get some economies of scale going, but the actual thing of then going to different banks, the time and effort involved, and even if you do have a collective bargaining notification or authorisation through the ACCC, it still doesn't force the other party to come to the table, is my understanding. So, so there's a real practicality and expense and cost to it for actual, sometimes very small resource limited associations in that perspective.
Okay, Deputy Chair. We've had mute mayhem today.
Sorry, I had my own
there we
issue.
go.
Apologies, Chair. No, thank you very much for that explanation. Just to AHA, Mr. Ferguson, you said debit surcharges, let's ban blended rates, makes sense to me. And you talked about the 2 options, 1, banning debit surcharges, and 2, banning debit and credit surcharges. Why were you suggesting option 1? Could you just explain the benefits / trade-offs of
Look,
option
I think
2?
our preferred view of the world would be the status quo, where business can still just pass on the costs. That's our preferred position. But being pragmatic, when you've got the Prime Minister, Treasurer and the RBA saying at the very least that debit surcharging will go, and every friend of mine that I talk to that hates paying 8 cents on their coffee and 16 cents on their beer saying it would be a politically unpopular decision for any party to take to the government to say that surcharging on debit at least would continue. So we're sort of going, OK, that's our perfect world. If debit is separated from credit, that means that we can get the price down from at least 1.6% to somewhere under 0.5%. And then with collective bargaining, we think that then we can probably help drive the price down further. Then that leaves people using credit cards and getting all those other benefits to pay for the benefits that they're using for. Because that's the biggest loser out of all this, and I don't think anyone's talked about it in the last 2 days, the biggest loser in this is anyone using cash. There's a couple of prominent politicians in this place that like using cash that maybe haven't cottoned onto this yet, but their price is going to go up. So any debit card surcharging will result in prices going up. We're trying to ensure that the prices go up as little as possible, and the easiest way to do that is ban debit, allow us to surcharge on credit where those that get frequent flyer points and interest-free periods to borrow money can pay for that benefit.
Yeah. Later this afternoon at 12:15, we'll have some blockchain and cryptocurrency people. And, well, actually, before I get to that, you guys may or may not be aware, there's been NPP payments companies coming in that are starting allowing NPP payments. Chemist Warehouse is doing something with Wave where you scan QR codes, and a way to use those NPP rails to sort of avoid transaction fees. Any view for small business and the ability to engage in that? And then I'm going to go into stable coins and digital and after that. But just
I
that
think
question.
step one, we're dealing with the current, which is the immediate thing for us. 100% of our members are using plastic credit cards or mobiles to process transactions. So we're concentrating on that. But we are starting to turn our mind to things like QR codes and stable coin technology. But we just need to get this problem fixed first, and then we'll look to those opportunities later on.
Yeah, no, it makes sense. And maybe a comment and then a question at the end of it. Stable coins and these blockchain technologies, I think stable coins are now the 6th largest transacted currency in the world.
Yep.
They're starting with very large sums because for a very fraction of a cent, a fixed fee, you can transact billions or hundreds of millions or $5 for a coffee for that same fee because it's costing that. There's FPOS terminals now in Woolworths and other places that can allow wallet-to-wallet transactions. My view is we should be, as government, these are disruptive technologies to some of those most profitable companies in Australia and the world you just talked about, Mr. Ferguson. And there's a lot of people with vested interests ensuring these current technologies get the longest run as possible because they've invested in that, they want to get return on those investments. But on the horizon is this disruptive technology. It's actually not on the horizon, it's here and now. And I'd like to get just everybody's reaction. If government has an ability to fast track stable coins where it's a digital dollar, you can transact instantaneously and you can do it for fractions of a cent, how would that benefit your sector? And should government be doing everything in its power to ensure if this technology exists and it's technically possible to do today, why aren't we doing it? And how do we set up so vested interests who have invested billions and tens of billions of dollars or hundreds of billions of dollars in a current network don't just perpetuate that network if there is better technology out there? Any comments or reactions for us as we consider that? And we will get into this later this afternoon.
I'm very familiar with one particular stablecoin Australian-owned company, so I have some very small understanding of how it works. And this is a company that ships money between, if I could say, from smaller, less well-off, maybe not democratic countries to others. It sort of deals with this sort of whole global shift of money. And I'm not quite sure yet how that can translate down to our level, but certainly, we've been looking at this problem of credit card charges for years.
Just to answer that, what you can do is you can have it on just the same as you have on Apple Pay or wallet, where you just tap an FPOS terminal and that transfers straight from your wallet to the merchant's wallet directly for fractions of a cent. That technology exists today. It's the same as an FPOS terminal.
No, I agree, but we're just, or how do I say, the 20 million Australian consumers don't yet have it on their phone. So we've got to deal with sort of the here and now, which is dealing with the banks and the payment service providers and the four entities that are sitting inside every transaction now that all clip the ticket. So sort of today, I'd want to get that problem solved. Tomorrow, We're looking as hard as we can at stablecoin and other things. We've been looking at this problem for 6 years, and we've talked to fintech companies in Australia saying, if we're paying all these billions of dollars, how can we make the big shift? 6 years ago, we first started the conversation, we couldn't do it, but now we're getting to where we can. So we 100% encourage you to, whatever the government can do to be facilitating that. And my understanding with stablecoin, it's not some sort of mythical thing, it's actually backed by currency, so it's safe. And we need to be shifting towards that.
Sorry, Deputy Chair. I think the SPAA wanted to make some comment. Mrs. Shave, I saw your hand pop up on the Teams link.
Yeah. Thank you for the opportunity. I'd like to also say with Bitcoins and blockchain and all of those technologies, one must remember that they've got keys and algorithms. And if you lose your key, you lose your money, basically. And so we do need to consider that the micro business side of it and the sole traders may not benefit from such technology. And there a burden on many to keep updating their technology as obsolescence comes. And how will this work when quantum computing comes into play? At the moment, we're talking about digital and biometrics, but then we'll be going into qubits and technology around those. And the government has now got its quantum technology paper out. And my concern is that we're concentrating on the today factor of technology and how will this be impacted by the new technologies coming in, because the banks are already using quantum algorithms for money laundering and all of these sort of things. So I think, yes, there's a lot of things happening. We have got an aged population who buy products and services from a lot of the hotels, coffee shops, and they don't, like myself, I don't have a QR code on my mobile phone. I haven't needed one, so I haven't used it. So even though it sounds silly, I'm in technology, but I'm cautious about using the technology, and I am up to date with quantum. And I'm not seeing any policies coming out which say, well, if we go down this track, are we also monitoring the technology advancements in other areas so that there is no breakdown within the network systems, energy, keeping our servers up and running with AI-generated chatbots and AI pay codes? And so that's what I would like to just ask. Thank you.
Thank you.
I was just going to say, we've seen already in recent times how small businesses, particularly micro businesses at markets and such like, have adopted fintech into their payments ecosystem. So I think there's an education if people know it's there, it's cheaper, it's efficient, it's simple, it's regulated, it's safe, then there's no reason why that isn't something that they would consider taking up in the future.
Thank you. Back to you, Deputy Chair.
Yeah, look, I've just... two questions and I'll finish on these. If debit surcharging is banned, should scheme and wallet fees be reduced accordingly? And what reform, if you could do one or two reforms to reduce the costs of small business, and what would they be? Are they things we're already considering, or, what's that magic reform?
There's 100 little micro pieces of red tape. That's probably the first starting point, but they're, it's sort of death by 1,000 cuts. That's a whole other, it's a whole other topic, really.
I noticed, Mrs. Nalder, you wanted to make a comment. Can you please introduce yourself?
Yes.
Hang on.
Yes, can you hear me first of all?
Yes, perfectly. Can you introduce...
Thank you, and my sincere apology.
Wait, please, sorry. Can you please state your name and your position for the Hansard, and then please you be my guest to answer.
Thank you. Anne Nalder, founder and CEO, Small Business Association of Australia.
Tremendous.
And my sincere apology, but technical glitch.
It's all good.
I think one of the things that I think we're missing at the moment, we're talking about technology and all sorts of things, but regarding the cancellation of debit fees for consumers, for example, what I think we should be looking at is how do we reduce the cost burden on small businesses generally. You have the high cost of living in Australia, which everybody seems to agree upon, but you've also got the high cost of doing business. So if, for example, consumers don't have to pay on their cards, that particular burden then goes onto the small business owner because they are still, as we've discussed, they are still left with charges. Now, the coffee industry, for example, the coffee cafe set, they're working on about a 3% profit margin. If you look at overall, and this is based on fact, the general turnover of small businesses is extremely low in this country. So we should be looking at, together with good technology, how is it that we reduce the cost so they can be viable, so they're not falling over the cliff, which they are at the moment. That's what we need to do. You asked about one single thing that would help small businesses. We drafted the Small Business Charter of Australia for this very purpose. The only time in history in this country which has 10 pillars, and it's all about, it's not anti-big business, it's not anti-union, it's non-political, but it is about how to create the right policies for small businesses, because the system always has been, basically, we lump all size businesses, including large size businesses, into one cap. And it doesn't matter whether you're the smallest of operators or the biggest of operators, it's basically the same policy and this is where it's a huge failure. So we need to look at how is it that we create policy. That's important. With the right policies, you also reduce a lot of red tape. And when we create something, if we create something that works for a small business, that's going to be beneficial for all size businesses. So my suggestion is to look at policy and how we create it, because that governs a whole lot of areas.
Okay, thanks, Deputy Chair. I'm going to hand over to Mr. Gregg.
Thank you very much, Chair. The points you've raised about the small business burden is certainly what I think across the committee all sides have really been most concerned about. Do you think there have been some behaviours of fintech firms which have tried to kind of encourage and induce small businesses to go into platforms that are suboptimal for them, so include kind of features and extras that just aren't necessary as part of their marketing model? And a lot of witnesses have talked about transparency, which sometimes means just a whole lot of information. But what would be a way that we could ensure that businesses get the information they need to make rational decisions for themselves at the same time as just not making their life harder with more things to think about?
Well, one of the things I think we take him out, I think the latest statistics show that your average small business owner is already spending like 15 hours a week on compliance, across all legislation, IR, privacy, what have you. But it literally, so we need to make it really simple. If they have, it's a bit like if I'm trying to look at insurance, I might go to an aggregator that gives me all of the details in one space. So the more we go to, you've got to go and look at this bank's fees, and you have to go over here to find the information to then do your own compare at. That's just going to take too much time, too much energy, and they're probably not going to engage with that. So the more the information could be in one space for genuine transparency, that would be really helpful. And I suppose also, I don't know the answer to this, like what are the barriers to actually switching? So again, if you're already just have everything with one bank, is that then a barrier to switching, or are you in a contract where it's going to be more hassle getting rid of your terminal fee to go with another product? So barriers to switching, I think. I don't have the answer, but I think that would be something that would be...
that was one we were concerned about as well, because sometimes point of sale systems, it's easier just to sign up to this other particular platform, and is it easy enough for you to move to something that is more cost effective for the business? Or are you paying premium transaction fees and things?
Bit like you used to be trying to change your mortgage, when there were exit fees. It's similar.
Is there anywhere you can think of that is doing this a bit better for its small businesses, where there is less disparity between the position of small businesses who do seem to be paying the lion's share of the burden and cost of a lot of these platforms because they don't get inducements, they don't get discounts and all those things? Is there somewhere with a better, more level playing field in this space that you're aware of?
Internationally, Mr. Gregg? Look, not that we haven't looked out there. But I'll probably make the point that for the small business there, I don't think anyone on their own, a newsagent or a pub, very difficult for them to go and negotiate. Combanks, they'll sell their payment term at 1.1%. The person at the counter at the bank where you get it's not going to change that for you. It's only, I think, through collectivism that we might be able to strike deals with the members of our respective associations. I think on information, I think as part of what the RBA wants to do is force the payment service providers to sort of have a comparative table, like the compare insurance tables and all those sorts of things. Great idea and good starting point, but unfortunately, even with those compare insurance things, people are too busy often to... They're great, but people don't have the time to jump on often enough. But I do think a couple of things. Whatever happens with any change in this sector, we're now nearly at the end of February. It was going to start 1 July. People have got payment, sort of terminal rental arrangements in place at different percentages. We'd need more time to make any changes that are, to go back in and say, well, hang on, everything's changed. We're not paying 1% flat rate. We're paying whatever.
And it's interesting, the small businesses I've spoken to, some really understand the blended rate that they're on, and others literally go, I think I'm on this, but I'm not sure, but I know I spend 20 grand a year, and that's the headline rate they would look at if that changed the following year. So, I mean, I do have some statistics a member gave us of what a dollar to dollar transaction looks like for some small businesses, and it's increasing because they had a negotiated common rate through an association, but which was very good, but again because of scheme fees and the wholesale costs going up, those rates are, I think, increasing about 25%.
Because we keep getting told that merchant fees are going down and, everyone's getting a bargain. Well, so that's not the experience of small business.
Well, if I could give you these statistics quickly, it might help, again, from the dollar perspective rather than percentage. So these 15 news agents were all on a blended credit and fixed debit rates. So the average credit card fees in 2025 per store, 40% of transactions were credit, and they would pay $854 a month. Their average debit FPOS fees per store was which represented 60% of the transactions, were $226 a month, with a terminal average fee of $37 a month. With the new rate, which again I understand is because of increase in particularly scheme fees, the average credit per store is going up to $960 a month. The debit's going up to $362 a month, and the terminal per store is going up $71 a month. And the interesting part was that even though credit's only 40% of transaction costs, it's roughly 3.8 times more than the debit costs.
Paying more and more to get paid.
70%. The credit cards drive 77% of those fees.
Mr. Gregg, if I could refer you to the two most recent submissions of the Independent Payments Forum, which I say is made up of news agent associations, pub associations, clubs, restaurant associations, what have you. One bit that I wrote down this morning was that, according to their submission, RBA data shows that acquirer fees have risen by 5% in the last 9 months. They're about another 4 dot points, and I can't remember which submission it was, that talks about how prices have increased. So I've got to say, I sit here going, not sure who's telling the truth.
Well, and also from a dollar perspective, the fact that consumers are choosing now to use cards rather than cash and using Apple Pay means that's increasing, the dollar, my 20 grand might be going up to 25, just on the choice of the consumers to use the cards.
And by adding those significant input costs, the ability of small businesses to compete with large ones is further undermined.
Well, I think you heard yesterday, Mr. Gregg, I'm pretty sure, I think it was MasterCard that said that they don't even talk with talk with small businesses. They'd only talk with, say, the Goliaths or the bank. So good luck if you're the news agent or the pub walking to Visa or MasterCard saying, hey, guys.
Yeah. I guess that's the concern with some of the new tech as well. Like if you've got new technologies with new payment receipt systems that, what's to stop them from doing what Visa's done and just focusing on the major retailers and making sure they've got all the tech and all that advantage in there, and small businesses are kind of being left behind. So what do we do to make sure that they get the benefits and the cost savings? Because right now they just seem to be copying the costs. The savings and inducements all seem to be directed towards larger businesses, just further entrenching their competitive advantage.
I mean, there's a very good table on page 3 of my submission that talks about the domestic interchange fees charged by what they call the strategic rates and non-strategic rates, which is what the big guys get, Coles and Woolies, versus what little pub and club and news agent get. And it's
sorry, in your interaction just then, reminded me of something else that was raised by, I think it was both Visa and Amex. So they're saying they've set up these systems where they are going to give rebates for small business that they would extend to the acquirers, and then it's up to the acquirers as to whether or not they extend them. Did you hear that testimony yesterday? Sorry, if I can just finish.
Yeah, sorry.
So did you hear that yesterday?
No.
Are they making you aware of that?
No.
How are they passing it on to actual small businesses? Are you aware?
We heard a little while ago, and mainly this is probably a better question for the Independent Payments Forum, who are more across this, that I think it was whether the banks or the credit card companies were going to come up with a new small business rate. But really, I think the small business rate they were talking about was businesses less than $100,000, which would be lucky to be a single hairdresser, not a Main Street, not a business in the high street. That's the only thing I've heard from them.
And the key thing is too that it's up to the acquirer as to whether or not they take the benefit or they pass it on. So have these card providers, Visa and Amex in particular, spoken with, for example, Cosboa, and advised you of the existence of this at all?
We speak to them regularly. The full disclosure, they're sponsors of ours, and one of the ways that we Combank, Square, Amex, and Visa, and so we have conversations around the ecosystems. It certainly helped me understand. I'm not aware of those particular. I didn't actually see the testimony yesterday, but certainly that's something we will go and talk to them about, because it's a two-way stream where they educate us about the ecosystem and we educate them about the experience of small business. So that's certainly a conversation we would be open to having.
Thank you. Sorry to jump in.
I suppose another thing, I guess the reality is, you've kind of pointed out before, is you don't get to choose which card your customers choose to pay with. So you really need to provide for them all in most business environments anyway, don't you?
Yeah, and the other problem, this is why I keep harping on about debit and credit card surcharges at the moment, is that if the RBA bans all credit card surcharging, the business has to accept an Amex at 2.5% and an FPOS card at 0.5%. So they don't know what their cost of transacting is. They know when they go and buy their goods for sale what that is, but everyone coming up will be a different profit margin for them, which is unfair.
I think that's what we're saying as well, that removing surcharging, it doesn't remove the cost, it just removes the transparency. So, and then whether that cost becomes larger within, it's not then transparent to the consumer what the cost of the merchant fee actually is.
I guess it's always complex in a market when the person making the choice is not the person paying, whether it's the business choosing to accept, use a Square to pay for the point of sale system, and it doesn't matter because the customer's paying it through a surcharge, or the other way around and the customer is using a card that's very expensive for the business.
And particularly foreign again, if surcharging is banned, then small businesses will be taking on the cost of those foreign cards. There'll be no which are more expensive. We've constantly advocated for least cost routing again to try and make, if those costs are going to be worn into the actual price of the goods, then mandated least cost routing would certainly help alleviate some of that pressure.
Have some of the payment service providers through their settings kind of restrained the adoption of least cost routing? Because sometimes we hear the phrase merchant choice, but in reality it's not them choosing to make things more expensive for themselves or anyone else. It's just how their platforms work.
A table published by the RBA had Square as being 100% least cost routed. Square, every Square terminal I've ever seen has a rate of something like 1.6%. So I don't know how the RBA has the shame to, or whatever you want to call it, the gall, to say that Square's 100% least cost routed. If that's what they're relying on, please,
Well, it is, but they pocket the gap.
And they pocket the gap. So let's be really clear. So they charge you 1.6% and they shove it down the FPOS pipe and they pocket the difference. So all we're saying is, getting back to Miss Campbell's mum, let her get the benefit at the 0.5%. We recognise that we have to pay. Everyone has to pay to use this system, and it's a wonderful system. Happy to pay for upgrades, but we shouldn't be stung. One of the things we are getting stung is the fintech companies and the banks come in and say, you've got to pay for the cost of fraud. Everyone goes, oh, okay, that's fair enough. Everyone's got to share that cost. And that's embedded in this 1.6%. The trouble is, nearly all the fraud takes place offshore, internationally, using credit cards. So once again, debit card users are paying a higher rate than they need to cross-subsidise credit card users buying dodgy handbags or whatever that don't arrive.
All right, well, thank you very much for that. Thank you, Chair.
Thanks.
Thank you, Chair. Mr. Ferguson, what's your favourite beer?
2 years old.
2 years old. That's. I was going to say, if you walk into a big business and you buy a pot of Tuies, and you tap your card, same beer, same tap, is there anything different in the product or in the payment system that you use if you're buying that beer at a big business or a small business?
Yes.
Yep. And what's that?
In some of the bigger businesses, they don't surcharge. And the reason they don't surcharge is because due to their scale, they're able to enjoy what they call the strategic rate.
Yeah.
But basically, so the smaller the business you go to, the likelihood is it's going to be, say, 1.6. You go to a mid-sized pub, might be 1%. You go to one that's part of a bigger operation, 0.5%.
Yes.
With some of them, at least, I know quite a few of them are at 0 because of the scale they enjoy.
So the beer's the same, the pot's the same, the mechanism for paying is the same, but essentially a small business is paying more on that
So at one pub,
transaction.
it'll actually total cost to me will be $6 for the pot. At the other pub, it'll be $6.08.
Yeah. Thank you. And I was going to ask, we've asked sort of a series of questions over the last couple of days, and there are a few that I think people on this roundtable might have a better understanding of than the others. That average fee for small business versus big business, is that the same across all industries? And how much do you think it is that people are paying in terms of merchants as a small business versus a big business?
I think it's the same across industries, yes. So, like, for example, the rate, if we were looking at some of the rates that the larger organisations get, I think it was like 0.01 cent or something. So here, for example, the rate I was quoting earlier, the debit rate is increasing from 0.5 cents to 0.8 cents per transaction. So that's a per transaction monetary fee. Whereas the credit rate they're getting is 0.73, increasing to 0.82%.
So this isn't industry specific. It's literally
with
small
one particular
business
industry. That's the rate for them. But no, we hear it across all industries that our associations represent those small businesses.
Yes. So there's not a challenge with one particular industry or another. It is affecting every single small business. At the last roundtable, the industry roundtable, there was a discussion about this reduction in merchant fees, and I was wondering. If there has been a reduction in merchant fees over the last decade, which is what they said, has that been proportionate, or have small businesses not been seeing the kind of same reduction as large business has?
I think it probably, again, goes to the point, you've got the issue of like what the actual rate is in terms of percentage points versus the fact that more and more people are tapping. So what you're actually paying in dollar terms is much larger. So it doesn't feel like they're reducing if, you were paying 10 and now you're paying 20, 25. So there's probably two different ways of looking at, yes, even if your rate had become technically lower, the fact that you're, subsidising consumer choice to use the cards, it doesn't feel like from a dollar perspective.
Yes.
It's not something, it's like, say, over the last decade, it's not something that the AHA's tracked. We've relied on the Independent Payments Forum, who are expert in this, and if I could refer you to their submissions as well. And I know it's set out in there that the actual cost of merchant fees has increased. And, once again, we always hear from the banks it's because of innovation, and there's no doubt innovation has occurred, but it's no doubt also that I think their profits are increasing as well.
One of the things that certainly I've noticed over the course of the inquiry today and yesterday is that there's not a huge amount of data that can be pulled out and easily kind of identified on small businesses. Is that something that you've experienced as well? And, the lack of that aggregate data, as we've sort of anecdotally seen, does that mean that it's more difficult to be able to show and demonstrate the challenges that small businesses face in the broader, bigger, complex payment system?
If I could put it this way, and I probably sound like I'm having a dig at the RBA. I mean, they're full of incredibly intelligent people, right? But if you read their options papers, I struggle to understand them. You know, so no doubt. So they're all this sort of esoteric, wonderful, if this happens, that happens, at the top end of town. But as I say, stand in the shoes of the consumer, look at the terminal, 1.6%. Can you explain that to me? And if all they do is refer you to that paper, you'll have no idea. So yes, I'm sure there are people that understand this inside out, and the banks and everything. But when it translates to the foot soldiers on the ground paying the 1.6%, we got no idea, you know. And they don't use small business case studies in any of these materials that I've ever seen. It's all this sort of, you know, you'd have to go to La Trobe Uni or the ANU to get someone to, you know, to understand it.
So what's the way that, if a small business was going to shop around for a payment system, how would they do that right now?
Manually.
Yeah, jump on the internet and Google
manually.
Payment terminal.
And I think to your point now, it's also, you know, we have this across all of the areas where we're advocating for, you know, in terms of different small business definitions, and also it's such a broad cohort. So some of the data shows there's about 900,000 who are employing, but the other 1.7 million are self-employed, sole traders, partnerships. So they're a different cohort again. And if you're obviously in a retail premises, you know, the payment system you choose is going to be different than if you're doing a side gig at a local market. So it is difficult sometimes quantifying some of the data just because of the broad across all industries and this different structurally in the kind of business structures that are involved. So yeah, it is difficult.
But on Ms Campbell's point just then, does COSBOA, for instance, have like a program to educate its members on the best way to select the most efficient, cost-effective way to select based on their business and needs? Yeah,
so so traditionally COSBOA's role has always been in the policy and advocacy space over the last 40 years, but in the last 3 to 4 years we have, you know, thanks to some grants, started moving into the what we call the implementation phase of providing. We have a small business peak programme on the IR changes. We have the Cyber Wardens programme to educate small business around their cyber threats. So it is a space that we're moving more into, but it's not. We haven't got a comprehensive programme across all of our policy areas.
The only reason why I raise it,
so no, we don't. Is the answer.
The only reason I raise it is because I think you made the point earlier about awareness, and it just seems like that's the sweet spot to move into to better inform small businesses about what their options, rights, and abilities are.
We definitely will be moving into that space. And I think it's fair to say probably up until a year ago, small businesses probably weren't paying too much attention because everything just got washed through the system. You've got charged 1% or 1.6%, you pass it on to the customer, wasn't staying in their P&L, so it was less of a concern. But now the writing's on the wall, hang on, we're going to start wearing this cost ourselves. A cafe's margins, as you heard from Anne say before, that's 3%, but 1.5% represents 50% of their profit. Yeah. They're going to be highly attuned to, you know, to this tsunami coming, and we'll be doing what we can in discussions with whoever to try and strike the best possible deal.
I was going to ask, yesterday we had MasterCard and Visa in, and both of them indicated that they had small business programs, one which would result in a small business getting 50% off what they paid in terms of fees, and the other indicating that they would get 70% off what they paid in fees, but that it was up to the acquirer to pass that discount through. I guess my 2 questions on this are, firstly, do small businesses even have eyes on that? And secondly, would they know if their acquirer was passing that through or not?
Well, I've seen I've gathered statements from a dozen or so of our businesses just trying to understand
level of
what
knowledge.
A monthly statement looks like. Unless I've missed something, I haven't noticed that rebate.
Yeah, okay.
And that's from big operators, you know, like when I say from big banks and big payment service providers. So I haven't seen that
come
through. And again, I think it's just that the time poorness A lot of small business, realistically, it's like, okay, I've got a rate. I know if it goes up or down, but there's no transparency for them as to what's the scheme fee, what's an interchange fee. Most people would give you a bit of a blank look, I think.
I must say, when it gets to Visa and MasterCard too, and excuse me, this is a smart aleck comment, but I didn't really.
Doesn't allow those.
No, but I didn't realise they weren't a duopoly until I heard that. Yesterday. So, because I thought every time I pulled my card out and every time I tapped it, it's either Visa or MasterCard. So, like, who am I but a humble,
The last question I had was tokenisation, digital wallets. How is this impacting small businesses? Is it, or is it something that's going to wash through? Or, like, what is the primary concern for all, three of your organisations?
As I'll say, we're sort of concentrating on here and now with where we are. But what I do know, and I don't know that the banks or the payment sector has not been able to explain, is that why it costs, and this is sort of digital wallet stuff, why it costs more to process a transaction with your phone than it does with a card. Mm-hmm. When it's exactly the same piece of data that goes up the line. There's actually no difference in tapping your card on the side of a thing or tapping your phone on the side of the terminal. They'll charge you differently.
And in fact,
the actual cost of getting $1 from my bank account to the cafe's bank account is exactly the same as shifting $100, yet one will cost 8 cents and one will cost 80 cents.
I think we know the reason for that. Anyhow, thank you very much, Mrs. Campbell. I'll move on to Ms. Situ and then Mr. Laxal.
Thanks very much, Chair. And I really appreciate all of you being here in support of small businesses. I think we've heard very clearly that there is a big disparity between what big businesses are charged in terms of fees and what small businesses are being charged. When we asked the banks this question, they often said it was about volume in terms of number of transactions and the cost, and I mean the dollar amount that was going through, and that's why they were offering these rebates. I just wanted to find out from you, in your discussions with the banks, have there been any other hurdles that they've put up around why small businesses cannot be offered the same favourable terms as big businesses when it comes to transaction fees?
We have met with one of the big banks, and we got the usual, discussions around all those terms that no one understands. So it's not clear to us why the costs remain so high. But one thing I would say is that the banks often, or the payment providers generally, talk about competition, and they say that it's very competitive. When you get away from standing in front of the terminal to everything that goes on down the pipe and everything, that it's very competitive, and that they shouldn't have their scheme fees and interchange fees and that touched. What I'd stress to the committee is our members, the business community, and every Australian consumer does not want to rely on the hope of competition from a sector that haven't lowered their prices in a decade. What we want to do, we want to rely on the Parliament and the certainty of regulation. We can't afford to sit back and listen to these people, just say, oh, look, competition will solve all these problems. These are the people taking money out of our members' pockets and our consumers' pockets. And as my dad always told me, never take advice from someone who has their hand in your pocket.
I think it was interesting because in the RBA's consultation paper there was a lot of talk about expectations, and I suppose from our perspective we really support a framework where total costs are really subject to discipline and where regulators can act if reduction at the wholesale level are not being passed through in a timely way. So just noting a lot of talk of expectations, but I'd like to see outcomes.
And absolutely take your point, Mr. Ferguson, about competition. We heard a lot about it in the first day. Everyone seemed to think that that was going to drive down prices, but I agree, we haven't seen that to date. The other thing that was raised very often yesterday was around transparency. So if surcharging was to be changed, that somehow small businesses will then wake up to the fact that they've got to now pay these fees, and then they will suddenly go out and start to really interrogate what payment option is better for them. I know it's already been talked about today about just how challenging that is for a small business owner to be able to go through and sort all of that out. We heard from the ABA that they thought the role of a good business lender was to shield the small business owner from the complexity of those fees, and that they ultimately would see a flat rate of 1.1 or 1.2 or whatever, and that was actually quite a transparent way for small business owners to make these decisions. I just wanted you to talk me through, if I was a small business owner, how do I go about choosing what payment options I would like to offer or go with? And then how do they go and find comparable data and really make that choice? Like, just to put me into the mind frame of a small business owner, how do they wade through all this complexity?
If I could just open by saying, when you look at the level of complexity and the lack of transparency in the system, it was startling. I mean, and of course the banks or the payment providers would say that. That all what they'd say, oh, we need to shield you. Like, we don't need help being shielded from the lack of transparency and the complexity. Our members do seek simplicity, but that's no reason other than for a bank to say yesterday that they needed to shield their customers. It just goes to show they're sort of happy with the lack of transparency and complexity based on that shielded comment. But the small business, as I say before, they're probably going to be tied to their existing financial sort of structure. With the bank, with their home mortgage, with their business mortgage, where their business banking occurs. That's the first place they'll go to advice. They may look somewhere else on the internet to get the advice. But that's along with every other thing they're trying to do in terms of keep their businesses going.
Yeah, and I think there's probably an element of bundling as well, because, if you're already banking with a bank, that you're more likely to be able to get a business loan, for example. So it's probably not, always good sense to have all of your banking infrastructure within your small business spread across multiple providers if there's an element of bundling that gives you discounts in other ways.
Just one other thing I'd say, Ms Ito, is that where we're lucky today is that surcharging is allowed. And the only reason this inquiry is occurring is because the sunlight's been put on there by people complaining about the cost of their coffee or their beer and what these charges are. If the credit card companies get their way and all these costs are hidden, consumers won't be aware of it anymore. They won't be driving politicians mad about it. And for them, the problem will go away. Happy days. And, there'll be the odd inquiry into how much they're charging as businesses bleat. But at the moment, consumers are aware.
I think as well, at the moment, the consumers have, if it's a $5 coffee, they've got the choice to go and take the money out of the bank and pay for it with the $5, or they've got the choice to use their card. If we had least cost routing, it would be more obvious to them, even if it was surcharged, that, OK, right, well, I can really make a saving by routing it down this channel. That's an education piece. But at the moment, the surcharging does facilitate the consumer choice element, even though perhaps that's not appreciated.
Great. I just had one last question, if I can, Chair.
Yeah.
And your recommendation around least cost routing as being mandated. This was a proposition that was put to the RBA and other members yesterday, and they said that if we were to mandate that, it would stifle innovation and it would make it harder for smaller payment options to come through. I just wanted to put that to you and get your views on those counter arguments to mandating least cost routing.
You said, oh, of course they'd say that. Of course they'd, like, seriously, of course they'd say that. They've got the choice now of charging someone 1.6%, shoving it down the pipe themselves, pocketing the 1.1%, and we're saying we want that rort to stop. You know, like seriously, they're Chicken Little. Every time they come in and they say, oh, the sky's going to fall in if you do that. Stand in the shoes of the consumer and go, like, let's once in our lives, let's back the consumer. Forget about, these people are making billion-dollar profits. Instead of making 10 billion, they might make 9 billion. Pull the trigger. So let's provide business with the option to opt out to have mandatory least cost routing and see what happens. And if the banks fall over and the payment system collapses, well, go back and change it, and blame us. But please don't fall for this smokescreen and this Chicken Little, attitude from them. They're the ones that made the system so complex. They're the ones that made it lack of transparency. That's so confusing. I don't know how anyone understands it. So when they do say, oh, if you do this, the sky's going to fall, and everyone goes, geez, they must be right, because no one understands it. No one normal in the street understands it. Let's just say what's best for the consumer, do that. If we're wrong, change it back.
And I think as well the point to make is, we find this across many policy settings, is that small businesses obviously often in a rock and a hard place. They are consumers themselves. Again, obviously then they deal with what we traditionally think of consumers, but small businesses are consumers, and due consideration should be given to them. We've long advocated for least cost routing, as has the Australian Small and Family Business Ombudsman.
I'd suggest that if you took a policy to the election and said we are going to insist on the banks processing every single transaction the cheapest way possible, I reckon there might be a vote in it.
Thank you. Is that it for you, Mr.
I'm off the high horse now, Chair. Yeah.
No, it's okay. You get a great view from them. Trust me, I've ridden a few in my time. So you're good, Ms. Situ?
Yes, thanks, Chair.
Okay. I don't know if you've got any questions, Mr. Luxell. I don't know if you're engaged in this policy topics.
Maybe you can get back on your high horse, Mr. Ferguson. So cash use has plummeted 70% in the last 20... In the last 20 years, cash use has gone from 70% down to like 15%. It's forecast to drop, in single digits by the 2030s, replaced by cards, right? So, and I think that's where your pain is coming from, that increased cost in processing payments, whilst the big companies say the percentage interchange fees have come down. I think the problem for small businesses is that the scale of use of card payments has skyrocketed, right? Particularly after COVID, and it doesn't seem to be stopping. Can either of you just provide the scale in that 20 years of the change, the cost to a small business from feedback from your members?
Look. One thing I'd say about cash is, and it's a little bit misunderstood, but I've talked about this with quite a few members, is that cash has a high element of fixed cost with it. So whether you're processing, when a pub was processing, say, $1,000 or collecting $1,000 through the till a day, the cost to collect, process and make safe $100 is still the same. Someone's got to provide the float, someone's got to prepare the float, someone's got to skim the float during the day, someone's got to count the float at the end of the day. So yes, there is a little bit more work if you need a bigger float to manage a bigger cash business, and yes, you've got to do a bit more counting at the end of the day. But a lot of it is a fixed cost. So that fixed cost has stayed there. In terms of the cost to the business, and I put some figures in this submission, and you'll find that sort of the average size business, if you're a $6 million pub, where is it? Well, it's up 1%, you're probably talking about $60,000 in cost. If you're a $1 million business, news agent or something, you're talking about $10,000 in cash. Now, that cost was 10 years ago, was probably, for the $1 million business, probably $1,000.
Well, merchants were paying you to use, there were negative merchant fees. Like
when there used to
originally.
be banks.
Yeah.
When there used to be banks that were open.
Yeah.
You know. So the whole payments, and this is just sort of a bit of guesswork, but the whole cost of processing payments, whether it be cash or card or whatever, is still going on. Cheques are still very much in use. They're quite popular amongst certain of my family members as well. Very disappointed to see cheques go. But, you know, they all form part of the system, and I think the costs are significant, especially given that cash has a relatively fixed cost to it.
And one of our members of the Post Office sort of made the comment that, especially in regional areas, when there was $1 in cash, it would then keep circulating, that dollar keeps circulating around the community. Once people are tapping and then there's the fees on top, it's a different equation. And then obviously with cheques on the way out, it's a major problem with outages. You know, then nobody's got any means to pay, and sometimes outages can last up to 2 weeks in some of these regional remote communities. So there's a reluctance to see the end of cheques, especially in regional Australia. They've just got very unique and different challenges in some of those communities.
So it wouldn't be a surprise for some of your members to pay tens of thousands of dollars a year in fees to accept.
Oh, it's
Visa
pretty
and
more.
MasterCard.
No, it's
more.
pretty simple. I mean, if you just say 1%, which would be a good-sized business, then times it by their turnover, that's what they're paying.
Yeah.
I was talking to a pharmacist here, he said 20,000 a year. We pay.
Yeah.
Yeah, I mean, ours, you know, like a middle-sized country pub would be $30,000 to $40,000 in payment costs. That's just for the electronic side of the business, not for the you know, Armaguard cash management side of the business.
Is not accepting Visa or MasterCard an option for your members?
I doubt it. You know, businesses have to be customer focused, and they've got to look. You know, whatever the customer wants to pay with, they'll accept. Whatever products they want to buy, they have to, you know, they have to sell them. So I don't think anyone would say, you know, don't do it. I mean, you see that now with some businesses being completely digital. And that's to get rid of this whole cash fixed cost problem. But no, they have to accept everything.
We've had a lot of questions and discussion about the difference in pricing between large business and small businesses. And, you know, we've had evidence at past inquiries that on $100 for Coles and Woolies, as an example, their costs would be 1 or 2 cents. For some of your members on a blended rate, it would be $1.10, $1.20, $1.50. A hypothetical to you, both of you, if your members had the same pricing as Coles and Woolworths, would they be likely to surcharge if they were only charged 1 or 2 cents on that $100?
Well, 1 or 2 cents is not even currency anymore, is it? You know, so you'd be pretty brave to have a charge of 1 cent and then try and pass it on as a 10% increase on, you know, $100 and 10 cents. If we were down that, if a business was down that low, no, they wouldn't pass it on. Whether that's feasible, I don't know. It might be feasible in the new world with stablecoin technology and what have you. But no. The business has to pass on the cost, whatever cost there are to their customers. So whatever it is what they'll pass on. If it's 1 cent, it'll get absorbed, but...
But at $1.50, $1.20, $1.30...
That's got to get passed on. That would be just my common sense.
Similar feedback, Ms Sutton?
Yes. And noting as well that not all small businesses do surcharge. There's quite a lot that already do absorb the cost depending on the industry.
Some people can't. Pharmacists can't, for example.
Correct.
They can't
and use
surcharge.
agent lottery tickets. Where they're agents and, you know, then obviously it's not feasible to pass on the cost.
And some don't because they don't want to upset their customers as well. They're prepared to wear that.
So there's a lot of cross-subsidisation, but then, you know, for example, if a pharmacist is then cross-subsidising on their over-the-counter products, they're paying more, you know, the price of their hairbrushes might be different to Coles and Woolworths who have different transaction costs. So,
we've had Visa and MasterCard talk about strategic small business rates. Small business rates. They mentioned a Canada model. I think the RBA have acknowledged that they've received a lot of feedback on the difference between big business and small business. My fear here is when the recommendations come out, that the definition of what a small business is might be too narrow to capture some of your members. Could I just get on the record sort of what you would see a reasonable, if it's based on turnover or size or something, what would you see as a reasonable definition of small business?
It's certainly not, as I understand,
100 grand.
this
Yeah.
100 grand.
Yeah, no, that's ridiculous.
I think you'd have to be looking at it, I'd say 10 million.
Yep.
But I think there's 20 different small business definitions, so...
Yeah. But in the context of, a family-owned pub or a pharmacist or a service station...
I mean, I'd love to say 20 or 30, but, Sure.
Yeah, we usually talk in terms of the ATO definitions of 2 million for a micro business and 10 million for a small business, and then obviously tied in with either, then obviously the Fair Work Act talks in terms of number of employees, and sometimes it's more appropriate to talk in terms of the number of employees rather than turnover. So like if you look at the car dealership industry, there may just be 1 or 2 employees, but easily go over some of the thresholds because of the nature of the goods and the price of the goods that they're selling. So,
well, I've seen up to 50 million as a definition for a small to medium business, but for like a I don't know if you represent any service stations, but that'd be a very high turnover, low margin business.
Yeah.
Some of the pubs as well could be high turnover, lower margin, so around 10 to 20 million is sort of what you're saying for turnover in that space. Yeah.
Better guess.
Terrific. Okay.
Thank you.
Thank you for that. I'm just conscious you're at a bit of a disadvantage, SPAA, in terms of not being here. Are there any final comments you want to make before I wrap this up?
Yes, thank you. Thank you very much for the opportunity. I would like the committee to seriously consider, we're talking about technology, etc., but we need to be starting to look at cost factors, because whilst a cost factor may be just a one-off, don't forget small businesses have got a lot of cost and they are operating generally on very low margins at the moment. They do have a high cost of doing business. As to a definition, we actually prepared a paper, and I haven't got it in front of me, about the average turnover based on ATO facts. And the general turnover of a small business is very, very low. When we talk about 10 million, 150 million, that really is in the minority, not the majority. So I'd like the committee to seriously look at how do we unburden the burden of higher costs. Technology is great. We accept it. Innovation's great. We accept that. But we've got to look at also cost factors. And I do thank you.
Thank you. Thanks to everyone for appearing today. The committee secretariat will contact you in relation to any matters arising out of today's hearing, and you'll be sent a copy of the transcript of your evidence and have an opportunity to request corrections to transcription errors. With that, I'm just going to take a short break to 12:15, and then we'll go into the blockchain crypto session. Thank you.
Thank you.
thank you.
welcome representatives of the Digital Economy Council of Australia, Bitcoin Policy Australia, Australian Bitcoin Industry Body, Coinbase and Kraken to give evidence. For the Hansard record, please state your full names and the capacity in which you appear before the committee. We'll start this way and move down.
Jonathan Miller. I am the MD of Kraken for Australia and our global business as well.
Bayani Mills, CEO of the Australian Bitcoin Industry Body.
Ashley Porter, founder of Bitcoin Policy Australia.
Liam Hennessy, partner of Thomson Gear and secretary of DECA.
Alec O'Sullivan, head of operations at the Digital Economy Council of Australia.
I think there's another person joining us online. You just put up your hand. Yep.
John O'Loughlin, Managing Director, APAC, and Country Director, Australia for Coinbase. Thanks.
Okay, thank you. So if we get you all making opening statements, we'll run out of time. So can we, I don't know how we do this. Can I suggest that just the industry associations make the opening statement and then we'll explore positions out of the individual, like out of Kraken and Coinbase. I'm sorry, before we go, it's just been pointed out, before we proceed, I should advise you that although the committee does not require you to give evidence under oath, the hearing is a legal proceeding of the Parliament, therefore has the same standing as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as contempt of Parliament. The evidence given today will be recorded by Hansard and attracts parliamentary privilege. Now, what I was going to suggest is if DECA, Bitcoin Policy Australia and Australian Bitcoin Industry Body, if you've got any opening remarks, brevity is your friend. Feel free to make them, and then what we'll do is we'll open up to questions, if that's okay. So who wants to jump in? Right.
Right. Chair and members of the committee, thank you for the opportunity to appear today. I am here in a voluntary capacity as a founder of Bitcoin Policy Australia. Our goal is to educate policymakers and journalists about Bitcoin. I care deeply about the economic system my two sons will inherit, and that is what has led me to study Bitcoin. However, learning about Bitcoin is a bit like learning to drive. A little knowledge can be a dangerous thing. Recent policy history in Australia reflects that reality. In that context, I have found that analogies help. The submissions received by this committee and the subsequent email communications relied on open source protocols, in this case HTTP and SMTP. Those protocols were gifted to us and have been maintained on a voluntary basis for nearly half a century. They are open and permissionless. The committee did not pay a gatekeeper fee to use HTTP. It does not need anyone's approval to build on or use SMTP. We adopted these standards simply because they represented a better form of communication. Bitcoin is similar. It is an open source monetary protocol that was gifted to us 17 years ago so that anyone can transfer value without needing permission from a third party. That is directly relevant to this inquiry. As was clear from yesterday's sessions, card networks are highly concentrated, fees are opaque and merchants lack bargaining power. Chair, yesterday you used a barroom analogy, describing incumbents jostling inside the venue to protect their position while consumers and small businesses bear the cost. However, there was something important missing from that story. There is a competitor standing outside the venue. Bitcoin and its payments layer, the Lightning Network, operate 24/7 and clear at near zero marginal cost. It is notable that Visa has integrated Circle's USDC stablecoin into its network, reducing costs and settlement times for its institutional clients. The question for this committee is whether those efficiency gains will remain internal to large institutions or whether Australian merchants will be permitted to access similarly low-cost settlement rails. Globally, we are already seeing production deployments at scale. Pick n Pay has rolled out Lightning payments across 1,500 supermarkets in South Africa. Block has integrated Bitcoin and Lightning into the Square terminals. Bitcoin is not a company. It is not a token issued by a promoter. It is not a platform seeking venture capital returns. It is an open protocol. History shows that jurisdictions close to open protocols at their inception capture much of the economic upside. The standards associated with the internet were developed primarily in the US. As a consequence, today many of the largest companies in the world are based in Silicon Valley, not Australia. When steps were taken to exclude Bitcoin from the definition of foreign currencies and stored value cards, I don't believe it was based on malintent, but rather a lack of understanding of this historical context. Australia has a choice: treat Bitcoin as a speculative anomaly or treat it as a competitive payments rail deserving regulatory neutrality. We are not asking for endorsement. We are asking that Australian small businesses be allowed to access the lowest cost payment rails available to them without tax or regulatory distortions. Thank you.
Thank you. Now, I understand the Australian Bitcoin industry body and Bitcoin Policy Australia provided a joint submission, correct?
That's correct, yes.
Okay, so maybe if DECA provides its opening statement, and then we'll open it up to questions, starting with the Deputy Chair.
Thank you, Chair and committee members. The architecture of money is changing. Upgrading our financial rails is essential to lower costs for everyday Australians, and we have 3 critical priorities to achieve this. First, we must correctly define digital asset wallets. Developers providing pure technical infrastructure who cannot unilaterally move user funds must not be regulated as financial custodians. Second, we must protect the economic utility of stablecoins. As this committee noted yesterday, legacy systems impose small businesses with ad valorem, percentage-based fees that scale up alongside inflation. In contrast, stablecoin networks operate on flat, transparent fees, settling domestic payments instantly for a fraction of a cent. To unlock these savings, everyday stablecoin transfers must have regulation and broader policymaker support. Third, we must address the ongoing challenge of debanking and network access. We acknowledge and welcome the government's progress following the 2023 reviews. However, barriers still exist, often residing in the rules set by private infrastructure bodies. Mandating transparency around account closures and access denials will give policymakers the visibility needed to ensure compliant innovators aren't quietly locked out of the system. Finally, regarding supporting policymakers, regulators and industry and consumers, I'll now hand over to my colleague Liam.
You won't be doing that.
Okay.
I'm chairing it. Okay, over to questions. Deputy. Sorry, but I just got to keep it moving.
No, that's fine.
Go, Deputy Chair.
Thanks, Chair. I'm going to ask a question of the 2 exchanges, Coinbase and Kraken, but just want to give one sentence each of you of what your company does, just as context maybe for the committee and secretariat. Kraken and Coinbase.
Sure, Jonathan Miller here from Kraken. So Kraken is a global cryptocurrency infrastructure provider, including exchange and payments technology. We offer marketplaces and also payment systems, including point of sale.
Thanks, Jonathan. Coinbase, similarly founded in 2012. Simple idea that anyone, anywhere, should be able to send and receive digital currency easily and securely. We're publicly listed on NASDAQ in the United States and provide services to millions of verified users across more than 100 countries, and are fully incorporated with the local business and boots on the ground in Australia with Coinbase Australia Pty Limited.
So, great. And I think that's important. You're both operating internationally, Coinbase over 100 countries, and you're doing it in currency exchange. So I think getting that international perspective and where Australia sits is important to us, I think, as a committee. And I want to talk about stablecoins first. Can you talk about the benefits of stablecoins, what they could have to Australian consumers and Australian businesses in general, and then talk about what would the Australian government have to do to enable these to be realised quickly, and how quickly is quickly?
I'll briefly mention some items. Firstly, stablecoins today, and I echo the comments of the DECA policy advisor there, on the flat rate nature of open source blockchain rails, which are global inherently. This is radically different to the kinds of rails that we have heard of being described of yesterday, operated on proprietary closed networks, very concentrated. We're talking about distributed networks here, and there is immediate benefit for individuals, especially who are facing high fees for cross-border payments. You know, the global average for those is 6.5%. You can compare that with the flat rate fee. That would bring, you know, costs of sending money internationally down to below 1% on average. Not only that, domestically, there are very, very real opportunities to enable P2P payments with less intermediaries in the Australian market. And with less intermediaries, you will see less cost. I think that's the clear observation I made from yesterday was the number of intermediaries involved in every transaction in Australia, and we can cut those down using these kinds of open source payment networks. In terms of what we can do, I think one of the big blockers, and what the government can do, one of the big blockers to adoption has been the regulatory uncertainty. We welcome the digital asset platform, digital asset facility legislation that is progressing. However, what we're seeing in other markets, and this is some international context that perhaps John at Coinbase can refer to also, specific regimes that are designed to enable the use and adoption of stablecoins. In Europe and also in the US, the Genius Act, we're seeing specific acts that target this particular type of technology. I think there's some clear steps that Australia can do to echo and to mimic those.
Thanks, Jonathan. +1 to the commentary from Decca. I don't think the high street and even people in the kind of traditional financial networks understand the speed and atomic settlement capability of stablecoins, and all of those metrics that Jonathan's referring to in terms of 24-hour settlement. They're never closed. They're always on chain. The robustness and the security of them via a peer-to-peer network is better than a single point of failure that currently is hampering banks and airlines and other large technology networks. In terms of timing, we're grateful the government's prioritised DAP legislation currently being considered in Parliament, but we would hope a similarly expeditious process would follow for a stablecoin framework and a regime to deliver rules for the Australian market this year. Important to note that 99% of global stablecoin transaction volume is currently in USD. There are moves for promotion of a Euro stablecoin. That's been happening at speed, driven by the private market. If we continue without a deliberate strategy, there's a risk the Australian dollar is underrepresented in global payments. And our founder, Brian Armstrong, talks about bringing stable coins kind of on-chain to mirror the value of FX on-chain. And if you look at FX, about 60% is USD, and then a variety of pairs and trades in foreign currencies that match the strength and volume of those currencies typically. So we think that should be mirrored in a stablecoin environment. The benefits to consumers are very clear, particularly with a younger cohort who are already employing these. And we've had great outreach from a number of parts of the bureaucracy in Canberra, and we'll continue to like to advise on that.
And just when you say the benefits are clear, can you step those through, though, in terms of, I understand from value pools, there's much more value in foreign currency being trade finance, remittances, large volumes being transferred internationally. And there's more value to be saved, saving what the super profits banks are making on that. But let's go straight to the retail, small business. What would be the benefits for them in these transactions? And from a technology point of view, what do we have? What do we need that we don't currently have?
Yeah, so I'll jump in here and I can dovetail with Jonathan. I mean, lower cost transfers cross-border on, for example, our blockchain, a layer 2 blockchain base. You can execute stablecoin transfers in less than a second for less than a cent anywhere in the world. And so an example of that.
Sorry to interrupt, John. So does that mean you could essentially pay for any transaction?
If the counterparty... Yes.
Is that what that means?
If the counterparty's using USDC, which the stablecoin Coinbase is working with a Circle or other stablecoins, and they have the wallet or technology there, and to do so, that is possible. A great working example we've been close to, and we saw this in e-commerce in a previous generation, is fresh produce providers in northern Queensland shipping to fresh produce importers in China. Both of these groups in both countries already have difficulty getting trade finance or bank accounts at the most simplest level, and then they can receive and send USDC or other stable coins and effectively pay each other in a digital fashion atomically. That is happening now in Australia, across Southeast Asia. The remittance channels are very well understood and highlighted with students, migrant workers, populations across South Asia, Polynesia. These are very important things for the Australian economy. And there are large cohorts of the population who actually can't they struggle with the current cost in the payment system, let alone what most consumers are facing.
And is there anything to stop me getting technologically wise, getting a wallet, like I have an Apple wallet on my phone, actually tapping a terminal and buying a coffee with a stable coin from a technological point of view?
Jono.
I would say yes. I would say yes, there is a barrier today, which is that merchants don't have the confidence to accept these because of the confusion around the regulatory framework. It's hard enough for them to understand the fees in the existing structure. How do we expect merchants to consider an option that from the outside looks like it doesn't have a regulatory footing? I think that's a big and the benefits. Sorry, go on.
Yeah, not to put words in your mouth. Technologically, you're saying that's absolutely possible. What's stopping it is government has not created a clear regulatory pathway for the technology providers to offer that option. Is that what you say? Am I understanding you correctly or not?
Yes, my point is that you can install wallets, but I think most businesses would be unsure as to whether or not that would be legal, and that's a big problem.
We installed in an existing payment terminal at a cafe in Five Ways in Paddington, possibly the most expensive place in the world to buy a coffee, let alone the fees associated, even amplifying that. But late last year, we talked to a merchant in a matter of hours. We had helped him navigate his way through a Coinbase app and then an additional wallet. He had fueled that with Ethereum and then bought a stable coin. The first time through, like doing anything, is relatively straightforward. There's lots of guidance, and I would say if, unlike most of the people on the committee today and myself, people under 30, under 25 do this in a matter of minutes, and so this will be table stakes if the regulation is there to give all those merchants that confidence.
Thanks, Deputy Chair.
Okay, so technologically you can do transactions...
Sorry, Deputy Chair. Sorry, because we've been horrendously over time and everything, I'm going to try and keep it going, and if we've got spare time, I'll come back to you.
Can I do one last question then? Can I do one last question? Okay.
No. I'll come back to you. Bear in mind, I've given up my time for questioning. Okay, Mr Laxale.
Thank you. I don't have too many questions, Chair, but I just want to get, perhaps from all of you or I guess just an understanding from you, like do you all believe that stablecoin, Bitcoin, cryptocurrency, I know that's controversial calling all of them the same thing, but has the potential to disrupt this duopoly that exists in the consumer payments system?
Absolutely.
Yep.
Yep.
And do you think are there market forces at play that are effectively restricting your access to achieve that in terms of...
They're not market forces, they're policy settings.
Yeah, so there's policy settings. Would you mentioned, I think someone online mentioned that they were able to install upgrades or software on a merchant terminal for payment to go through a stable coin. Is that technology available broadly now across merchant terminals?
Yeah, significant. I would disagree that it's available broadly.
Yeah.
I would also suggest that there are significant barriers to maintaining bank accounts if you start engaging with digital assets. That's been documented, I think, by others and other submissions, and is a very important factor in the delayed uptake, in my view.
Yeah.
But there are technology solutions that are quickly coming to market. You know, what Square is doing is you can take the Bitcoin and immediately turn it into fiat. You can hold it as Bitcoin. You know, it's all embedded in the same
Immediately
device.
turn it to what? Sorry, what did you say?
Fiat. So fiat, yeah.
Yep.
So technology providers will provide these solutions. The policy settings will accelerate it. All you need to do is open the bar door and let us in.
Member, if I can perhaps be helpful, think about blockchain in terms of it's an entirely new infrastructure layer. To think about the individual tokens, whether they be tokenised money, whether they be something new like Bitcoin, or whether they be tokenised bonds or securities, is probably a second order thought than this is a new way of transacting with each other. All governments around the world are now in a sovereign competition to see who can regulate this best for the benefit of our regulators like ASIC, APRA, AUSTRAC, for the benefit of capital, for the benefit of consumers. It's really tricky, and obviously where you can transact value for good purposes, like our Queensland farmer, you can transact value for nefarious purposes. So there does need to be a regulatory setting. I distinguish myself from my friend at the Bitcoin Association to that extent, but getting those, the legislation that ASIC and Treasury has rightfully put a hard amount of work into and should be commended for, will continue to be iterative, given this is one of the most innovative spaces in the world. That will be our experience, I suggest, as it is the experience of the US and the EU. We will not set and forget this legislation. So what governance structures we have in place to help innovators like Kraken and Coinbase as they go through in navigating the regulatory settings, the commercial settings, the consumer settings, is to our national benefit.
Would you say our consumer payments system at the moment is dominated by Visa, MasterCard and the banks?
I think, sorry to jump in ahead of my colleagues, the Albanese government commissioned a review of debanking about 3 years ago. It was narrow, it focused on the big banks. They had some good wins that came out of that. In terms of, I think it was Jonathan from Kraken who mentioned, between the issuer and the end consumer, there is a spaghetti of financial services institutions. Some of them we know and love, like the big banks, are the ones at the payment processors. We also have member bodies like the Australian Payments Plus and the Australian Payments Networks who set policy settings, but the government's own research in 2003 said we have a lack of empirical data here. It is hard for you to make effective policy to support the income of capital and to support your end consumers where you have a lack of empirical data. That is one practical suggestion I would respectfully submit to this committee.
Sorry, can I just ask quickly, did you say there was a report commissioned into debanking 3 years ago? Has that's been finalised, report presented?
That has been finalised, report presented. It is a very short report from the Council of Financial Regulators. They focused on the big four banks and they made some very legitimate suggestions which were accepted by Dr. Chalmers. The banks are one player in our payments networks, and we have other players in there, including policy bodies that are not subject to the same oversight.
Okay, thank you.
Does anyone want to add anything? Yeah, I think I've got a hand up there. John?
Yeah, thank you. Just on running through a few of those points to amplify them and give a bit more detail, on the point about terminals, all of the most advanced technology, whether it's Square, Stripe, PayPal, etc., have all moved into this space with billion-dollar-plus investments. And to the previous point, this is a major move forward to the legacy payment terminal systems that most of the big banks are providing and still tied to. In terms of market forces driving debanking, that is real. And to the Kraken representative's point, we recommend that the government legislate these Council of Financial Regulator recommendations as binding requirements on the banks and consider a right to basic banking services. In most situations, we believe that consumers are choosing the fastest, cheapest, efficient solutions in the market. Over 1 in 5 Australians have digital assets. That number continues to grow. It's particularly growing at two ends of the bell curve with younger people and with elder people who are moving in terms of investment, younger people more for utility. But debanking is a real issue that has not been heavily covered in the last couple of days. It's particularly problematic for everyone on the panel, particularly problematic for venture investments in Australia, particularly problematic for major Australian unicorns like Immutable. And this is something we feel we should highlight very firmly.
Yeah, when I was setting up a bank account for BPA, I called it BPA Research and Advisory because I just knew I was going to have problems.
Yeah. Just last question from me. In one of the submissions, I think CBA characterised Apple's dominance in digital wallets and called them gatekeepers, right? So they've got this and restrict access to their NFC. Between Visa, MasterCard, Apple, Google, do you think, given consumers' reliance on these networks in current settings, do they have the potential to gatekeep your technology from eating into their margins and profits over the short to medium term?
Quick answer is a good answer.
Yeah.
Yes.
Yeah?
Yeah.
That's a good answer.
It will become very difficult, though, for Apple to, as these apps proliferate, particularly in a web version, a home screen app on your phone, it gets increasingly difficult for them to, prevent the proliferation of the technology. It'll be political suicide for them to try to do it. And also, the fact is, there's not enough money on the table for them to bother. They're not stopping Wallet of Satoshi on my phone because the fees that Wallet of Satoshi are charging, Apple can have 50% of the fees and it's not going to do them any good.
Yeah, righto. Yeah. Okay, Ms Situ, your 10 minutes starts now.
Thank you. I've really just got 2 quick questions for the group. One is around the idea of trust. I think we would all agree that our payment system and financing all relies on a great deal of trust from consumers. I know that you've spelt out some of the regulatory work that government needs to do, but what are you doing as newer entrants into this market to engender trust with consumers and businesses that you are a good way for payments to be made?
I'll just briefly speak to this, if that's okay, Chair. I think, honourable member, the key to building trust is education, and I think we would all agree that that's a critical component with any new kind of innovative industry, but also technology, that there's a learning curve. And that's been a very big part of what we, as a business, a locally registered business, we have 2 entities in Australia, one AFSL holding, both Austrac registered. We are very committed to education. We are engaged at grassroots levels in community. We have lots of resources. I think that's the key. And that goes all the way through to financial literacy as a general theme that I think that the Australian Australia doesn't rank necessarily very high on financial literacy, and I think that's critical. So we're committed to that, and I think that's a big part of building trust. The other side of building trust is being compliant, and we believe that we are extremely compliant. We have invested heavily in compliance, and to a certain extent, we rate compliance. Rate ourselves as potentially more compliant than some of the businesses that fund. That clients use to fund us. And so our cost of compliance is very high. That is because it's a deliberate act in order to ensure that we have really strong, trustworthy user base that then when people engage in a marketplace, they can be confident the counterparty is absolutely as real and as compliant as they are.
Maybe this is one primarily for the exchanges, and then maybe the industry body can add additional colour, a +1 to all of Jonathan's comments around education. There are lots of resources in-app on education and lots of guidance for people to take very cautious approaches when choosing their education. And we keep upskilling that and lots of prompts and road marks for people inside the apps. I would say in terms of human capital, the digital asset industry is fortunate in that it can recruit some of the very best Australian human capital in the business and be able to pay for them. Compliance professionals are expensive. They need to have experience. Many of us, and in the case of Coinbase, have hired from ASIC people with experience at the ACCC, Ministry of Internal Affairs in New Zealand, a number of people from the big banks and leading institutions. In terms of security around technology, and this is particularly relevant in Australia, which has repeatedly been ranked amongst the poorest performers in corporate cybersecurity. In the case of Coinbase, we don't use any third-party security software. We don't believe it's good enough. We develop it all in-house. And we have a number of major obligations, being one of the few and the only or large-scale digital currency exchange that's publicly listed. So to Jonathan's point, that human capital and that compliance element are paramount. They're what keeps us up at night and how we drive our business. I would say, in comparison to the banks and TradFi, in recent years, I would confidently say, hand on heart, in most cases, we are better at assisting law enforcement with transaction monitoring than potentially the big banks, because while the blockchain is quasi-anonymous, if we receive a request from law enforcement to investigate wallet addresses or other details of transactions, we can go back many previous transactions, and in a number of cases, presage waves of scam and fraud coming into Australia. What is particularly disappointing is that when our global intelligence and risk payments teams do this together with other exchanges, because we have a policy called the travel rule, which allows us to have to kind of disclose wallet address, as well as a system to share wallet addresses from nefarious actors. We bring that information to a number of the big banks in Australia and wave a flag and say, hi, we've seen some issues propping up with some of your users. We just provide account numbers. We don't breach any private information of consumers, private protection. And in 9 times out of the 10, the risk payment teams at these banks will tell you they're busy, get something in the calendar for a couple of months' time, and we're seeing this unravel in real time in front of us. And so that, in this day and age of technological advancements and time compression and responsiveness, is quite shocking.
Okay, sorry, next question.
Oh, and this is around, and you touched on scams as being a big issue and the role that you can be playing. My understanding is that you currently sit outside the scam prevention framework. Is that correct?
No, there are a number of various data sharing pools and technologies and alliances that the government, in particular Minister Charlton, have been driving to improve cybersecurity and address these scams and frauds. We put people into the AFP's joint cyber unit in Surrey Hills, literally putting people in there, working with them. We work with the Anti-Scam Centre. We work with the telcos, the banks and the social media platforms. We're on the front foot on this, but there continues to be...
I might reframe my question. Are you explicitly included as needing to comply with the scam prevention framework? Would you come under the specific codes for industry?
Can we just get the industry bodies first to answer before the individual players, if that's okay?
In regards to the specific...
To what was just asked, are you specifically included? Ms. Situ asked the question.
None of our members are. In fact, we've tried to get on the board of the National Anti-Scam Commission, and we've got crickets.
Yep.
So you would be willing to be explicitly, you'd be championing that to be explicitly included?
We don't want to see consumers scammed at all.
Yeah.
It's not in our interest, right? It's not a benefit to anybody. But we find that for most parts, engagement with regulatory bodies in particular, it's just crickets.
Decker?
Thank you, Chair. The Australian Scams Alliance is one of those member bodies akin to Australian Payments Plus that I mentioned before. My understanding is that almost all of our members would leap at the opportunity to be a part of that body, in particular our friends in the global exchanges, because it's just such a powerful way to build trust. With our policymakers, regulators, and ultimately for our consumers.
Good point. Ms. Situ?
Thank you. If I may just draw a conclusion from what I've heard there, is it right in me concluding that you would welcome the opportunity to be explicitly included in the government's scam prevention framework that is being rolled out? Currently, it covers banks, telcos, and the social media companies.
Yes, in particular around education. So much of the current framework is around restricting access to for the financial system rather than providing educational gateways that can better ensure that consumers are well informed about what they're doing rather than simply restricting them from access.
If I may make a very brief comment to that point, there's a lower hanging fruit opportunity, I think, to enable better scam prevention, which is the charter for the Australian Financial Crimes Exchange, which is a data sharing organisation, currently doesn't allow offshore operators or operators with an offshore nexus to be participant. So that is something that I think would be an immediate short-term benefit to all Australian consumers, is if global exchanges could be participant members of the AFCE. Okay. AFCX, excuse me.
Just in closing, I think it is worthwhile, commending the directional framework of the government and their work in terms of looking at the origination points and the early transaction layers of these scams, and that is the digital platforms, the telcos and the banks. Stopping scams upstream is far more effective at scale than trying to remediate it downstream. And there has been a lot of movement by many of your colleagues in that area.
Terrific. Thank you.
Thank you.
I'll now move on to Ms. Campbell.
Thank you, Chair. And I was just going to follow on from Ms. Situ's questioning with respect to not consumer trust, but small business trust and small business confidence. We've been talking a lot in the last couple of days about the complexity of the system. Given that small businesses are incredibly busy, Mr. Miller has said that there would be some who are quite unsure about the technology. They had limited time in order to sort of go through these things, and they watch on their televisions at night as FTX collapses. In that entire environment, I understand you've talked about education. I understand you've talked about regulation. Specifically, what for small businesses is going to give them confidence when they are time poor, worried about risk, and need something that they know can work?
If I could just jump in there. I would draw an analogy with the iPhone. In 2007, the iPhone was a fundamentally different form factor. And for a lot of people, it would have seemed like, alien compared to what they'd been used to using. But 5 minutes after your friend has shown you the functionality of an iPhone and what it can do, it's like, where do I sign up? And the moment a publican is showing his other publican friend that he's saving tens of thousands of dollars a year in transaction fees because he has taken a lightning point of sale device and put it in front of his customers, and his customers have seen that they actually have a choice between paying on this terminal and paying 1.5%, or this terminal and paying 0% effectively. I think that will be the best education and the most scalable pathway for getting people comfortable.
And so how have you been working as an industry with small businesses, or indeed the small business peak bodies that we had in just before to try and
I did reach out to Adele and Stephen as they left the building, and I'm hoping to catch up with them with Bayani. But the problem is that you have this regulatory door shut to us because Bitcoin is not classified as a foreign currency and, you know, is a CGT asset. And you have, so there's no real point in having the publican engage with these devices because the complexity around implementation from a regulatory point of view makes it virtually impossible. And that's why you haven't seen the adoption of Lightning at scale here, whereas in places like South Africa, Argentina, I met an Argentinian, gardener last week. He knows more about Bitcoin than I do, because if you're in Argentina, trust me, money is so broken, and you learn about Bitcoin very quickly, just like people learnt about the iPhone.
But in your example, though, the challenge is you're asking a publican to take two terminals on, and there's already a cost with one of them.
Not in the case of Square, right? And how long is it going to take for, as Square gains traction in the US with the Lightning service, how long is it going to take for other the payment providers to respond to that challenge? And quickly you get this market-based outcome which addresses, I believe, virtually all of the issues that the inquiry is seeking to address, and you barely have to lift a finger.
Honourable Member, if I can perhaps provide a view on behalf of DECA, informational asymmetry in financial services is increasing, even in traditional markets. That holds true for digital asset markets as well. In terms of the merchant who is faced with this informational asymmetry, they look to trusted guardians to make sure things are being done right. That is Treasury, that is yourself as parliamentarians, that is ASIC, APRA and AUSTRAC. They are doing their job, as is Parliament doing their job. The industry that we represent and the major global players like Kraken and Coinbase here, I do not think that you will find a single other industry that would run towards a regulator, parliamentarian, policymaker with the fervour that they had. We're in a transitional phase, not just in this country, but as I said, in a sovereign arms race for regulation in the US and the EU. What is a critical enabler of trust that will flow down to those merchants, in addition to the practicality point, is seeing those businesses invest in the compliance, in the legal, in the licensing, and in engaging with our policymakers and regulators in this country to make something that is in all our vested interests. I stand by. I don't think you would find a single other industry that wants to spend as much time with regulators, policymakers, as this one, in my experience.
I do just want to add, DECA is a member of the National Anti-Scams Centre, and we're constantly engaged on the scams prevention framework, having responded to the consultation as well.
Why do you think that the digital asset sector is such a male-dominated sector in terms of leadership, in terms of uptake and in terms of investment?
Happy to talk about that, hiring numbers of people across the org and across the geo.
Well, sorry, I mean across the deck. I mean in terms of leadership, both, on a global scale, in terms of uptake, in terms of everything. Sorry, in terms of, yes.
Yeah, I don't think that's a blanket observation that's factual. Our COO is female, Emily Choi. Our CFO, Alicia Haas, is female.
Sorry, let me rephrase. What is the percentage of people in leadership in the digital asset sector globally? What is the proportion of women to men in terms of people who hold these kind of assets? And what is the proportion of women to men that use these assets on a regular basis?
I might step in here because I actually co-host a number of Bitcoin-specific meetups across Sydney. We have a meetup in the city once a month, and additionally we have meetups in Bella Vista, Northern Beaches and Tarrant Point. We find that there are a large number of women that make up attendance there. At our last meetup, women took up about 25% of attendees and that was a net new attendance of about 20% overall. And we're pulling in approximately 60 to 80 people each major meetup we have each month. and that will increase to higher values when price is up, sentiment is up, and even insofar as the opening of the Sydney Bitcoin Hub over in North Sydney. We have a number of women involved in that, including the specific creation of Bitcoin Sydney Women, a specific group specifically for women that also is held monthly.
Mm. So in terms of the meetings that you have, there's about 1 in 4, but in terms of the actual, investment, the people who are in that leadership, what are the figures look like broadly? And do you think that has an impact on broader trust and confidence in the market?
Yes, I would strongly suggest that we would want to reach out to more women because they are the drivers. I think they're the drivers of considered allocation of capital. Men tend to take riskier bets, as we know. And so, what we've seen is this progression of women moving more and more into the Bitcoin space, and we welcome it.
So you're seeing growth?
Yes, yes.
I think this idea that we've kind of come from an era of crypto bros and a male-dominated industry is outdated. I think over a third of our employees are female. It has been male-dominated, and that's to be admitted, but I think that's evolving, particularly at our leadership level. We have an Australian board member who is a recent addition to our board with huge depth of experience in the space. I would also say from the most recent Australian crypto convention held in Darling Harbour just late last year, the bulk of inquiries for some of our newest products, as well as some of our more dynamic products, were coming from females. I think in the era of being able to drive so much of your own financial education yourself, we're finding that women are controlling the purse strings in the households, and particularly as Australia's cultural demographic evolves, that is the case culturally in many cohorts who are our customers as well. So I think we're coming from a position where there has been male domination, but far beyond green shoots in this area, and that's very exciting. From an education standpoint, clearly Australia needs to look at its STEM policies around education. Again, I think we're fortunate with the likes of Kraken to be able to recruit from some of the best tertiary education institutions in Australia also.
Last question.
I'm good.
Okay. Sorry, Mr. Gregg, I'm just trying to keep it moving along.
Thank you very much, Chair. I was wondering, with stablecoins and things like that, could you explain to me how you think reserves should work in terms of ensuring that liquidity and stability?
Just speaking here very briefly, we're not a stablecoin issuer. I think there are some global standards that I think are a useful starting point. The MiCA legislation in Europe, for example, and now with the Genius Act, we're looking at regulation that's somewhat similar to what you'd expect from banks, for example, in terms of treasury notes, government bonds, things like this that are very well understood to be stable in value, and that seems to be, and again, not being a stablecoin issuer ourselves, a reasonable starting point to look to those regimes as a reasonable starting point.
So that would need to be in each jurisdiction? So when you have a reserve, like if a bank in Australia has something in its reserve bank, it's in Australia, the reserves are held there. We have the liquidity risk mitigated here in Australia. There's a lot of discussion about the need for kind of sovereignty in the banking system, and what I'm seeing is a lot of subsidiaries of foreign-owned corporations. So I think, obviously I'm kind of seeking reassurance that those same protections that we would expect of domestic institutions can be seen in.
So I can certainly speak to the custody of client assets with respect to our organisation here, which are held in Australian bank accounts, Australian dollars, and cryptocurrency at the moment, custody frameworks there are evolving, and they will indeed require localised control, being with digital assets being a very kind of almost non-geographic to begin with, but there is efforts and there are expectations around the custody of digital assets to have localised control. We see that mirrored in other jurisdictions as well, where the control of the underlying wallet per se, the custodian, there's localisation to that. So then you can have local, for example, responsible managers being those that are responsible. So that's with respect to client custody, not necessarily with respect to stablecoins, but there'd be a similar. There's a crossover there because a stablecoin issuer is effectively a custodian. But I defer to others in the room perhaps on this question.
Thank you, Member. With credit to Treasury for their great work, Jonathan mentioned the secondary layer in this market, which is the exchanges, and they pass around issued products. With respect to the primary layer, if they cross over into a systemically important threshold, that's 200 million under the legislation, they get treated with prudential legislation. And our prudential legislation, as someone who spends a lot of time in them, is very fit for purpose. And so it's a fascinating situation where if you become systemically important as an issuer in this market, over 200 million, you won't be a bank, but you will get treated with the same prudential regulation as a bank. I would hope that would give the honourable member comfort in terms of what is a new and evolving industry.
If I could just add to that. So the last couple of questions from members have been about trust. And I don't have that problem with Bitcoin because there's no counterparty risk. And so this stablecoin conversation is very healthy because it's taking us down the journey. It's a bit like somebody using a plug-in hybrid, maybe not realising that in 5 years' time they're just going to be in a cyber cab. But this issue of trust is very important because you really need to engage. You don't really have any choice but to engage with stablecoin regulation. It's coming. But I would just engage with the stablecoins, understanding that it is equally trust-based to the system that you currently have. And that's why I encourage all of you individually to go down your Bitcoin journey, because you will eventually realise actually Bitcoin is a trustless system, and removing trust from the equation has huge implications for consumers, for businesses and for all of us.
Sorry, Mr. Porter, did you just say Bitcoin was a trustless?
I'll briefly go down that Bitcoin journey. So it's obviously been traditionally treated as a kind of speculative asset rather than a currency because its prices are volatile. They go up, they go down significantly. When a business is selling a product, I think they want a certain amount of money for their goods and services and kind of want to know what they're getting in exchange for their time or goods. What risks does that present to the small business owner who who might consider putting a QR code up at the shop?
Let's distinguish those two functions of money. One is medium of exchange, the other is store of value. So Square will allow you just to convert to fiat straight away. So you're not facing the volatility risk. And given the volatility of Bitcoin, you probably wouldn't want to use it as a store of value in that context, because you have suppliers who are expecting you to be paid in fiat, and if you're holding your cash balance in Bitcoin, then you have volatility risk. But I see the technology providers eliminating that volatility risk in the short term. But as Bitcoin matures, that volatility will decline. So hopefully that answers your question.
Well, how long has Bitcoin been going for now?
17 years.
And is that volatility declining?
Beg your pardon?
That volatility hasn't evaporated yet, so we're waiting another 17 years?
The volatility has certainly declined, but it is still, you are talking about 17 years into a project that is designed to provide a global monetary protocol for 8 billion people. I would anticipate some volatility in the early days of that journey. Education is an important piece of it, but I no longer use fiat currency as a store of value because I accept the volatility of Bitcoin because I prefer that volatility to consistent debasement of a fiat currency.
Okay. So sorry, Mr. Lachlan?
Yeah, sorry, no, just I think back to the question in terms of payments. I mean, the utility case for stablecoins is clear. We are an issuer of a stablecoin with Circle. That's been a long partnership, and there's a huge amount of trust embedded to that, due to the one-to-one backing with Treasury or other conservative instruments. And so this is a high-quality liquid asset backed one-to-one. There are attestations around that which we file in our quarterly filings with the SEC. And so I think back to that stablecoin discussion, that is highly relevant if Australia wants to remain competitive. The Australian dollar is the 7th most traded currency globally. As these capital markets move to trade on-chain, and there's over $300 billion of market cap of stable coins, there are a handful of very exciting Australian dollar stable coins in the market funded by some of the household names of venture capital in Australia. Currency representation matters. I think this is about the long-term competitiveness of the AUD, which goes to your opening comment on sovereignty of currency.
Yes, Honourable Member, I'll be brief. The representative for Coinbase mentioned the amount of stablecoins denominated in USD. USD-denominated stablecoins are, I think, about 7th or 8th in terms of purchases of T-bills from the US Treasury up from most countries. We do not have the issue that some other countries have in terms of the purchasing power of our dollar, but if we are not in this game, sooner or later, we may find people preferring to transact with tokenised US dollars instead of tokenised Australian dollars, notwithstanding those great local innovators that have come up with Australian dollars.
So I'm about to show more empathy for the banks than I ever have before. So they have been a key part of developing the infrastructure around the payment of money, and obviously that's given them market control. But obviously you're looking for new regulatory oversights, and which is going to add complexity and compliance issues that the government will have to pay for. Given that you are, many of the companies involved are foreign-owned organisations, how are we going to make sure that those who are benefiting from these new regulations, that the companies involved are going to actually be the ones funding the cost of us changing our frameworks?
I would just mention that Bayani here made it clear that we're here on a voluntary basis.
Yeah.
Nobody's paying us because Bitcoin is an open source protocol. Just like all the people that contributed to HTTP and SMTP didn't get paid.
If I may, we appreciate that, but I think the question still stands.
I think it goes
who makes the contribution to the infrastructure?
It goes towards the fact that you have an incumbent banking system that has dragged their feet and poo-pooed the idea of digital currencies for over a decade. And now they want to come on board and say, oh, we've got a solution, we want to try and help. It's like, to what degree? Because all you're doing is putting your hand in everyone's pocket, asking for more money. You've got billions of dollars of profits, yet you're not using it towards the betterment of the human condition.
I would just encourage... I'm not championing...
No, hang on a second. I'm not, rushing to hug a banker here, but 13 of them contributed to the development of the new payments platform, right? They put hard cash into that.
Yep.
So the question that's being asked is very valid.
Yes. If I may, Honourable Member. So there are two answers to this question. The first is that being currently now in the scope for AFSL regulation across the board of services, but also currently in AFSL holder, there are contributions to that regulator as a function of our licence. So that goes towards paying for the regulatory oversight, and I think that will be baked into the coming requirements at most digital currency exchanges in this tranche of regulation as well. It will include, as they add additional AFSL authorisations following the passing, we hope, of the bill. But even those services that we provide that are existing financial products, for example, around custody and derivatives, they require contributions to ASIC as part of the annual contribution scheme, which is a function of all sorts of metrics which I take on notice in terms of the actual numbers. But there is a contribution there that's embedded in the regulation that we will be paying for the regulator. And the second part of the question, the second answer to the question is around the networks themselves. So, for example, Kraken has a layer 2 network that we have developed. We've invested in that network the same way that the banks invest in the NPP network. Those networks are open source and permissionless, so they are investments whereby there is not necessarily a direct financial gain from the investment in those networks, but they enable the kind of payments we're talking about today, utilising the things like our other colleagues here have have mentioned with respect to open source protocols to then allow that enable building of platforms, HTTP being one of them, blockchain being another. So we invest in both the regulation and also the technology itself.
Okay.
Would also just add, the banks realise that their customers want digital asset products while they are dragging their feet, and there is this issue of debanking, which is very clear and important. We talked about the banks also sell digital asset products to their wholesale clients, to their high net worth clients. They market and distribute various Ethereum and Bitcoin ETFs to other clients. And so on one side, and they also have proprietary trading desks that are trading hundreds of digital assets in the same way they've traded commodities and orange juice and exotic derivatives. So they've kind of got one foot in both camps. We need bank accounts. We are tied to the traditional financial system. People want to be able to sell their digital assets and get fiat Aussie dollars back into their CommBank account, back into their St. George account. Just because there is an existing, very efficient layer of payment infrastructure doesn't mean we shouldn't think about advancing and improving it, because ultimately consumers want this and they will choose what is the best offer and experience for them.
Thanks, Mr. O'Loughlin. One final question, then I'm going to the Deputy Chair.
Thank you very much, Chair. We could unpack all these things all day. So we were talking about the need for regulatory guidance, I guess, almost validation of what's happening. Is there something that is currently prohibited from going on in the retail shop with someone buying a coffee that isn't allowed, that you think should be allowed and ought to change? Or is it allowed now, but it's just kind of not got regulatory imprimatur?
I defer to the lawyers here. I'll just very briefly speak to the history, which is that there was a lot of uncertainty. ASIC has provided class relief around the use of stablecoins, but it doesn't go far enough, and so the argument is that a legislative instrument would be much more wide-reaching. That's the short answer.
So I can just provide a little bit of context. So basically there were two changes in the last few years that basically prohibit or make it very difficult to use a stablecoin or Bitcoin to buy a coffee. One is that it's basically excluded from the definition of digital currency, and it's treated as a CGT asset under the Income Tax Assessment Act. There is some guidance from the ATO if you've held it for a very short time, but it's not clear. There's regulatory, ambiguity there. The other thing is it's specifically excluded from the definition of stored value card under AML, and so you've got KYC obligations. If you just carved out low value, high volume transactions from those two pieces of legislation, which is what the case was before those changes were made, all of a sudden you will get this innovation.
Okay. Righto. Because I'm the self-appointed champion of bipartisanship, I'm going to give the Deputy Chair two last questions.
Oh, he's on mute.
You just got to get off mute, my man.
Thanks, guys. I think it's just helpful for everyone to have an understanding of the size of who we're talking to. I just Googled Coinbase while we're talking. I think the US market cap, correct me if I'm wrong here, John, is 47 USD billion, which is about roughly half the size of ANZ Bank. Am I ballpark right on that, John? Yep.
Correct.
So we're talking about very mature, very large organisations. And the question I have is, can you just explain to me how the US is operating now with and maybe to Kraken and Coinbase, how the US is operating now with regards to digital currencies and digital assets, how they're working with regulators and how they're working with government. Contrast that to how Australia's operating, and if that continues, what will that mean for Australia?
John, let me take a stab at this and then ask you to fill in the gaps. Various interactions with the CTFC and the SEC, New York State regulator, etc., have been, positive and quite a big turnaround the last 18 to 24 months, where you have the Genius Act and the Clarity Act on track. and that has provided the certainty to both the exchanges and to consumers and the investment community that they can pursue their projects, their products, their campaigns, whether they're stable coins, whether they're exciting yield issuing products, whether they're tokenized equities. And so I would say in the vanguard of financial freedom in terms of what consumers want, you look at a Robinhood or a Coinbase as a North Star of a incredibly impressive consumer experience inside an app that's up there with, you know, the smoothest experience you can have, levels of trust embedded in that app, and you can be trading, you know, 20, 30 different financial products, tokenized equities, prediction markets, Bitcoin, Ethereum, ETFs, yield generating products, stable coins, moving money to people all over the world, wherever you may come from, financing projects, tokenizing projects that previously were unavailable to big populations of people. And that is what we hope for globally. I would say that through our experience with Treasury, with ASIC, with AUSTRAC and others, the adoption and the increase of awareness and knowledge has been impressive, but that's really only happened kind of in the last year and a half, 2 years. We've had this turnaround, and together with some bipartisan push on this, we are excited now that we're in this era of relief. If we don't make true on the pledges and the recommendations and suggestions of what we've been doing, large organisations like Kraken and Coinbase are very mobile with their asset allocation. I have to fight for campaigns for Australian users, which I think are in their best interest, with my colleague or peer in the Brazilian market or the Canadian market, because even though we do have a large market cap, we have a big governance overhead, and we're driven by competitive decisions and choices around capital allocation. So it's not a home run that all of these innovative products are going to land in Australia, at least from Coinbase, unless our policy teams and our leadership team have confidence in the direction of travel in Australia. So it's absolutely important that we keep the momentum moving and follow through on these recommendations we've been discussing today, and that are in most of the panel's submissions.
If I could add... Chair, no, sorry, we are well over time now. Deputy Chair, is there anything else burning that needs to be asked?
No, it was just that question.
Terrific. Okay. Thank you for appearing today. The Committee Secretariat will contact you all in relation to any matters arising out of today's hearing. You'll be sent a copy of the transcript of your evidence, and we'll have an opportunity to request corrections to transcription errors. I'm going to suspend proceedings now. They'll resume at 2 p.m. Thanks, everyone.
Thank you.
I now welcome representatives of Block to give evidence. For the Hansard record, please state your full names and the capacity in which you appear before the committee.
Marco Lamantia, Executive Director for Square Australia.
Great.
Michael Sadat, International Head of Public Policy at Block.
Thank you. Before we proceed, I should advise you that although the committee does not require you to give evidence under oath, the hearing is a legal proceeding of the Parliament and therefore has the same standing as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as contempt of Parliament. The evidence given today will be recorded by Hansard and attracts parliamentary privilege. I now invite you to make a brief opening statement before we proceed to questions.
Thank you, Chair, Deputy Chair and members of the committee for the opportunity to appear today and for your work on the inquiry to date. As mentioned, my name is Marco Lamantia. I'm the Executive Director of Square here in Australia. I'm joined by my colleague Michael Sadat, who is the Head of Block Public Policy for all of our international markets. First, a little bit about who we are. Block is a technology company that builds tools to help more people participate in the economy. Through our Square business, we make commerce and financial services accessible to merchants of all sizes by offering integrated hardware and software solutions. We operate in this market alongside our Afterpay business, the Australian-founded Buy Now Pay Later service used by millions of Australians. Between Square and Afterpay, we operate across different parts of the payment system, which gives us a practical view of how the system works for both small businesses and consumers alike. Payments can sound technical, but at its core, it really is just about how money moves. When a consumer taps a card or a phone, there are several layers involved. There's the merchant accepting the payment provider processing it, the card schemes who set the rules and also process the transaction, and lastly, there's the banks issuing the cards to the consumers who make a payment. Our submission focuses on how competition operates across those layers and where it does not. The central principle we put to the committee is this: regulatory intervention should be targeted at parts of the system where competition is not functioning and should avoid disrupting areas where competition is clearly delivering benefits. In Australia, as you've heard over the last couple of days, parts of the payment system are highly concentrated, whether that are through schemes or through major banks who are able to set the price and conditions on how participants operate in the payment system. By contrast, merchant acquiring is a highly competitive space. There's not just Square, there are tens of other new entrants in the market who have provided choice to small businesses across the country, and that choice didn't exist 10 years ago. Regulatory reform has played an important role in opening up the market. However, for more than a decade after the initial reform, competition's remained limited and innovation was slow. Meanwhile, consumer behaviour has changed rapidly and card usage has increased significantly. Contactless payments are widespread and cash volume has declined sharply. Small businesses were increasingly required to accept electronic payments just to remain viable, but the acquiring experience that they were going through was not fit for purpose. When we entered the market in 2016, we did so with a fundamentally different model to what the incumbent banks were providing at that point in time. We had a model that provided low-cost hardware that could be purchased outright, that didn't require monthly fees, didn't charge for services such as chargebacks, with a simple rate that our merchants tell us is their preference from a simplicity point of view. We often spoke to merchants when we entered into the market who had applied to a number of the big four banks to try and accept a card payment, and they were denied. Either they were denied because they weren't commercially viable, they were denied because the risk profile was too high, or they were denied indirectly because the product that was being provided or offered by the big four banks at the time was not fit for a very small business. That's no longer the case today. Today, small businesses have got a ton of choice, and we're proud to be here today representing not just small businesses who entrust Square, but a number of PSPs and fintechs across the Australian community that are offering choice to these businesses. Thank you.
Thank you. I'll hand to the Deputy Chair. You've got questions up till 2:15, Deputy Chair.
Thanks, Chair. Would love to get your views on FPOS and, broadening it. Do scheme pricing structures disadvantage domestic payment systems such as FPOS?
Thank you for your question. I think it might be helpful just to provide a bit of context into how we Square connecting to FPOS. Unfortunately, because of the complexity in connecting directly into FPOS, we connect via a third-party intermediary, and so an acquiring bank actually connects into FPOS for us. In fact, actually, when we launched in Australia 10 years ago, we were prohibited from launching in Australia with FPOS acceptance. We launched only with Visa, MasterCard and American Express. Perhaps a question for FPOS and the AP Plus board as to why there were concerns with Square entering the market. But we very much see a ton of value in the FPOS network. And in fact, we would be open to connecting directly into the FPOS network if that meant that it would reduce our costs and we could pass that on to our sellers. However, to date, it's incredibly complex in order to connect directly. Therefore, we're needing to pay a third-party intermediary at this stage.
So what would government have to do to reduce that complexity and enable you or other players to do that?
It's a good question. It goes, I guess, to some of the broader questions around access to the NPP as well. But it's important to note that FPOS and the NPP do have governance structures where, for example, the big banks have a significant say over how these entities operate. And although the banks are using FPOS and they still issue FPOS cards, they do get significant incentives from the international card schemes as well. And so, the fact that we have FPOS in Australia should be a great source of pride. A lot of countries now are looking at the fact that they don't have domestic payment rails available to them, and they're thinking about how to change that. It is an expensive thing to start from scratch, but we do already have that, and I think there's an opportunity to see how we can strengthen FPOS in particular, so that there is a greater incentive for providers in Australia to use the FPOS network, and we have a great option for Australian consumers as well.
And then before you, we had a number of different variants of blockchain stakeholders. How do you guys think about the rails you use from FPOS to the banking rail system to you're starting to, I've read stuff from some of your founders, they're very taken with Bitcoin and whatnot, but as we talk about stable coins and blockchain as a technology, and the cost advantages of that, how do you think about that?
I can take part of that. So we have a very positive view as an organisation globally on the role that particularly Bitcoin can play. For context, just recently in the US, we enabled all of our merchants to be able to accept a Bitcoin payment at point of sale, and that purchase is free of charge for those merchants. And so we see that there is tremendous opportunity in these alternative networks, particularly as it relates to looking at adding additional competition at a core network level.
And so why would that just be limited to Bitcoin? Because I think some of the previous committee members talked about the variability of Bitcoin. I sort of get that as a concern. But when you move to a stable coin, that concern's eliminated, right? So if you're saying you're offering this free of charge because it's a lower cost, it's a different network, couldn't this as equally be applied to stable coins? You get rid of the variability, you get rid of the variability of the asset. It's faster, it's quicker, it's cheaper. How are you thinking about that in your sort of longer term plans for Block? And look, I get, just to say the quiet part out loud, it's not as lucrative because the fees are cheaper. But when you were talking about, earlier in your testimony, the banks are operating this closed source system where they sort of control who accesses it and they set the prices for who accesses it, versus something else which is an open source system. Anyone can use it and the costs are a fraction of it. So it seems to me like superior technology, but what am I missing?
I'm unsure if you've spent a lot of time with our founder, Jack Dorsey, but certainly when you listen to Jack talk about why he created Square and why he is investing in Bitcoin, and to answer your question earlier, yes, stablecoins are something that we're looking at. When that comes to life is obviously something more from a product roadmap perspective, but importantly, if you hear Jack speak, he specifically takes issue at the fact that there are a handful of organisations globally that essentially are providing approval as to whether you can get access to the financial system. Whether it's the 2 card networks, whether it's some of the major financial institutions in a specific market, everything seems to be very much on approval. And Jack's view is that financial services is a fundamental right to all of us and should be provided open.
No, and is there anything wrong with my logic in saying it's superior technology, it's faster and it's cheaper, and it's open source so everyone can access it, so it's democratised? And then if that's the case, shouldn't we, and my view from what I've been reading about what's happening in the US, they turned what was a sort of leisurely 5K jog into a 100-metre sprint now, and countries are racing for dominance in this, because once you're in blockchain, it's global. You can transfer from Sydney to New York. Blockchain doesn't care about what jurisdiction you're in. It just happens globally. So my worry as a policymaker in Australia is if we move slower, right now we've been banking a lot of Asia. I get you're largely focused on, domestic B2C transactions, but I worry we just lose our we've had payment companies like Afterpay being invented here. We have been preeminent in the world and Asia in banking Asia. Am I right to be concerned that actually Australia's leadership in this role could evaporate over the next 5 or more years?
I think it's important to acknowledge the changes that are happening, and we would agree with what you said, Mr. Kennedy, about the fact that we do need to lean into these new technologies that do offer tremendous benefits and lower cost. Our purpose here at Square and Block is to make sure that no merchant misses a sale and to provide as many options as possible for consumers to make a payment. It's why we've launched Bitcoin payments in the US on Square. We're planning to expand that globally. It's why we're looking at stablecoins as well. We want to make sure that merchants have all of the options available to them, particularly as consumer preferences change and new ways of paying become available.
I'm almost at time. One question, and I realise this is a tough one. The banks have set who can access it, and they've set the fees to access that in a lot of respects, right? When you move to this technology, which is lower cost and lower fees, how do you deal with that as a business, and how does the industry deal with that? Because you're going from revenue pools that shrink. Yes, they can be global. How do you think about that? Because I see there's a disincentive for the banks and some of the established providers, maybe even you, to embrace that because you're shrinking the revenue pool. Maybe it's a hard question for you to answer.
I think from a commercial viability perspective, there are a number of different ways in order to look at how fees are applied to services, and generally it's a relationship between the value that somebody sees and what they're willing to pay for. And so very much in what you've said, the processing may be free, but that customer, whether it's ours or a bank's, may be getting other services as well, and they'll be paying for those services which may not actually be free. So more to come onto what those models would look like, but I suspect that as not just nations, but also as organisations, we will look at ways on how to make sure that it's a commercially viable model.
Thank you. Thanks, Deputy Chair. Over to Mr. Gregg.
Thank you very much, Chair. We've heard a few stories from small businesses of PSPs going into businesses and essentially saying, look, we take this bundled package, which includes a point of sale, and this will include all these other wonderful value propositions for the business, and don't worry because you can just pass the cost on via a surcharge to your customers. Is there any truth to that?
Certainly not from a Square perspective. I can't comment for our competitors or other players in the market. You know, we hear anecdotes of PSPs actually saying to a merchant, hey, we will charge you 1.2%, you can surcharge 1.6% and we'll split the difference. And so we do hear of certain behaviours that we think should be looked at more carefully, but certainly from a Square perspective, it is important to note we launched surcharging 12, maybe 18 months ago. And so we've been in the market for 10 years and it's only been the last year or so that we've had surcharging. We haven't been using surcharging as a way to win or maintain price. We haven't had to because of the value that we offer. We implemented surcharging at the request of our sellers and we had a lot of requests for it.
So if surcharging was to end for one reason or another, do you think your customers would likely reevaluate the value proposition of your service?
The vast majority of our customers don't even surcharge. And I mean, you know, upwards of 70 to 80% of our customers don't surcharge today. So we can park them aside because they won't be reevaluating anything. And you look at the last 10 or 20%, that'll be a conversation and a decision for them to be able to make, right? I think price and what we know from our customers and speaking to our customers, and I think you've heard this a number of times over the last couple of days, price is an important factor, but it's not the only factor. When you're going through, a buying journey for anything, right? You're trading off price and quality and convenience and speed and utility, and you put that all into the mix and it comes out to, you know, some merchants are willing to pay, others are not. I think the beauty about the market is though that there's tremendous choice. There's, you know, you heard from Mr. Birmingham yesterday how, you know, you're proudly stating that the banks have got a 1.2% fee or a 1.1% fee and sort of referencing some of the others that are at 1.6. I think the piece that seemed to have been missing in that conversation yesterday was the $20 to $30 monthly fee that these banks are also levying on their merchants for the vast majority of their products. They're also missing the fact that the funds, if they're not deposited into their own bank account, that merchant is financially penalised. There was also pieces around what I would say chargebacks. We don't charge for chargebacks at all. And I think there was a question to Amex yesterday around who administers the chargeback system. The networks administer the chargeback system. So EFTPOS, American Express, Visa and MasterCard, they set the rules.
And so who pays the chargeback?
We pay the chargeback. And just to give you some insight into what that chargeback can cost. So first and foremost, the merchant is the responsibility to prove otherwise is on the merchant immediately. And so there's already this instinctive bias between the issuer and or the cardholder and the merchant. The merchant needs to prove that it didn't actually occur. If a chargeback is sent to arbitration, and the arbitrator here is the network, the fee to complete that arbitration is upwards of US $500 per chargeback for an arbitration. We find many times that it's just not worth going to arbitration. And so what we do in goodwill for our small businesses is we won't charge them any of the fee, and we'll also refund the money back into the account that was charged back by the issuing bank. So I think, you know, and the reason I'm raising this is that on the surface, at a direct comparison level, like 1.1 and 1.6 may look quite different. But there are a lot of hidden fees that some of the larger institutions don't necessarily publicly talk about that small businesses really pay for and value.
So those protections you refer to, they don't apply to a Bitcoin transaction which you do for free, do they?
Correct.
So when a merchant is encouraging one form of payment or another, they can't really tell the customer normally how to pay, but the decision that customer makes is going to really determine what protections are available for all involved, wouldn't it?
If you look at Bitcoin purchases, similar to account with the MPP, which has been another big discussion topic, they are the regimes of chargebacks or chargeback protections just don't exist. Now, whether that evolves and changes depending on sort of the propensity of these types of transactions and how often they're occurring and sort of the success of them, something that we could look at. Certainly as custodians of both, the person paying and the merchant accepting, but as it stands today, those chargeback protections don't exist.
So I guess one of the big mischiefs this committee's been looking at is it seems that small businesses are paying an awful lot of money to be paid, and consumers are wearing higher costs. And that because small businesses are not receiving the same kind of deals as we're seeing larger businesses get, that because their input costs are higher, they're having to charge more for their customers, so they're also less competitive in the market. Where do you think the big kind of problem is in the existing system that is causing unnecessary disparity between small and large businesses?
That's the last question. I can't answer specifically as to where I think the problem is that's creating small business paying more than large business. I think that is just a nature of economics, so to speak. But what I can say is that I think it is absolutely fair to acknowledge that surcharging, when it was introduced 20 years ago, was introduced from a very different lens in a very different landscape. And I think removing surcharging completely today will have an effect on sellers where they'll need to think twice about what they're being charged, therefore going and either negotiating or shopping for a better rate.
Thank you very much. To Ms Jarrett now.
Thank you. I'll jump straight to it because I know I've only got a few minutes. You put forward identified a number of challenges in the payment system, and that's been reinforced by, I think, the evidence we've heard to date. But one proposal that you've put forward in relation to improving competition is a differential interchange caps for small issuers. And I understand, obviously, the goal of that is to increase competition. But is there a risk that that adds to the complexity? Because one of the challenges we've heard is the amount of complexity in the payment system. So just want your thoughts on that.
I'll let you take, and then I can talk about complexity.
Thank you for the question. It is a good question, and I think it is probably right to say there might be some complexity that's introduced if there is differential surcharging depending on the size of the card issuer. But we do think it is important to have policy settings that enable competition. The risk of reducing interchange across the board is that only very, very large issuers will be able to compete in the market. We've already actually got a pretty concentrated card issuing market in Australia, and the risk of that becoming even more concentrated is exacerbated if interchange reductions are applied across the board. And I think we would point to examples of other jurisdictions where there is differential interchange based on the size of the card issuer, and the United States is actually a great example of this, where they have explicitly facilitated that through regulation, and you have a pretty thriving market for card issuance amongst smaller banks and smaller fintechs. And it is really the differential interchange which supports that. So I think it is important for us to look at that. We pointed to a number of competition issues in our submission, where competition isn't working well. We've suggested that competition in the merchant acquiring part of the payment system is working pretty well. But if you look at other parts, card issuing is one area that could really benefit from more competition. That differential interchange is one of the levers that could enable that.
Okay, and I think, as with anything, sometimes there's a short-term loss for a long-term gain, right? So, and in relation to the small card issuers as well, you suggested a time-limited exemption on transition arrangements. Could you sort of provide some examples of what you think that could look like, please?
Yeah, it's an issue that we sort of explored as part of our submission to the Reserve Bank on this issue. And it really comes from the fact that I think there is concern around having entrenched exemptions for different parts of the payments ecosystem. And so what we would say to that concern is that you could structure the differential interchange arrangements in such a way so that it's only smaller entities that benefit, and once those entities grow to a particular size, for example, that they then transition to other arrangements. And so, it creates a fairer competitive landscape. I think what some parts of the system might say is, well, it's better just to have a level playing field. But unfortunately, the playing field is structurally not level, and so having the same interchange apply to all card issuers just inherently results in poorer competition outcomes.
Right. Thank you. And I know we're short on time, but if I could just ask you one more question. You talked about in your submission about account-based payments being a critical opportunity, and central to the success of that is access to the MPP. And you talked about there being two major barriers for that: requirements for DI licences and exchange settlement accounts. You put forward in your submission quite a number of ways to reduce the burden, and one of them being, to enable this plug and play service, which sort of pricked my interest. So how do you think that would work, and who would own that? And do you think, will that add costs to end users, or would that be more borne then by those within the system? We're just, because everything we're looking at is we're trying to make it efficient, future-proof, protecting consumers, protecting merchants, etc.
I think the enablement of more competition here would act as a pretty strong market force to ensure that costs did go down rather than go up. And if more organisations could access the MPP through the types of arrangements that we mentioned in our submission, that would really enable competition to flourish in a way that we're not seeing at the moment. And it would also mean that this critical infrastructure that we've built in Australia, that is the MPP, that is things like FPOS, it just gives them a much stronger chance to compete with some of the international card payment rails that also exist. And I think, there are a number of significant economic benefits that come with that, but also from a long-term competition perspective, we think it's definitely advantageous.
Thank you, Chair.
Thank you very much. I'll now hand over to Ms Campbell.
Thank you, Chair, and thanks for giving evidence today. In your submission and here today, you've identified two areas where competition, in your view, is not functioning, the first being card issuing and the second being in digital wallets. I have a question, which is, how do you think that is impacting on costs throughout the system, and why do you think that those two areas have limited competition?
I can provide some context with regards to the digital wallets. What we heard a number of times by the ABA and its members yesterday was that there was a real concern, specifically with Apple, because it was a closed system, and I think one of the numbers purported was 15 basis points that they need to pay, whereas in contrast, Google doesn't have a direct cost and is incredibly open. We're an acquirer of these transactions, and so what I can say is we pay more for both a Google Pay and an Apple Pay transaction when we accept it. We pay the same, whether it's come from a free wallet, being Google, or whether it's an Apple wallet. And so I think there was a bit of discussion around whether we would see some of the benefits of opening up wallets and reducing fees flow down to small businesses or consumers. It's certainly not what we're seeing today in an environment where both of those options currently exist.
So, sorry, can you expand on that? When you use a free wallet, you still pay a larger cost?
So, to explain, in the context of the response of the ABA, which was there were concerns that one of the wallet providers is charging them a specific amount and it has a very closed security system in comparison to a number of the other wallet providers who don't charge a direct amount and do have an open system. When these transactions are presented to us, we need to pay an additional fee because they've come from a mobile wallet. That additional fee is exactly the same regardless of which wallet it comes from. And so the wallet that doesn't charge the bank directly, the 15 basis points supposedly, isn't any cheaper for us to accept.
Yeah, okay. So essentially the clip of the ticket that's going through is going through at that acquirer's bank level, but in terms of the small business or the customer, they're being charged the same.
Correct. So as an acquirer, we're charged the same, whether it's a Google Wallet or an Apple Wallet. What the issuer is charged, I don't have visibility into that, but what they indicated yesterday was that Apple charges them 15 basis points and non-Apple doesn't. We don't see any value from the non-Apple transactions, is what I'd say.
Yeah, okay. The cost differential for a small business using Square versus using more traditional, methods at the point of sale, understanding that Square, integrates the tap and the software. If you took all of the ways that you currently do that and you measured them up against Square, what would that look like for a small business?
I think a good reference was, I think one of the networks yesterday had said, there was a debate whether they had 112 fees or maybe 51. Let's just land on 51 for benefit of doubt. But you can imagine trying to have a conversation with a small business about 51 different fees that are associated to a $5 coffee purchase. And so we spend a ton of time with our small businesses, as I'm sure you all do in your constituents, right? And so what we hear from them is that they're incredibly time poor. They don't have access to the same technology and systems that a big retailer has the ability to access. And so when we look at solving problems for these small businesses, one part is to be able to accept a payment. The other part is to help them run and grow their business.
Yeah.
Our overarching theme is to provide them economic empowerment, and ultimately our role is to give them more time back to either grow their business or spend time with their friends and family.
And understand that there's a different value proposition to your product. But if I took the more traditional ways of putting together the value that exists in your product, would I be paying more or less than if I use Square? And I understand simplicity factors in here, but yeah.
It would vary. It would vary. Certainly what we see, depending on the type of merchant, if you were to go and individually select all of those items through different vendors, it's likely going to cost you a lot more. You require different hardware. You're likely going to get into a different contract. Their pricing mechanisms are likely going to be different. There could be monthly, minimum monthly fees. And so I certainly don't have a ton of insight into how some of those other different software providers charge. But what we do know is that small businesses, by and large, 80% of them actually that we speak to, tell us that they value all of those services being bundled in together.
Simplicity is king.
Correct.
When you said that a very small number of your businesses who use Square surcharge, do you have any insights as to what types of businesses are surcharging? Is it in particular industries? Is it in particular geographic locations?
We can provide that data, detailed. We can provide it down to a postcode if that helps.
Yeah. That would be great.
And we can take that.
Yeah, we can take that on notice. Yeah.
That would be wonderful. And simplification is obviously, the priority that you've talked about here today. If you were redesigning the payment system today, how would you make it more simple?
Look, I think, again, going back to when we entered the market, the problems that we solved, we saw that existed. Like, a small business shouldn't wait 3 weeks to be able to be told whether they're approved to take a payment or not. They shouldn't have to fill out, tens of pages of forms and then be reviewed. And so I think anything we can do to make it easier for small business to get access to the economy, to get access to the tools that they need to run and grow their business, we should be looking at. Alternative payment methods, whether that's through Bitcoin or stablecoin or the others, I think that's something we should be considering. Equally, we should not be overlooking the role of artificial intelligence or Gen AI. And we see that as a huge leap forward from an efficiency perspective for businesses of all sizes.
And given your emphasis on... Sorry,
we'll have to wrap it up. Sorry. Over to you, Ms. Situ.
Thank you very much, Chair. I just wanted to follow up on Ms Campbell's line of questioning around simplifying the fee structure. We have heard from small business peak bodies earlier today about the benefits that would come from least cost routing. My understanding is that your business model very much relies on that blended pricing. how would you consider incorporating least cost routing in how you do business?
Thank you for the question. I think the first thing I'd like to state is that we, Square, have passed on the full savings of least cost routing to our sellers. In fact, we've passed on more than the least cost routing savings that we incurred to our sellers. And so up until recently, and you could go back sort of a couple of years here, just before we launched least cost routing, our price was 1.9% for everybody. Because of least cost routing, we were able to reduce that price down from 1.9 to 1.6%.
So so that's still a blended price, is that correct?
It is. And the reason we offer at that simple rate is because that's what businesses we speak to are telling us they prefer. There are alternative models in the market. I think somebody mentioned Interchange Plus, where you're sort of being able to provide like more of an itemised pricing of payment processing. Those models exist. In fact, they were prevalent before Square entered the market. I think what you're seeing, and the reason why a lot of our competitors are now also using this simple pricing model, is because that's what businesses are telling us they prefer.
Would there be more savings to be had by businesses if you went down a split pricing model between credit and debit? So what's the proportion of sales that are debit and proportion that are credit?
And can you tell us what consumers think? I know what businesses think. What do consumers reckon?
It's a good question, Mr. Tu. I think as to whether overall small businesses would pay less if we priced our product differently, I don't know that we have a clear answer to that. I think the question, though, goes to whether competition is working effectively in the part of the market that Square is operating in. And so if competition is working effectively, what that would mean is that if our costs come down, if our wholesale costs come down, we would then pass on those cost savings to the merchants that are using our service. And a competitive market would be characterised by many options for small businesses that they're able to choose from, easy barriers, very few barriers to switching and that kind of thing. So we don't have monthly contracts. We don't charge ongoing fees for anything. It's very easy to switch away from Square if that's what people want to do. So I think I guess the starting point for that question is competition working effectively? And we would say that yes, it is working effectively. We're a small player in a market that has many players in it. Where competition isn't working effectively within the payments ecosystem is exactly where you've been looking at over the past 2 days. There are parts of the payment system that are not characterised by normal market forces, where there are very dominant organisations that are able to set prices. That is not the part of the market that we're operating within. And so I think we would say that, our ability to offer the service that we do, reflects the demand that exists out there by small businesses. They want the kind of service that Square offers. We have very strong net promoter scores. Businesses really like the offering. And if they don't like the offering, they've got plenty of choice within the market to go somewhere else. And so from that perspective, I think, it is right to question us, but where we're operating, we see really healthy competition, given the structure of the market.
And just before I answer the Chair's question with regards to the consumer view of surcharging, I did want to note a number of times yesterday the Canada example was brought up around sort of regulating or sort of payment service providers and acquirers from passing on savings from the small business programs that the network's implemented. Some subtle context that may have been missed in that conversation yesterday, and through lived experience, being Square is in that market, is that we did adhere to that program. We do still today. We passed on the interchange savings, and very quickly thereafter, one of the networks then went and introduced new scheme fees and increased their scheme fees. And so we weren't in a position to be able to go and pass those fees on to our sellers. We've gone and we've lowered our price on an act of good faith, on a view that interchange has come down and we're participating in a program, but we have no ability to forecast what other fees are going to be coming around the corner, even outside of these programs. And so our intent is to always try and pass on as much as we can, if not everything that we can, when we're participating in these programs. Unfortunately, what we've seen is it's not always that simple.
Okay. Sorry, Ms Situ, I just need to move on if that's okay.
Yeah, no worries, Chair.
Mr Laxale.
Thanks, Chair. So I just want to understand where you said you're an acquirer. I just want to understand sort of where you distribute the funds that you collect. So you charge 1.6%, you collect it, then you obviously keep a bit. Where does the rest go?
So there is a number of different fees. So we would need to pay a bank to deposit those money into various other bank accounts in the country. We would need to pay a network their network fees and interchange fees that they would then go and pass on to the cardholder and the issuer. We also have static costs as running a business. Part of that fee goes into paying for the hardware that we design and develop ourselves for the over 1,000 people that we have here in Australia, that we employ here in Australia to serve and support small businesses. And so there are costs associated in that 1.6 that are directly related to the payment system, and then there are other fixed costs as any other business has, which is running that business here in Australia.
And are those payment costs, obviously, which is the focus of this inquiry and obviously where the RBA are looking at, are those payment costs charged at wholesale rate?
Those, so when you talk about scheme fees or interchange?
Both.
So both scheme fees and interchange are set by the schemes, by the networks. We are a direct acquirer of 2 of those networks. With EFTPOS, we're not.
So that means you go straight to Visa, you go straight to MasterCard.
Correct.
They give you a rate.
Correct. Right. And they'll give us a rate. Now,
is that a strategic rate?
It's not what you've heard over the last couple of days referenced as a strategic merchant rate. We don't have that, as much as we'd love one. Why not? Why don't they? I'm assuming you asked for one. It's a question for the networks as to why they wouldn't give us one. I would assume it's based on our size.
Square's pretty big though, right?
We may be big, but we certainly wouldn't be as big as a Coles or a Woolworths or a JB Hi-Fi or a Qantas. There are certainly a lot of other large payment processing retailers in the country. I would say that...
So if you can't get a strategic rate, how is a small business meant to get lower rates? They can't.
They can't, absolutely. And so that, again, it's just what you're seeing is in all parts of the economy. Big business has the ability to get much lower rates than smaller businesses do.
And you offer lower rates as well? Sorry, just wary, Mr Husick's very good with time today, so I just want to kick on. You offer custom rates as well. What's the lowest rate that you offer your clients?
It varies from client to client.
I understand that, but what's the lowest?
I don't think we would I don't think we would publicly disclose that just for commercial reasons. But we
part of the problem.
The 1.6 that
this is part of the problem, though, isn't it? Right? Like transparency on the fees. Like, how do we know how a small business is meant to compete when we don't know?
Yeah, and it is a fair question. I guess our ability to answer that question is very different to a very large entity's ability to answer that question. And I think it's worth pointing out that the 1.6 that's been referenced applies to merchants that process up to $250,000 of transactions. Above that, it is a negotiated rate. And so
for each one over 250, it's
that's
negotiated.
Right. So, we've heard, I guess, evidence before the hearings that small businesses could be up to $10 million of revenue. For us, that's a very, very large small business. And certainly 80% of the businesses that use Square process under $100,000 a year. So it's a very different profile of merchant as well, and kind of reflects the diversity of small businesses in this country. Of those 80%, there could be merchants that are using Square every second weekend because they're at a farmer's market processing transactions.
Sure. What is your percentage of debit versus credit in terms of tap and go?
We haven't published that, but it's broadly the same as the figures the RBA has put out.
RBA have published that you use LCR 100% of the time. You said it's just brought down your fees by 0.3%, which is great. It's widely accepted that FPOS is the cheapest form of tap-and-go payment. Do you pay 1.6% for FPOS, or do you pay less?
I think it depends on what you classify as a cost to use the FPOS network, because as...
Well, I'll use the RBA's numbers, right? The RBA say that domestic debit transactions generally cost around 0.3%, whilst Visa and MasterCard debit average around 0.5%. You paying around that?
I'm not sure we can speak specifics around what we're paying each of the networks, but what I can say is that that figure wouldn't be including all the other costs that I mentioned earlier around us being able to provide our service in the country. It doesn't take into account the AML checks that we need to do on customers that onboard with us. It doesn't take into account the money that we need to spend in order to create the products that these customers want from a hardware perspective, to get them certified with FPOS, with Visa and with MasterCard. It doesn't take into account the $35 fee that we may be charged by FPOS when we raise a chargeback. And so there are other fees.
Yeah, but surcharging, and you said, you know, your customers surcharge. Do you give them the option to surcharge just the cost of the payment? Because, like, you're adding in terminals in here, subsidisation, the software that you developed, all that stuff's being passed on to the consumer, right? When surcharging is meant to represent the cost of payment.
You want to talk about the regulation?
Yeah, so I guess what merchants are able to surcharge is policy set by the Reserve Bank, but we allow merchants to surcharge any amount that is compliant with the RBA requirements. So some choose.
So if you charge 1.6, a merchant can say 0.5%.
They can if they want to.
Right. But shouldn't the surcharge be to recover the cost of the payment, not the cost of the software and the hardware?
I mean, what surcharging should be is a matter for policy. Like that's not something we set. Small businesses obviously have a range of costs that they need to recover, but what costs can be recovered are explicitly set out in RBA policy.
So you're making additional revenue off debit transactions, which is just going in and subsidising a whole heap of other things.
I guess we've structured our pricing and our product offering in a way that creates simplicity for small businesses and
costs for consumers.
I don't think we would agree with that, because we're offering small businesses a package of services that they need to run their businesses. And so you could sort of slice and dice the pricing in all sorts of different ways. Whether or not small businesses end up paying more or less, I think is actually a different question. And whether or not consumers end up paying more or less then becomes a relevant question, because the service that we're offering is a service that businesses need. And we happen to package and price the way we do. And if there were a market failure in that segment of the market, then I think your questions around why are we pricing it this way and should we not consider pricing it another way would be very valid. But we're not operating in a part of the market where competition isn't working, and businesses have a choice. They can go to another provider and get a different type of payment product. And so given that competition is working in that part of the market, I think it's fair to focus on the part of the market where competition isn't actually working.
Okay, we're going to need to wrap it up.
Okay.
I know. Questions on notice, they're a great thing. Mr. Sadat said, if you don't like it, you can go somewhere else. Jokes.
The Senate. I'm not.
It's been a long 2 days. We've got to have some levity. Thank you for appearing today. The Committee Secretariat will contact you in relation to any matters arising out of today's hearing. You'll be sent a copy of the transcript of your evidence and will have an opportunity to request corrections to transcription errors, and then we're going to move on to the final session.
Thank you very much.
Thank you.
Thank you.
Thanks.
Thanks.
Their philosophy at the start was micro sellers, like with the thing that the days you used to have headphone jack. Like that thing was designed to help those micro sellers that just didn't know to get the big terminals. Their philosophy was quite good, but it's just as they got bigger. Yeah. We literally could.
Thank you.
Oh, so there's only 3.
Because Mr Thomas is online.
Oh, is he? Great. Okay.
We're all ready to go.
Sorry, Jerome.
You're right.
Oh, you're giving me that look, though. Yeah, that's all right. Very passag of you. Yeah, that's right. We totally will. Okay. If you don't mind, I might begin things with welcoming representatives of Ping. As you pay, you can correct me if I'm wrong, if I said it wrong, Paper Plane and Shift 4 to give evidence. For the Hansard record, please state your full names and the capacity in which you appear before the committee. Going this way.
Dipra Ray, CEO and co-founder of Ping.
Thomas Rundle, Chief Product Officer at As You Pay.
Simone Joyce, founder and CEO of Paper Plane.
And Peter Thomas, Chief Product and Marketing Officer at SmartPay.
Thank you so much. SmartPay, did you say, or Shift 4?
It's the same.
Oh, it's the same.
So SmartPay, recently acquired by Shift 4.
Yeah, it's okay. For the Hansard, sorry, we've done that. Before we proceed, I should advise you that although the committee doesn't require you to give evidence under oath, the hearing is a legal proceeding of the Parliament and therefore has the same standing as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as a contempt of Parliament. The evidence given today will be recorded by Hansard. It attracts parliamentary privilege. And with that, I'd like to invite each witness, if you can make a really brief opening statement, would be fantastic before we go to questions. Who wants to start?
I'm happy to kick off.
Thank you very much, Ms Joyce.
Okey-dokey. As outlined in our submission, recurring payments, whether card, direct debit or pay to, make a significant and growing portion of Australia's payment landscape. Yet, as an industry, we've not yet designed the frameworks needed to manage the specific risks and costs associated with recurring payments. The result is operational burden, financial loss and stress for both consumers and businesses. Disputes and chargebacks, whether genuine, mistaken or increasingly fraudulent, are a systemic and growing cost centre, and recurring payments drive a significant share of them. Unlike point of sale or e-commerce transactions, these type of payments rely on assumptions. Assumptions that consent was provided to payment at some time in the past, that it's still valid today, and that the payment being processed is within that consent. And this introduces risk. Today, we rely heavily on post-transaction safety nets. Disputes and chargebacks are important mechanisms, but they're increasingly expensive and insufficient on their own. And as we move towards agentic commerce, the ability to establish who agreed to what and when will only become more complex and expensive. Some submissions have highlighted Pay2 as the next generation alternative to direct debit. Pay2 is an important improvement and it plays a critical role, but it is just one rail. It does not address these issues across all payment rails, nor prepare us for a future of agent-driven transactions. Australia now has the opportunity to take a broader, future-focused and ecosystem-wide approach. Our submission proposes national, rail-agnostic payment agreement infrastructure, a shared domestically governed layer that defines how recurring payment agreements are created, captured and managed, regardless of the underlying rail. Now, this has benefits for all stakeholders. For businesses, especially small businesses, it introduces reduced uncertainty risk and cost of disputes. For consumers, it introduces transparency, strong consent controls, and consistent financial wellbeing mechanisms. Regulators gain visibility and proportionate future-ready oversight, while Australia gains a modern foundation that supports true cross-rail interoperability and competition. There are parallels to be drawn here with the current debate about digital wallets. Without the right frameworks in place, we are at risk of agentic commerce AI companies creating new forms of asymmetric economics and value leakage in the payment ecosystem. Our submission does not call for heavy-handed regulation or intervention. It proposes a modern shared infrastructure, building on the foundations of the PSRA, all payment rails, bank and PSP capabilities, and AusPayNet's self-regulatory role. Again, not a call for regulation, I'm asking the committee to encourage and support industry to prioritise building a future-fit payment agreement infrastructure, one that addresses the urgent problems of today and prepares us for a rapidly arriving tomorrow. Thank you, Chair.
Thank you. Who wants to go next?
Go next. So, Chair and members of the committee, thanks for inviting me to talk today. I represent AsYouPay, an Australian payments technology company focused on real-time account-to-account payments using the new payments platform. To set some context, we process millions of payments every month for large Australian enterprises across travel, telecommunications, property and digital platforms. Our perspective is grounded in what is working in reality today. I want to make 3 simple points. First, Australia already has a real-time payments network that has been proven to be effective in payment experiences that are typically card-based today. Using PayID and Pay2, these payment rails are live, they're regulated, they operate nationally, and they are available to anyone with an Australian bank account. Second, inequity in payment costs for smaller businesses is real. The solution has to be structural, not cosmetic. I've already heard just the previous panel, and I'm sure there's been others, that many of the costs involved in payment processing includes fixed components. And in fact, even with large businesses, having high velocity of data sets and having public information can make some of those processes more efficient. So unless we actually do things structurally to reduce the overall costs involved in processing payments, then we can't reduce the fees sustainably for smaller businesses. Third, competition across payment rails does need support. Entrenched behaviours, entrenched incentives, they are hard to dislodge with payments. Even where better alternatives exist, it can be hard for an executive in a non-payments professional role in one of our clients to champion that change. When the payoff for them, they can see it, but it's probably going to be long-term. So I certainly want that considered in policy settings around how do you enable the infrastructure that has been invested in by Australian banks and has been developed and is now world-leading class to be able to compete effectively. So, in summary, our view, as you consider policy settings, do realise that there are proven benefits of account-to-account payments. Ensure that the original objectives of the new payments platform, which includes promoting competition so that innovation can drive productivity gains, continues to be supported. Support programs that enable service providers, responsible service providers, to access the best fraud tools and ideally the best data sets. And then ensure that there is transparency and neutrality at the point of payment on the cost. If we do that, we can materially reduce payment costs in Australia. Thank you and look forward to your questions.
Chair and members of the committee, thank you for the opportunity to speak today regarding digital payment schemes and emerging technologies. My name is Dipra Ray, and I'm the CEO and co-founder of Ping. We're an Australian fintech focused on modernising the way money moves. We believe that transaction fees should be history, and we offer a hyper-low-cost way for merchants to receive payments from consumers, utilising the new payments platform. And we cut out middlemen like Visa and MasterCard. We use account-to-account payments to achieve this. Today, I want to speak specifically about costs and inequity in the payment space, specifically for small businesses. I've had the privilege, as the co-founder of Ping, to work with hundreds of small businesses, and we've had thousands of people in Australia use us. With respect, we submit to the committee that the 2 key factors affecting payments for small businesses today aren't just related to cost. They are related to incentive and access. For too long, small businesses in Australia have relied on a surcharge crutch. Currently, when a small business is hit with high transaction fees from legacy payment providers, they simply pass that cost on to the consumer. This creates a market failure. Because the business can pass that cost along, they have absolutely no incentive to shop around. I have personally spoken to businesses that want to onboard with Ping, but do not see the reason to, because it is not their problem, in their words. And for us, that creates a real problem. By banning surcharges, the committee is doing more than just lowering prices at the register. You're actually incentivizing business efficiency. When a merchant can no longer just pass on a cost, they will have a powerful bottom line incentive to seek out low-cost alternatives. Banning surcharges will restore competition and introduce vibrancy to the payment ecosystem. But incentive is only half the battle. The second barrier to a productive economy is access, specifically access to the thing that's in the pockets of 60% of Australians. and that is Apple. Apple, unlike Google, have a monopoly on giving access to their secure chip, and we believe that this stifles innovation significantly. We believe that Australia must follow the footsteps of the EU and open up the NFC chip access for competition. Lastly, we believe that the access to the NPP itself must be modernized. The ban on surcharging is a big bang moment. It will shift the conversation from how much can I charge the customer to how can I find a more efficient way to pay. Ping is ready to provide those efficient pathways. We believe that a transparent, no surcharge economy forces technology to compete on value and cost, which is a win for the merchant, a win for the consumer, and a win for national productivity.
Terrific. Mr. Thomas, if you want to try and beat them all in brevity. No pressure.
It's okay. So as I mentioned, SmartPay recently acquired by Shift4, hence the name. Our business predominantly focuses on in-store payments for small to medium-sized businesses across Australia and New Zealand, and we would be what you would call a payment service provider, or PSP. Every acquirer and payment service provider in the Australian market has a different model, different relationships with the schemes, pricing structures, cost bases, and value propositions. Some focus on specific verticals, others on particular merchant sizes, from enterprise to small business. Our approach centres on providing a comprehensive in-store payment solution for these merchants with the option to pass on the fees via a surcharge or pay them direct at the end of the month. As you would have heard over the last 2 days, the card schemes are an essential infrastructure that connects merchants to customers' banks. Every merchant must use them for card acceptance, regardless of which acquirer or PSP or payment service provider you choose. When that infrastructure increases its fees, these costs flow through to everyone, merchants, acquirers, and ultimately consumers. The evidence presented in our submission suggests that new entrants to this payments market have created competition that has delivered real results for and benefits of merchants. Lower fees, improved service, and greater choice. Fintech entry has challenged incumbent dominance and driven innovation, raising standards across the sector. And thank you for allowing me to participate.
Well done. Ms. Jarrett, just a shade under 10 minutes.
Hi there, can you hear me?
Perfect.
Lovely. Hi, thank you all. You know, it's good to see our digital wallets and digital payment companies bringing innovation into our payment system, that's for sure. And we've heard how, you know, various approaches and products have helped make the payment system more streamlined. But I think it was Ping who said in your submission, and correct me if I'm wrong if it's somebody else, that one of the big barriers to innovation and innovative approaches has been access to core infrastructure, including AP+, and you're proposing a tiered access model for AP+. Can you help me understand what that means?
Yeah, that was in our submission.
Was Ping?
Yes, it was us. Sorry. So right now, to access the NPP through AP Plus is incredibly difficult, right? Now, it took me 6 months.
In what way? How is it difficult?
So specifically, it's very hard to find the right person to talk to at AP Plus, number one.
Okay.
And I'm not, just finding the right person was a marathon. The second thing right now is that if you want to be what's called a connected institution, and there's only one in Australia, you need to have a physical server, physical access gateway that you've got to host. And the cost of that for any small business or even large business is just prohibitive, right? So the obligations that are being put on a software company like us that we want to access the NPP is just out of reach, right? And so our view is that that entire process should be modernized. Now, to AP Plus's credit, and now that I was able to get hold of the right person, they are working on that, so we will give them some credit on that. And they are actually engaging with businesses. So I will give credit to that, but the way that you get access to it is simply too complicated at the moment and too expensive.
Have they been specific on what they're looking at in terms of making it easier?
Yes.
Is there a technological platform?
Yes. So right now, again, you need to have a physical access gateway, which is think of it as an actual computer that you've got to physically manage, right? Which if you think about most entities today, they use cloud-based services, right? So my understanding, and don't quote me on this, is that the AP Plus have indicated to us through our advisors that they are modernizing that so that a business like us can actually just connect into the cloud, right? Which makes it much cheaper, right? Versus us having to physically have a gateway that is stored in a server farm that we have to pay for, right? So these things are being worked on. We have been given a timeline. Whether that timeline is correct or not, time will tell. But it is something that they've indicated they're working on.
Okay, thank you for that. I just want to also jump to AzuPay because you talked about raising recurring payments and they should be considered distinct subclass within the payment system. And I believe that you might be the first one to raise this, at least in the submissions I've seen to date. How does the system need to change? Like, at what points in our payment system would be affected if we looked at recurring payments differently to other payments?
So, I'm from AzuPay. We do offer recurring payments. They certainly are different from one-off payments. It was Simone from Paper Plane that's very focused on that whole area, so I'll hand over to Simone.
Thank you, Ms Jarrett. Yes, recurring payments are fundamentally different from the way that a regular payment works. So if you think about when you process a payment at POS and you tap and go, or you swipe your card, or you hand over cash, you're present and you're authorising that payment to happen. You know how much it's for and you're consenting. Recurring payment happens after you've done that. So think about last time, maybe in January, you signed up for a gym, or you've given your bank details to a mower man, or your childcare. You're not there when the payment actually happens. So that means that you've placed your trust in the business and their payment provider and whatever acquirer or bank service they use behind there to process your payment correctly within your consent. Now, there's been a lot of media reports over the years of people who thought they cancelled their gym payments and a year later they've still been paying. This is all because there's a lot of assumptions and subjectivity in the ecosystem. This committee over the last 2 days have really been seeking ways to reduce costs and take costs out of the payment system without reducing security, accessibility or resilience. The reason we have brought recurring payments before the committee is we feel it is one cost centre that is very easy to reduce cost for small businesses and consumers by reducing the risk that is introduced into the ecosystem through the way that recurring payments are processed. Now, that's a rail agnostic approach. So we're thinking inclusively of all of the card schemes, all of our A2A payment rails, and how we transition safely from an environment where we're signing our name on a direct debit form to having those details become digital real-time payments in Pay2 as well. So that's why we've brought recurring payments before the committee today.
And so there would have to be changes across the board in terms of the underlying infrastructure for this to change, correct?
Not necessarily. The existing rails as they are today and the investment that industry has made in them should actually be enhanced by overlaying a payment agreement infrastructure over the top. It actually allows each rail to function as it is intended today, but allows them to function alongside each other. Another theme that I've heard this committee seeking to find a pathway forward on interoperability. Mr Connolly from the Reserve Bank yesterday morning suggested that interoperability was very expensive in a cross-border payment scenario. It's actually achievable domestically though, and it's very achievable in recurring payments alongside reducing that risk.
So it's not a fundamental system change, it's more a tweak within the existing system.
Yes, and I actually think it's a mindset change, Ms Jarrett. I believe that we need to think more holistically about our payment ecosystem and think about what could have been done if we had a different framework through which to view things like digital wallets or international schemes or digital asset-based currencies. What could have been done differently if we had a different framework through which to assess and manage the impact on our Australian payment ecosystem? That's what we're asking the committee to consider with payment agreement infrastructure.
Okay, thank you. One last question. We've heard on and off over the course of the last day and a half the use of agentic AI in the payment system going forward. This is just a general question to anyone and everyone. What do you see as the fastest emerging use of this, A, and B, is it being proposed in areas that will help reduce costs across the payment system?
And can I just add to that as well? I seem to
The way I listen to you, Ms. Joyce, when you're talking about this is that there would be a degree of autonomy with agentic AI where permissions, if I understand this correctly, would be given to it to make purchases. So what's the difference between that and the example we just used?
Not a lot. So if you think about, let's go from our paper form, we've just signed up for the gym. If we replace that paper form with an agentic agent that potentially has been created out of a company overseas or in Australia, you've assigned that agent permission to make a payment on your behalf at a future time when you're not necessarily there. Now that introduces great convenience for consumers. I mean, who wouldn't want that? But it also introduces risk for merchants to be left behind if they don't have the right infrastructure to help them with their responses to the bot. But it also means that we might introduce another layer of complexity. Ringing up your bank today to say, I have a payment on my card I don't recognise, I'd like the money back, that's very different for the bank to assess in an objective way to say, oh, I asked my agent to do this instead of this, now I want my money back. I think everybody needs protection as we move forward, and the current way of understanding chargebacks, disputes, what constitutes payment agreement, we need to rethink that so we're ready to take advantage of agentic commerce as a country.
Sorry, I jumped in at the tail end of
Yes,
Ms.
go
Jarrett's
ahead.
question. She asked some other, they probably haven't been covered off, so if we can cover those off as well would be good. Or are you happy with that answer, Ms. Jarrett?
I'm happy. I can put it on notice in the essence of time, Chair.
You are so good. I can't issue medals, but I'd like to. Mr. Laxal?
Thank you. Mr. Ray, you said only one entity has access to the NPP. Who?
Connected institutions.
Yeah, who's that?
So there's different ways of accessing
Sure.
the NPPs.
So the banks obviously have access.
The banks have access, and most of the access is through the banks. But obviously, if you look at, like, from our perspective, we don't want to have any middlemen, right? We want to have direct access.
And so
there's
who's
only
that
one
entity?
provider that has that at the moment.
Who's that?
That's Zepto.
Zepto. And so you pay Zepto to access the NPP, is that right?
We pay someone. That's commercial, but yeah. But obviously, our view is that at some point we'd want to have direct access because that's when we can bring the lowest cost to all of our merchants and to all of our consumers.
Okay.
Right. And so the fee you pay the third party would be more than what they're paying to access the NPP, is that right? So there's a margin in there for the third party.
Correct.
Another tech company clipping.
Yeah, exactly. And so we want to reduce that and eliminate that, right? So we want to have direct access. We're happy to pay a small, and it's a fixed fee. So this is the key on account to account. It is a fixed fee, which is how we believe it should be, right? It should be.
Okay, because that was my next question. So you pay the third party a fixed fee.
Yep.
Okay, and they pay AP Plus a fixed fee.
Correct.
Right. So that kills the ad valorem charges that seems like the bank, that the merchants, Visa, MasterCard issuers, all that stuff, they charge the percentage. So this is always a fixed fee.
For account to account, the current structure, the way the AP Plus charges, it is a fixed fee.
And are you aware if that is regulated?
It is regulated.
Okay.
Yeah.
All right. Great. How you mentioned access to NFC chips. How would your business benefit from access to Apple Wallet, like the EU?
So right now we're fighting two battles, right? The first battle is trying to get a merchant to accept us. The biggest barrier to that is they don't want to have a QR code like this because it's not user behavior. We're all used to tapping. Right now I cannot, as Ping, offer you the ability to tap your Ping app on a terminal because Apple does not give us access to the NFC chip.
Okay.
Right? And so that prohibits us from being able to emulate the common behavior that every consumer is used to in Australia.
So if there was the EU model here or access to the NFC, I mean, I learned yesterday that there are two different products, but just say you get access to the NFC chip, someone would open the Ping app, you would tap on a terminal.
Yeah, a terminal or someone else's phone, it doesn't really matter, yes. A receiver, something with an NFC receiver, yes.
Yeah, okay. So it would also require a special receiver, or would it use the existing? No.
Any smartphone or any smart device that has an NFC chip, which most terminals have right now, or most phones have, pretty much every phone in this room, for example, has an NFC receiver, could be used as a receiver. You wouldn't need a specific terminal necessarily.
Okay. And Europeans have a zero fee access to Apple's version of the NFC over there.
Correct.
That's something you'd encourage to happen here as well, to provide that competition to Visa and MasterCard.
Absolutely. And to Apple itself, right? So Apple takes a clip of the ticket of every transaction.
Yeah.
We don't believe that is required.
Yeah.
Again, we're trying to bring the absolute lowest value to both merchants and consumers. We want to make sure that everyone gets the best deal. And we can't do that when we have middlemen involved in the transactions. And that's what we're focused on removing.
Mr. Rundle, you provide sort of at-scale access services to the MPP, and I looked on your website, you've got a bit of retail offering as well. Have you, is that sort of in competition to Wave and Pay by Bank and stuff? Is that sort of what you do? Yeah.
Yes, well, Wave, yes.
Yeah. And maybe for all of you, have you found, I think, as you said, Mr. Ray, trying to get access to the behavioural ways that consumers purchase, either tapping or at point of sale for a small business, have you found it difficult to integrate your products with point of sale software providers, or like any barriers there?
So I'll say, yes, we're in retail. Most of our progress in the retail space has been more on the e-commerce side of things, so it's integrating into e-commerce platforms.
Okay, and that's pretty easy because it's just the design of the website, APIs, stuff like that.
Technically, it is easy. We are selling to large enterprises. Our bigger challenge can be going through the sort of contract and procurement processes with large enterprises and then getting into their technology integration roadmaps.
Okay.
Now, in terms of connecting into point of sale, we've actually only recently gone into our first large-scale point of sale implementation. I think technically they are quite easy to get into and work with. The challenge is getting into the agreements with those networks. They can be a bit of a gateholder themselves.
What network, sorry?
Into the point of sale systems.
Right, okay, yeah.
So, again,
we had Square before. I was going to ask them, but Mr. Husick had the clock watch on me. Have you tried to integrate into Square, for example, Mr. Ray?
So I can answer. Point of sales are very conflicted at the moment, right? Because most of them have moved from becoming a software as a service business where you pay a $1,000 a year fee to becoming payment processors themselves. So I noted the questions last time where it's not just covering the cost of payments, but it's covering the cost of the hardware. I do know that Square actually charges for their hardware separately, but it's a separate point. But at the end of the day, the point of sale providers are conflicted because they want people to pay 1.6%, right, or 1.8%. So I have a small business in our electorate where right now they use CBA. Maybe we shouldn't have named them, but that's all right. And they pay a 1% surcharge, right? 1.1% surcharge.
Yep.
They are about to shift to a point of sale provider who I will not name. And I literally asked him, why are you doing that? He said, and I said, how much is it going to cost you? He said, I don't care because I'm just going to charge 1.8% to the consumer. And that, I can tell you for that particular merchant, is a significant amount of impost for consumers there. But because point of sale companies now are monetizing payments, not just their software and hardware, that is a problem.
So there's no incentive for someone like Square to, find a cheaper, or to integrate a cheaper payment method like yours.
Correct.
And pass on that saving?
Zero. Because right now they surcharge whatever that they can. And it's too late for us as a consumer, right? It is just too late. By the time I get to the till, I get something that says surcharge may apply.
Yeah.
Right? I have zero control. There's no friction. It's not like I have to physically agree to paying that extra $1 or $2. And so that is unfortunately has led to behaviours where you're bundling in other services apart from just payments.
Last question. Have you applied to Access Square? Like, is that on your radar, or would you like to apply to Access Square?
I would love to access every POS because we bring the same value proposition to everyone. Most of them are conflicted.
Could I add a comment to the access question, Mr. Laxal? I think there's another element to this which I have heard starting to bubble up in the proceedings. I think that when you think about providers such as Square, and there are others in the Australian market, they actually provide an important point of access for new, small and micro businesses that aren't being met today by the banks. Now, what that means, though, is that for those companies, there is a bigger risk element in allowing small businesses to transact through their payment engines. Being an payment aggregator directly puts you in line of risk of loss. So I do think that there is an element there of providing a service and following the risk again as a point to reduce cost in the payment ecosystem, I think that maybe is being overlooked in just focusing on the ability to surcharge. How do we ensure that risk is managed in a different way that doesn't incur cost?
But we've got to, I think our policy conundrum here is how do we stop costs going up to consumers and small businesses? And if companies like Square are conflicted to bring in new entrants like Ping that operate on a flat fee structure with lower costs, then that's a big problem. It's a huge problem.
Yeah.
I agree, and I think that by reducing the systemic costs, we should hopefully see some alleviation in how we're seeing prices float through to consumers and merchants. And we heard MasterCard say yesterday that POS is one of the least risk-prone areas of the payment ecosystem because you're there with your card authenticating on your phone.
You're finishing early now.
Thanks.
Okay. Yes. No. By all means, Ms. Campbell. And also, can we just make sure Thomas is doing some work because he's getting away scot-free?
Sorry, Thomas.
I just referred to him by his surname. First name Peter.
I was going to just follow on from Mr. Laxal's comments around PayID. I should say account to account. You know, when we go to a fete or a festival, often the bake sale will just say, "Oh, hey, put in my PayID." So if there's no actual technological barrier to linking NFC to PayID or to account, what is, and that effectively ends up being a free transfer if it's not borrowed money. What's your commercial model?
So we charge a flat monthly fee. $30.
A recurring fee.
A flat monthly $30 per fee. There is a tier, so we have a free access, so you can actually access Ping right now for free at zero cost as well. But then we have a $30 per month fee. That covers, it does cost us money to initiate a transaction, so that is, but it's not ad valorem, right? So again, we've tried to keep our profit margins as low as possible so that we can deliver a public good, because we believe that is what is required in this country, right? I'm sick of paying a surcharge, right? So, but we do have other features that we've built in. So loyalty, for example, you can actually build in your own loyalty program as a merchant. So we have other value-added services that we offer to the merchant as part of our $30 per month fee.
So at the point where you're charging a subscription model on top, as well as, effectively starting a loyalty program, how does that make it fundamentally different down the road to the kind of fees that are being charged now?
So right now, a small business, let's take a small business that's making $1 million, right? Just for ease of calculations, right? Right now, they'll be paying $15,000, let's say 1.5% a blended rate, right? Which is most common in market, right? They'll be paying $15,000 a year in fees, either the consumer or them, assuming the surcharge ban goes ahead. Under our model, now obviously we're not going to get 100% of all transactions, but let's say 70% of transactions now start going through Ping, right? They would normally pay 70% of $15,000, right? Which is a significant amount. For us, they would pay $360 a year. So the cost saving is incredible, right?
Yeah.
The only problem today is that the merchant just doesn't care.
Yeah.
Because it's not their problem.
Yeah. I wanted to go to recurring payments. How much do you think consumers are losing to subscriptions that they're either not using or have forgotten about?
It's a good question, and it very much depends on the household. I can tell you that the RBA's latest consumer payment survey found that at least 85% of individuals, not households, individuals, have at least one recurring payment arrangement. That's up 20% from the previous consumer payment survey. So a lot of people, when they hear the term recurring, they think about, I've done it myself, the gym, then they go to Netflix, two very different sized companies. But then if you think about it more deeply and you think about your loans, your mortgage repayments, your car leasing, maybe you've got your card on file for charges at daycare. It's a significant volume of payments. The RBA, with their statistic that with the one person, 85% of people having a recurring payment, that equals a third of all of our spending. It happens when we're not there.
I assume that point of sale payments are to small business as recurring payments are to consumers in terms of the need for simplicity, them all being in one place?
Yes, you could say that. And I actually think that this came up yesterday, and I'm sorry, I can't remember which hearing it was. They mentioned that when you're standing at POS, you want to be in and out as quickly as possible.
Mm-hmm.
When you are agreeing to let someone take money from you when you're not there, you maybe take a little bit more time to consider how you're paying. I actually think it's a space where we can expect competition to happen more rapidly, to see a more blended and interoperable payment environment.
So can you take us through how this works? Like, is it the case that, AI works out that I haven't gone to the gym at all and therefore asks, well, should I keep paying, or that I haven't watched Netflix in 6 months? How does it actually? What does this actually look like for real people?
Quite possibly.
Sorry, can I just add to that? That Agentic AI isn't just about making a purchase, but that actually delivers other consumer value like that.
Correct.
Like to be able to review what subscriptions you have, note frequency, make recommendation about what you might want to get rid of to make a saving.
Yes, that's correct, Chair. These are all benefits that agentic commerce should offer. However, in those scenarios, we only thought about the consumer. And what I really like about this parliamentary inquiry is that you're also considering the business. So if you think about doing something as a consumer, I'm going to get my agent to switch off my payment. The business has no concept of that until they try to do a payment, and that causes cost and loss for them. What we are proposing is that actually, what if you had an ongoing digital connection between both parties that would let you as a consumer go, oh, you know what, the childcare fees are coming out on Monday, I'm going to switch that to Tuesday this week because our insurance is coming out as well. Oh, actually, I'd like to delay the payment, pause. If a payment fails, the reason I started Paper Plane is I had a payment fail for one of my children in daycare. The payment company charged me $25 for that failed payment. Now, I assumed that went to the daycare centre. It did not. The payment company kept it. And that made me pull at a thread. I think that surcharging is causing the same issues in Australia today. It feels unfair and it feels arbitrary. And in many cases, it may be. But recurring payments we can change if we think about it more holistically.
Is there any jurisdiction that's best practice on this?
There are some countries around the world that have come close to this. India has asked the card schemes to use data fields available in their network messaging to indicate a mandate code. So, sorry, I got very nerdy there for a minute.
No, that's all right.
Mandate code about,
I know that hasn't happened over the last 2 years.
Okay, I'll pull back. Pay 2 is really interesting as a mandate-led payment system. We're advanced in that sense, but there isn't a country that's gone, okay, let's come up, let's think about all the elements. We've got CDR, we've got digital ID, we've got beautiful domestic payment rails, and we've got these amazing schemes that are providing value. Why can't we build a framework that allows us to use them all together to create a better value?
It probably segues well into my last question, which is that the argument that we heard a lot yesterday was about the payment rails that we have in this country and the investment that bigger bodies like banks have put into them over many, many years. What contribution, firstly, is there a willingness to do this, I guess, at a values-based level? And what contribution should and could tech companies like yourselves put into the infrastructure to maintain our payment rails and improve them over time?
I'll happily answer that. So, as I mentioned in the opening statement, part of the objectives of the MPP was to enable innovation. So that will enable competition, enable innovation, increase productivity. That's exactly what we're doing here. So that argument, the services we are using, we're purchasing them from banks. And we're purchasing them in an open, competitive market. The banks themselves could be trying to do what we are doing successfully. It's just a really good mechanism. It's starting to be surfaced here where new entrants can drive innovation, which is the intent of having NPP. And through that, as you're hearing, we're setting around our missions around reducing the costs of payments. So we're actually doing a good thing, the whole thing. We are none of us arguing that banks should somehow subsidise our ongoing business. So we've had a lot of digging into what fees do we pay. We pay a fee that the bank is setting to us for the services they provide us to access the MPP, to do the settlement rails.
Well, my question is more the opposite, like ask not what, you can do for the banks, but what can you do for the domestic system more broadly?
Ms Campbell, if I can answer that in a different way, there's a model that is emerging in the UK funding their next generation of open banking. And they've asked companies who are participating in that sector to self-fund along with the banks to design the next framework. I think that's interesting. The other way to answer your question is to contribute thought leadership and innovation. It's really difficult sometimes to be working in a large entity like a bank or a scheme and be able to really do a breakout deal. I think if we can achieve this, we should be creating a framework where we can work alongside each other. Competition's so incredibly important, but sometimes the tide rises all boats and we need a space that we can actually innovate together safely.
Thank you, everyone.
Mr Gregg, over to you.
Yeah, you were raising before that I guess companies aren't looking for subsidies, but to take on the role of devil's advocate, and I'm close to meaning that literally, why should companies like Apple have to pay the cost of the infrastructure that other businesses would be exploiting for a profit?
Apple's not providing infrastructure.
Well, if they were to, so it's proposed that they get unlimited access to NFC technology on their device.
Yes.
You're not proposing to pay for that access?
No, because that's paid for when you buy the device, right? So if you look at Google and Android, when I buy my phone, right, I've paid that device is there. They're not adding like any ongoing monitoring or anything of that sort from a NFC perspective, right? We'll take on those responsibilities. The reality is, Apple has sold you a device, right? And they've charged you a premium for that, right? They've charged you a huge amount of money for your Apple phone. And then for the purpose of using it, they've restricted access to that. It's literally, I think the chair pointed out, like the Vanderbilts, right? They've just built it and they just want to keep taking money on an ongoing basis for adding relatively low value.
But flipping it another way, it's a piece of infrastructure that your business isn't paid for but seeks to utilise.
Well, we would argue that the NFC chip has been paid for by the consumer, right? So when you've gone and bought your phone, right, the iPhone, you've paid for that piece of hardware, right? That's what's happening, right? And we're not asking to get access to Apple Wallet for free, right? Just to be very clear. I don't expect Apple Wallet to open up the Apple Pay wallet to us for free. That would be being unfair on our side. We're just saying that someone has paid for a piece of hardware in their phone, right? It is absolutely unfair that they can just restrict access to that when a consumer has paid for that device, right? Arbitrarily, with no, and when that becomes 60% of an Australian market where they have dominance, that becomes effectively a monopoly. So our view is that device has been paid for, and that chip.
Sorry to interrupt you. I think you make that argument well from a consumer perspective, but I absolutely get where Mr. Gregg's coming from, which is, and I think you've acknowledged it, which is you're going to effectively profit off that. So the issue then becomes what you're prepared to pay for access to that chip, right?
Yeah, so that leads me, I guess, to my second question. They claim, and you can contest this if you want, that it creates additional security concerns and risks that would impose a cost upon them. Or they just think it's unacceptable and want to just tell you guys to bugger off. But if you were to accept the premise that there might be some additional security layers or some other work to be done in order to enable that in a lower risk way, would that be something you'd be willing to contribute to the cost of?
So again, in Europe, you can't, I can't just rock up in Europe and just get access to the NFC chip. There is a program, right? But it's set out to be fair and equitable, right? So you still have to show that you can meet certain standards, right? John can't just walk up and start accessing the chip, the HC emulator, right? So our view is that something like that is reasonable, right? Again, we're not saying that there should be no hoops, right? We agree that there should be some hoops around security. We take security very, very seriously. We've done tens of thousands of transactions. We've had zero fraud and zero chargebacks so far. So we absolutely believe that, and we would support that, yeah. So there should be some, metrics to hit, but that cannot be what it is today, which is very, very hard for anyone to get access to.
So when you say there's no fraud, is that because of something you've done?
We use again, for you to approve a payment at a point of sale, you have to do Face ID, or you have to do your fingerprint or PIN, right? So again, we have put in protection that is universal to prevent that, right? So it's actually much harder to hack into your bank account than it is to take someone's credit card, right? Credit card's much easier to actually skim. So we've put into place by design procedures to eliminate fraud, and we've also focused on physical point of sale transactions, which are much harder to take advantage of.
Very great. I guess to go to the other extreme, and that is kind of recurring payment authorisations. That can be something out of an inkjet printer on a non-standard form with less security on it than an old cheque, which at least had a watermark. Do you think there should be standardisation of an authorisation and then kind of live viewing, whether through your bank app or elsewhere, as to what ongoing authorisations exist in a standard way of ending it or engaging in dispute resolution?
Absolutely. That's what we do today from a company level. I actually think it's important infrastructure for the country. And it's not just capturing authorisation, it's capturing what you've authorised, how many payments, how much, over what time, what can you do, what can the business do. That is really important context to each payment.
Because normally it would be kind of specific, time-bound, knowing consent, and it's not always clear from some of these opaque direct debit forms.
That's right.
Thank you very much for raising that, because it's a bit of a blind spot, but it's an obvious vulnerability.
Can I add one more little fun fact on that? When you sign a direct debit form, the small business, or large, is supposed to keep a copy of that for 7 years post the date of the last transaction processed under that agreement. Can you imagine trying to audit that as a bank and find out whether authorisation was actually successfully captured?
And the fraud risk, I'd imagine, would be quite high with these things as well.
Yes.
Thank you very much for raising that opportunity. So do we, in terms of, I guess, costs, have we modelled what kind of savings that might be seen to small businesses from adopting kind of these new technologies and opening the whole thing up, like you're suggesting, Mr. Ray?
Yeah, we have. I mean, so we would save, assuming the cost. So right now, as I keep saying, there is no incentive for the small business to encourage consumers to use an alternative, right? If you look at other comparable jurisdictions like Norway, Denmark, Sweden, they've actually had, I think now about 70% of transactions in retail happen through the use of QR and account to account, right? So this is not something that is phenomenally new, right? If you look at Japan, Singapore, again, similar. So for us, the cost savings are quite large, and they flow directly down to the consumer and to the merchant themselves. But the merchant needs to have a reason to actually do it. But we're looking at, for a small business, a cost for a saving of around about anywhere between $6,000 to sort of $8,000 a year, which we think is material.
That's interesting. So with, obviously, the habits of payment vary between countries. You go to the United States or go somewhere like Japan, and here we all kind of pay a bit differently. Do you think fintech, by kind of demanding to go into the Apple wallets, or at least having access to NFC in wallets and things like that, rather than finding a new way that we all want to pay, whether it's shoving NFC stickers on our watch or something else, rather than disrupting, are they just trying to be a different layer in an existing framework?
No. So we've got, if you're in Burwood, for example, in Mr. Sito's electorate, you'll see a lot of these QR codes around there. People are happy to innovate, happy to adopt new technologies. We're not sitting here saying we won't be in business if Apple doesn't open it up. So our view is that it's all incentive driven, right? So again, if you look at Singapore, if you look at Japan, you look at even Norway and Sweden, the reason they've innovated is because for the small guy, right? The small Woolies may not care about saving $100 million because they're making $1 billion of profit. But for a small guy saving $5,000 a year, that's the difference of going on a family holiday, right? And so that behavior shift has been driven by small businesses who stand to benefit the most. And so from our side, we're not sitting here saying that we can't push different behaviors. We absolutely are. But our view is that, when Google, for example, we can access the Google chip. There's no extra work required. It's easy. It seems like a slight, unfair inequity that Apple has the ability to just monopolize that when Google doesn't.
Can I see the tile? Are we able to? Right, okay. So you can just, right, I'll come and ask some questions about that.
So just my final question, that would obviously be a little bit easier for businesses that don't have kind of quick flow of transactions. So a supermarket where you've got a big queue of people sitting there very impatiently, a QR code might be a bit of a pain. But if you're a restaurant or a dry cleaner or something like that, then QR code is...
Yeah, absolutely. Hair salons, most transactions do not require to be in and out in 5 seconds, right? So It's not that slow, by the way. I mean, I think Mr. Laxal has actually tried it in his electorate. It's actually relatively fast, and it will get better and better, right? So it's not like you're going to hold up the entire city for a payment.
No.
And again, our view is that I took a bus to Canberra, right? Now, that was significant. I took that because it was significantly cheaper than a plane. I made that cost trade-off because that affected my bottom line, right? And so different people, we're not saying 100% of people will use QR all the time, but at least there's an incentive for people to use different things, which right now simply doesn't exist.
Mr. Gregg, may I address your previous question about international changing the narrative as a fintech? The conversation we're having here today is very similar to conversations we're having with industry and regulators in both the UK and New Zealand. So these are issues that all economies are thinking about. And we can't change the future by looking at the very foundations. We need to think above that and understand how we can change the outcome through frameworks.
Terrific, thank you.
Well, I also add a comment about why we're doing NFC. When I say we, I mean, As You Pay is doing millions of transactions a month, and we're not doing any using NFC. However, switching consumer behaviours with payments is hard. It takes a long time. There is a lot of inertia. And so it certainly makes some sense, and particularly when you start talking about getting deposits, to say, well, that's the behaviour they expect. So it is easier to get the consumers to start adopting it if you give them a familiar experience, which is where NFC comes in. That is certainly where it's really valuable. If we do agree with the argument that account-to-account payments have the ability to deliver intrinsically cheaper ways of making payments, then it's beneficial for everyone if we help consumers switch across by adopting NFC. It's not that we're being sort of lazy and saying, oh, let's just not really innovate deeply.
I guess it's whether the incentives are sufficient to convince people that, it's worth it.
Well, that's exactly right. So we're certainly live in some very large-scale use cases where absolutely the incentives are there for consumers to go through a really fundamentally quite different experience. And we do a lot of work on designing what the user experience looks like for them to guide them through making that payment. Bearing in mind, a consumer never reads any text when they're actually going through how to make a payment. And we have to guide them through a new experience. And we're finding success in that. But it is a step-by-step process as we find the use cases where there are real incentives for them to make that switch.
Oh, terrific. Thank you all.
Thank you. I was going to ask some questions, and then I think Ms Jarrett's got some follow-up. The first question I've got is, Peter Thomas, do you have anything you want to add? Is there anything that you've... Is there anything that in the... Well, if there's anything in the discussion that you wanted to reflect upon, is there...
Look, I have used ping before, just in solidarity. Again, it's probably a good example to your point around slow-moving transactions. I don't think the MPP has really been tested on high volume frequency transactions as well. But obviously, that would be something for AP Plus to share.
Sorry, can I just... Sorry, did you just say MPP hasn't been tested on high volume transactions?
In terms of in-store payments, that is.
Oh, in-store, right. Sorry.
In-store payments, yeah, that's our focus. So certainly, and they offer obviously a number of benefits and products outside of just, the account-to-account pieces. But I guess what I will agree with is that, Australia has a lot of legacy infrastructure. Merchants are slow to change. So, helping the merchant through that experience to try new things and take on new payment types and those sorts of things is certainly something that needs to be carefully managed.
How do you reckon MPP could be adjusted to be able to do what you've just indicated in terms of in-store transactions? Because people are familiar, in terms of Pay ID or OSCO or whatever, but that's quite a different nature of transaction compared to in-store.
Yeah, look, it's a good question. I'm probably not, from a technology perspective, the best person to answer that. I'm sure AP Plus would have a view. But, if it is, say, a QR code, we know that processing time takes a little bit longer, even if it's 1 or 2, 3 seconds. If you've got a big queue behind you, that adds up in time. So.
Well, I can certainly jump in here. I mean, AP Plus and NPP have rolled out Pay2. So you think of that as a replacement for digital direct debit. But it has been built as a very flexible solution, and it can be used in almost any payment use case. And that's exactly the infrastructure that Ping is running on using Pay2. Yeah. You also have to make sure you've got the right controls on it. So when you're thinking about a point-of-sale piece, you have a Pay2 mandate in place that has the flexibility to cover those transactions. It is simply then, at that point of sale, you have to have an appropriate mechanism to authenticate that the person instructing this transaction at this point in time is the person that should have the permission to transact against that mandate. And that's where using the security of an NFC chip, we've got device attributes, you've got mechanisms where you can authenticate that person.
The whole issue, because there's been reference to QR codes in different markets. Mr. Laxal and I were talking yesterday about WeChat Pay, which obviously is very restricted to that ecosystem, but the whole concept of QR codes being used for payment, particularly for micro businesses. I'm just wondering why hasn't it, I know there's been some discussion on it so far, and I get the whole, like 1 to 3 seconds sometimes introduces a degree of friction compared to the almost instant transaction that occurs using a Apple Pay type arrangement. But why haven't QR codes just not taken on as an alternative payment platform or mechanism?
I come back to two things. I mean, the main thing is incentive. I speak to small businesses every single day. I go on the street, I talk to them. They're busy, right? They've got issues with power prices. They've got issues. They just don't. And I have a lot of respect for most small businesses, and it's not something that is. It doesn't make a difference to their bottom line. And
but
unfortunately,
is it the case? Sorry to interrupt you, but is it the case that there is like software and app that would allow, like that there'd be a linkage with the camera to the app that would then allow the financial transaction to occur? I mean, isn't it instead of going through the NFC?
No. So right now we have a few hundred merchants in Sydney where they're using either a static QR code, which is a board like this, or using our API where they can generate a dynamic QR code. That works. And so far, I know there are some concerns from some people around capacity. We've never encountered an issue around capacity yet. Now, I will admit that we are much, much smaller at the moment. If 100% of Australians started to use Ping tomorrow, we probably would not cope. But as we all know, change takes time. So from our perspective, that's there. I think the question is what incentive, again, so our issue is that the merchant has no reason to change their current flow, right? They're used to taking 1.5%, 2%.
Well, can I put a scenario to you about the incentive? Like if they don't have to pay on an ongoing basis for a terminal and they can use a phone, so it's a phone-to-phone transaction.
Yes.
Isn't that the benefit? They're not paying monthly payments.
But the issue today is they're paying nothing, right? So if you think about your barber,
terminal?
On a terminal, yeah. So if you've got people like Square and others that will charge you nothing as long as you transact a certain amount per month, right?
Yeah, that might be Square, but if you're using, I mean, that handheld that you use at point of sale.
So most payment companies will waive their monthly fees right now if you transact a certain volume, but they will make it up by charging you a higher MSF, right, merchant service fee, right? So instead of paying, say, 1.1%, right, they'll charge you 1.7%, right? And so most of them, because the $50 a month or whatever that terminal rental is nothing, right? They're making tens of thousands of dollars of profit from a small business, right? So the small, that is not itself a incentive right now. So if you look at most payment providers, they will have a zero cost. They call it zero cost, where the cost is actually just being borne by you and me. But
I just think of Mark Andreessen saying software would eat the world and we're still relying on someone's hardware, terminal payment.
Yeah, so we have hairdressers in Melbourne, for example, that just use their phone to take payments through QR. Pretty much, actually, 80% of the customers use
That's literally what I'm thinking. How do you cut out the hardware and just use, because of the ubiquity of the phones,
of course,
just use them?
So there are two things that stop us from that. The first is point of sale, right? So point of sale software, right, is the one thing that, we can have our QR codes turn up in any single POS in Australia, right? And we have a few that are already working with us, and we'll have a few more announcements on the others coming up forward. But that is the one thing, right? Because if you've already got a point of sale, you do not need another terminal, right? There is absolutely no need. Or you can just get this, and we'll send one out to you for free, and there's no cost at all. And so that depends. So I think that the cost is there. There's a zero cost or very, very hyper low cost, as we call it, there already. Okay. It's just merchants need to adopt it.
I want to move the conversation on in the time that I have. So this is one of those change my mind questions. The biggest thing to come out of CDR is hype. Change my mind. Like, has CDR delivered any benefit?
Chair, I will attempt to change your mind from that
Please
very harsh
I
view.
remain open-minded.
Look, I think the biggest thing to come out of CDR is a pathway forward to getting benefit out of CDR. CDR has been developed...
You win.
Thank you. Look, I think CDR, and rightly so, was developed from a public interest, almost as a public works exercise. That means that there isn't a natural path to commercialisation of how CDR needs to operate. And I know we've heard a lot about banks funding infrastructure. It's actually true in CDR. They built and funded the whole thing, and yet they do not have an avenue to recover those costs through commercial goods and services. They're not allowed to charge for premium APIs, and it sits completely separately to the payment infrastructure where premium APIs in this space would normally sit. I don't think CDR should touch payments today. There's a lot of prioritisation issues that we're having. Pay 2 exists already. But I think that CDR can contribute to some of the ways that we're thinking about payments. It just doesn't have the meaningful...
This thing has been around since 2018.
It needs a review. It needs a red-hot review, and it needs to be rethought as an actual asset, not as a public piece of public infrastructure.
Okay.
Yeah.
Big belief. Thank you very much for that. I'll move it on. I mean, I'm not convinced, but I take on board what you're saying. Look, I think in some ways it sort of flushes out blockages and gets people to think differently about it, particularly in terms of the public service. But I still am yet to see. Like, there have been a lot of things that have been dragging on for a few years, and I just think it's time that we just bid them goodbye.
I agree, Chair.
Yeah. The other thing that we've been focused on in this space, I know there are different views and it exists amongst the members, but I do feel like more viable players in the space providing competition would be one avenue to try and drive down or drive out some of the bad behaviour. And I'm a big believer in a lot of the merging, like yourselves, coming out, like finding a problem, like what you indicated before that led to your journey. What would assist in terms of, when you look back at setting up your own individual fintech startups, what would have helped you get to your feet a lot quicker? What are some of the factors that would have aided?
I can take first crack at that. I think a clear and consistent pathway to access, not just to payment systems. I think that's actually a much more nuanced issue that can't be solved just by setting up frameworks. I think the PSRA reforms, including the payment licensing frameworks, will help incredibly with that. We hold an AFSL today, not because we should, it's just because the payment licence isn't quite right for us yet. We're holding it as a placeholder. So that will be very helpful. I think having the ability to use resources like AusPayNet as a conduit into growing will be really helpful. And I think the graduated pathway of industry, when we first started, debanking was the big hot topic that everyone was speaking about. It has alleviated somewhat, but there needs to be clearer avenues to understand why, how and when you were debanked and how to appeal that. So that's what I mean by access. It's not just to payment systems. It's all of the fundamentals that build a fintech ecosystem, and then it's the pathway to grow in a measured way.
Thank you.
Yes, I think on our journey, I mean, we've been lucky with some great success. I think certainly one of the challenges we've had is a perception that was allowed to run a long way around real-time account-to-account payments. There's almost a perception built around that it's intrinsically bad because of the fraud and scams risks. So obviously, you know, I definitely buy into it. Real-time payments does equal real-time fraud. We're very serious about the importance of taking that view. I think it's very important to have support on a couple of things to make sure that the industry overall, as I've mentioned before, just said actually there is some real benefits to this. There was an objective in setting up all this infrastructure to enable innovation, increase productivity, and let's get the whole industry behind that, and let's not allow perhaps some entrenched viewpoints and entrenched behaviours allow the risk to this discussion to unnecessarily take us away from that direction. Now, the other side of that is then, let's get really focused on that. Right? There are some really good frameworks around making sure that new entrants can be validated, can be licensed. The Treasury is doing work on revisiting the whole PSP licensing framework. We provide our services directly to some of the major banks, and as part of that, we are a supplier of a core service to the major banks. That means they're obliged under CPS 230, which is a APRA regulation, to make sure they're liable for our standards. That's really pushed the envelope on holding us to account. Totally support all those kind of views. But we mustn't allow the industry to let incumbents use this whole risk side of fraud and scams as a very serious issue to prevent competition and innovation.
Is there anything you want to...
Access. I've heard a lot of large, much bigger organizations talk about how they provide access, but the proof is in the pudding, right? We should look at how many people are actually accessing the AP Plus as a connected institution. How many people have actually built an app on Apple's NFC device in Australia, not in development, but right now?
No.
Correct. So the proof is in the pudding. As a small business myself, it is incredibly hard to find the right person in so they say they give you access, it doesn't exist.
Yep.
And Chair, if there's one thing we can do is hold big businesses to account when they say one thing, but quite clearly don't deliver.
Yeah. Yep. Thank you. Well, I mean, I very much respect the fact that what you're all doing in terms of building up your firms has not been an easy journey, but it's really important for the country that we see more competition emerge. And also because you're at the leading edge of, as early stage innovators, thinking creatively about how to solve problems that some of the bigger firms just don't dedicate necessarily the R&D to. And if they do acquire you, which is great for you, but they do it in a way that's not to acquire someone that's a potential competitor and shut down something that could be a threat to them, and it's done as a way of improving their operations, I think that's a really good thing. On agentic AI, very quickly, and then I just want to give Ms. Jarrett has a couple of quick questions, and then we'll try and shut at 4. How quickly are we going to see this occur? Is the best way to describe agentic AI as sort of like empowering ChatGPT to do your shopping for you?
And giving it your payment credential.
Fantastic.
Yeah.
What could possibly go wrong?
How quickly? It's happening now.
Yeah.
Australia, with MasterCard, who are really thought leaders in this space at the moment for executing, bringing all the parties together, they did this last month and they followed up in New Zealand. I think we're going to see adoption of this faster than we saw the rollout of Tap and Go.
Wow.
Yeah, it will come and it will come fast.
Terrific. Okay, Ms. Jarrett, I might give, if I may, I might just give Ms. Jarrett, just because she's not been able to participate in some of the hearings. Ms. Jarrett, do you want to ask a few quick questions?
I just have one really. It goes on to innovation. So we've seen, tokenisation, digital assets, stablecoin, everything starting to be integrated into the payment system. Just interested in your observations of where that's working well. And what do you see as the next big developments we need to keep our eye on in this space?
I've seen the UK doing some interesting thinking around digital tokenised deposits. So your money in your bank account tokenised to act as if it was a stablecoin. And that is that's an experiment being live conducted by the banks in the UK, along with the Bank of England. Slightly different to Project Acacia happening here, which you heard about yesterday. I think that we are a little ways away from that in Australia, given we're focusing on wholesale, not retail. I think agentic commerce is the biggest emerging threat that we need to think about today. And we are at risk of more walled gardens, like digital wallets. To your point, I think the thing that we need to do is not to think about more payment rails and more future-fit technologies. We need to think about how prepared we are as a country to both take the opportunity and manage the risks of those. And today our regulatory framework and the policy settings and the way we think about payments actually doesn't let us think about it as an ecosystem in that way. So my message to you, Mr. Out, would be less to think about the technology, more to think about our preparedness for what technologies may come.
Nadine? Ms.
That's all, Chair, for me. Unless anyone else wants to comment.
No, it's not compulsory. It's not compulsory. Okay, I'm just going to make this.
Sorry, agentic AI. Obviously, the panel in the room has a slightly different use case than us. Certainly, we're seeing some good use cases for tracking fraud with agentic AI, real-time fraud prevention, those sorts of things. Certainly, as the merchant takes the risk on those chargebacks that come through. And certainly, we're seeing a few examples of customer experience, agentic AI, sort of helping merchants through questioning to be able to work their way through to the right place to have that conversation with a live agent.
Excellent, thank you. And just before I close, I'm just going to make this point, Ms. Joyce, you're the first person to mention CDR in 2 days. That's all I'm going to say. That's all I'm going to say. But thank you very much to all of you for appearing today. The committee secretariat will contact you in relation to any matters arising out of today's hearing, because there may be some questions on notice, which would be great if you could answer them, though we appreciate that may be burdensome given that you're operating very lean enterprises. You'll be sent a copy of the transcript of your evidence, and we'll have an opportunity to request corrections to any transcription errors. And that concludes our 2 days of hearings, and I want to thank every witness and member for their time. And can I please I would like to extend that gratitude to the Secretariat as well for all their support in making this happen. And with that, I declare this public... Oh, yes, you're absolutely right. And to our good friends in Hansard and Broadcasting, well done.
It's like at a concert when they take the light.
Yes, exactly. You guys are the roadies. I declare this public hearing closed. Thanks again.
Thank you very much. Thank you.
Thank you.